market power dubbed strategic market status. Now, the watchdog seeking to assess the position the companies hold in their operating systems, app stores, and smartphone browsers. Worth also noting, though, Becky, I don't know if you saw, there was a story yesterday out of the EU suggesting that actually the EU was rethinking maybe some of how they're going to approach big tech in the United States, in part because of some of the things that Trump has been saying and his vociferous support for those companies. So I think the landscape, as we've been talking about all week here in Davos, is shifting under our feet.
Yeah, and I think we asked Jamie Dimon of that yesterday. Jamie Dimon, David Solomon, maybe both of them, just this idea that if you watch what's happening in the United States, from the deregulatory look at things, from the pro-innovation, pro-business approach, who was it? I think it was Jamie who said, yeah, the European leaders are looking at this very closely and realizing that they are going to have to adapt. Otherwise, they're going to look like a much less attractive place for CapEx and for businesses to start doing business there. So it's interesting the impact it's having already. And one of our guests earlier, I think it was Brian Moynihan on Monday or Tuesday, pointed out that the difference this time around is everybody's reacting very quickly because the Trump administration came out of the gate with so many things, so many moves that they were doing instantaneously. Andrew, back to that big tech battle that was heating up on X, the one you were alluding to just a moment ago. There was a big back and forth over Stargate funding. Elon Musk posted this tweet from Sam Altman that Altman had posted back in December of 2021. It said, "Very few people realize just how much Reid Hoffman did and spent to stop Trump from getting reelected. It seems reasonably likely to me that Trump would still be in office without his efforts. Thank you, Reid." After that, OpenAI's Sam Altman posted, "Watching POTUS more carefully recently has really changed my perspective on him. I wish I had done more of my own thinking and definitely fell into the NPC trap. I'm not going to agree with him on everything, but I think he will be incredible for the country in many ways." So this was the tit for tat, the pushing back and forth. Remember, Musk co-founded OpenAI, but he's been battling with Altman in recent years. He launched a rival, xAI, in 2023 and more recently sued OpenAI and Altman, accusing them of antitrust violations. But Andrew, then it really kicked off. You saw the tweet later from Elon Musk where he was pulling up the clip of your conversation with Satya yesterday, where Satya said, "Well, I don't know about this entire situation, but I know I'm good for my $80 billion. And Elon posted that and said,
let's walk through that because let's walk through that because I think we have it in terms of how that TIF sort of walked through, and I think we have the tweets right here to show you, because really what happened was after Elon Musk decided to effectively undercut President Trump's announcement of the Stargate project, which unto itself I think is a remarkable thing, or at least worth remarking on, that Musk, who's been so close to the president, seeing, of course, Sam Altman behind that podium, and then effectively trolling the deal that the president was putting forth, a commitment of up to $500 billion from OpenAI, Oracle, SoftBank, and others to build AI infrastructure. Then in response to a post by OpenAI announcing the deal, Musk said, quote, "They don't actually have the money." He later claimed that SoftBank has well under $10 billion secured. Then Altman took to Twitter and said, "Wrong, as you surely know. Want to come visit the first site already underway? This is great for the country." But here's where it gets, I think, very personal. He says, "This is great for the country. I realize what is great for the country isn't always what's optimal for your companies. But in your new role, I hope you'll mostly put America, with the American flag, first." But there's been sort of a lot of back and forth on this. Then earlier this morning, Musk retweeted a clip of the interview that I had done right here in Davos with Satya Nadella, and commented, "On the other hand, Satya definitely does have the money." And then, to make this whole thing crazier, Satya went and replied to him, said, "And all this money is not about hyping AI, but is about building useful things for the real world." So I hope we've caught at least most of this. I should also say there was, I don't know if you saw, the other back and forth was, at one point Sam said, "I genuinely respect," this is to Elon, "I genuinely respect your accomplishments and think you are the most inspiring entrepreneur of our time." But then the comments got personal and nasty after that. So I think that it's sort of hard to keep track of the full timeline here, but
yeah,
it is
I was watching it. in real time.
One thing that's just worth noting, Becky, talking just to so many of the financial folks, bankers, CEOs, and the like here, a lot of them, for better or worse, were actually siding with Elon Musk, saying that right this moment, it is unclear whether they fully have $100 billion. I don't know if they have $100 billion committed or not, but a number of people raising that question. I remember we had raised that question ourselves even on the broadcast many weeks ago when
we
the
being
first
you.
news emerged. You know, the royal we, because the truth is that SoftBank technically at this very moment has not raised $100 billion, and how they're going to do it, it may actually have to be a combination of equity and debt. But as one CEO said last night, you need the equity to get the debt, and we don't know how much of the equity they really have. So it depends. If they were to, they could pledge, parts of ARM, which is owned by SoftBank, or other things. So there are maybe ways to get
and what's
there.
the
I'm not saying
Oracle?
it's not going to happen.
What's the Oracle part of all this? Because they've got some money.
Oracle's got a lot of money, but it may be that they're doing in-kind contributions in terms of they may be building some of these facilities themselves. So again, I don't think we know the full extent of how this is all going to work. Having said that, as Sam Altman said, and this was the other sort of irony of this, he said, we've already started building this, because he's inviting Elon Musk to go see it. You'll recall also, interestingly, at that session or two days ago at the press conference, they say this could not have happened without President Trump as they're announcing it, and then said that they started building it already.
That was Larry Ellison who made those comments at the press conference.
It's all a little hard to.
Well, look, it's an interesting sort of dance that takes place. This had happened last go around of the administration with Tim Cook. I think it's a real feeling that people say, yes, we are more willing to commit capital, but there's also wanting to make sure that you are showing President Trump that you are doing something, and there is some pageantry that comes with that too. Any event, though, every executive I've talked to has said that they feel more confident about putting money to work.
Fascinating soap opera. It's playing out here on Squawk and online, and wow.
It's been interesting, for sure. We're going to have more of all of these conversations coming up. We'll track and keep our eye on X to see if more things are posted along the way. In the meantime, though, today's biggest pre-market movers, including a plunge for video game maker Electronic Arts. We will talk about those moves next. And later, Charles Schwab CEO Rick Wurster will join us in his first earnings interview since taking the top job earlier this month. That exclusive interview is coming up right here at 8 a.m. Eastern Time. Squawk Box will be right back.
Visit a store today.
Alaska Air reporting fourth quarter profit of 97 cents a share. That was more than double the 44 cents the street had expected. Revenue also beating estimates, and the company says that it expects a smaller loss in the current quarter than the street expected. The company said it's seeing strong revenue from sustained demand for leisure travel, as well as an increase in corporate sales too. Still, full-year profit guidance came in below expectations, but that stock is trading up by about 4.5%. Then you've got shares of Electronic Arts plunging after the video game maker slashed its full-year guidance for bookings. It's blaming underperforming games, notably its soccer franchise. That franchise was renamed EA Sports FC after the company's deal with FIFA ended in 2022. The company said that a slowdown in that franchise in the prior quarter would hurt its online sales this year, and that worrying comes ahead of EA's planned earnings report on February 4th. Again, if you take a look at that stock, it's off by more than 15% this morning, Andrew.
Thanks, Becky. When we come back right after this, a huge lineup from the World Economic Forum here in Davos. The CEOs of Honeywell is going to join us after this. And then we've got Larry Fink from BlackRock. Talk about the Davos vibes and his takeaways from President Trump's first few days in office and what he thinks is happening in the markets right now. Don't go anywhere. Squawk Box coming back right after this.
DNBC.
Welcome back to Squawk Box. We're live from Davos at the World Economic Forum. I want to bring in our next guest, Honeywell Chairman and CEO, Malcolm Kapoor. It's great to see you, sir.
Same, Andrew.
There's a lot going on.
Yeah.
I want to get the sort of vibes of Davos from you, but then I want to dig into what's going on at Honeywell because there's a couple of moving pieces.
Sure.
There's an activist in the middle.
Mm-hmm.
There's spin-offs
Mm-hmm.
happening. So you're a busy boy.
I am.
So before we even get into all of that, we're on day 3, day 4 now.
Yeah.
What's been the biggest takeaway from this whole week for you?
So second in a year in a row, I would say AI is the storyline here. But if I wear my Honeywell hat in context of AI, it's like, what do we do with it? So to me, how do we use it for our customers? Which is the industrial sector we serve.
Right.
So we've been talking a lot about that with our customer. I think part of AI is also the whole energy story, because increasingly I'm hearing from our data center customers that basically we're going to be constrained by power sooner or later. And then how does quantum fit into the AI? So I think those where the AI discussions are getting into multiple streams. How do we use it? How do we make money? Is power going to be constrained? Is quantum fits in? Which is kind of where we're headed.
What is your sense, though, just from your customers and clients
Mhm.
who have to buy from you,
Mm-hmm.
what their appetite is to buy right now?
Data center in particular, absolutely. I think the build out continues to be strong. We haven't seen any constraint capacity built out, but what we're really hearing is now the concerns around availability of power
Right.
in different places in Europe and Germany, in Asia and Singapore, US, maybe in some states. And if you have to look around for next 2-3 years, people are worried in terms of pacing up the capacity of power generation.
Explain to the audience
Mhm.
what Honeywell is today
Mhm.
and what Honeywell may be in a year from now, given there's a spin-off in the works.
Mm-hmm.
Elliott Management is now
Mm-hmm.
in there, pushing on you for another spin-off.
Mm-hmm.
When all is said, when the dust clears, what are the various sort of Honeywells?
So when I started about 18 months back, the first thing I said is I want to simplify Honeywell into 3 things: future of aviation, energy transition, and automation. And with that, then we said we have to build portfolio around that. We have to stay true to these 3 statements. So we did about 4 acquisitions last year around these 3 themes, invested almost $10 billion. We announced a spin of our chemical business
Yes.
because it doesn't fit into these 3 themes, and also announced one divestiture of a business it doesn't fit into these themes. So we've been very active portfolio manager, primarily with the premise that we want to make it highly growth oriented company, and that how do we top quartile growth as an industrial. And Elliott reached out to us in November. To me, they are another shareholder, and we're engaged with them. And their thesis is that 2 Honeywells are better than 1 Honeywell.
And you break it apart exactly how?
Those are, I would say, at this point, we are working with the board to see what's possible. And what we have said publicly is that during our Q4 earnings call, which will happen in February, we'll share more detail what's possible and what's not possible.
What kind of multiple do you think can go on the chemical?
I think there are early enterprise values which have been published here, some early readouts on that. I mean, what I can tell you is about the business, because it would be wrong on my part to speculate the value.
I know, but people, when people do spin-offs,
Yeah.
excuse me,
we did our
are
work.
looking to try to understand, are 2 things going to be
Yeah.
worth more, hopefully, than 1? There's de-synergy costs. I imagine there's some costs as you're doing this. I imagine you guys,
Yeah.
some of your executives are working overnight
Yeah.
all the time trying to figure out how this is all actually going to happen.
Yeah, what was fascinating, Andrew, was that I was not sure that a company of this size could be spun off in the chemical business. But when we did the work, we realized that this business will be one of the top 3 stocks by enterprise value because of the earnings quality it has. And the enterprise value we estimated puts us into the top league into the specialty chemical. Somewhere there were write-ups around $12 billion, couple more. But it puts us into the right league of aspirational spec chem. And the business has very well positioning into the segment it operates and some very strong growth vectors.
And when the dust settles,
Mhm.
is your foot on the pedal on the M&A front after that, you think, for the rest of the business?
No, the foot on the metal on M&A is not stopping, because key for Honeywell is to rebuild its portfolio, and it's important that momentum we have, we don't let it go, because we have built up a good momentum. We are working on several active pursuits in all the three segments, in aerospace, in automation, and in energy. Now, of course, M&As, as you know, name of the game is still pen is not put to the paper. You never know. But we are actively working while we are dealing with some of the activities.
Are there things that you think you can do today in a Trump administration that you couldn't do 2 weeks ago?
I think I'm getting excited with energy policy as it's shaping up because we have a big play in energy, both traditional energy and renewable energy. When I talk about renewable energy, think about green molecules, think about sustainable aviation fuel, hydrogen. I'll throw LNG also into that. I'm glad on the broader, more holistic view that administration is taking is that energy always goes through the trifecta of three things: cost, security, and emissions. And it's hard to meet all the three. And when you try to optimize this, you can confuse the policy. So I'm glad that LNG, for example, is being opening up. We have a big play in LNG on liquefaction of LNG. So we are happy about that. We're happy about the fact that there's a consideration on carbon capture, sequestration opportunities, which bring in US back to its oil and gas peak capacity. So I think there's a few very positive
I assume some of the clean energy efforts are going to slow down around the world.
I
Do you
don't
think
know.
the economics do the economics change at this point?
To me, it's always going to be the trifecta of the three factors, and depends on who you are. Some care about climate, so they still will continue to do it. Some care about economics, and some care about security. So to your point, if I'm a country which is importing fossil fuel, let's say I'm importing crude oil, I'm importing gas, I'm hoping to adopt new technology because I'm getting security of energy.
Right.
If I can make sustainable aviation fuel from cooking oil, I don't have to buy crude. So even if it's more expensive, it's okay for me to do it because security is checked in that case. So it's a trifecta of security, cost, and emissions. And depends on which country you are and which hat you wear, your priorities change.
It's a good lesson. Thank you.
Yeah.
For coming in this morning.
Thank you very
Good to
much.
see you.
Pleasure talking to
Hope to
you.
see you back stateside, and keep
Absolutely.
us up to date on what's going on with
Well, yeah, a lot happening. We'll be in touch.
the next piece.
Yeah, thank you.
Thank you, Amal. I'm
Yeah.
going to send it back to Becky in New York.
Andrew, thank you. GE Aerospace just reporting, and Phil LeBeau joins us right now with those numbers. Hi, Phil.
Becky, this is a beat on the top and the bottom line for GE Aerospace. That's the reason the stock is up. Take a look at the fourth quarter numbers. $1.32 versus the street at $1.04, with revenue coming in at $9.88 billion, again better than expected. Their free cash flow up 21% in the fourth quarter compared to the same quarter a year ago. Operating margin 20.1%. Company saying that it plans to increase its stock buyback up to $7 billion, and it also plans to increase its dividend by 30%. In terms of guidance for 2025, they are expecting to earn between $5.10 and $5.50 a share. Right now, the street is at $5.23. One final note, just got off the phone with Larry Culp, CEO of GE Aerospace. He is optimistic about the setup going into 25 versus 24 across the board, whether it's with orders, whether it's with the setup with suppliers, which has been challenged but is improving. He is optimistic as they head into the next year. Guys, we'll send it back to you.
Okay, Phil, thank you very much. We'll continue to keep an eye on that, see how the stock is trading as we get all of that news. When we come back, though, we've got a rundown of President Trump's executive orders so far. We'll be speaking with Axios White House reporter Mark Caputo. And later, the growing battle between Elon Musk and OpenAI's Sam Altman. We talked about it earlier this morning. Walter Isaacson literally wrote the book on Musk. He is Elon Musk's biographer. He's going to join us in the 8 o'clock hour. Squawk Box. We'll be right back.
himorhers.com.
Good morning, everybody, and welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square. The futures this morning are mixed. You've got the Dow futures up by about 20 points. The S&P, after hitting a new record yesterday, is indicated off only by about 10 points. And then the NASDAQ, which was a high flyer yesterday as well, down by just over 110 points. Roughly 31,000 people were ordered to flee an area north of Los Angeles yesterday after a fast-moving wildfire there exploded. Grew to more than 10,000 acres within hours. There were something like 15,000 square miles that have already been charred on this. The LA County Fire Chief says that the fire remains difficult to contain, but say that they are starting to get the upper hand. The last I'd heard, there was about 14% containment of that fire. Yesterday's winds were not as strong as those that fueled the Eaton and Palisades fires earlier this month. That allowed aircraft this time around to drop tens of thousands of gallons of retardant to try and help stop the spread of the fire. Andrew?
Thanks, Becky. When we come back, we're going to bring you a rundown of President Trump's executive orders so far. We'll tell you about that after this. And then a reminder, make sure to follow Squawk Pod on your favorite podcast app, because all week we're publishing special reports from our big interviews with top executives and policymakers from Davos to Washington. Don't go anywhere. Squawk Box will be right back after this.
President Trump beginning his second term with a number of executive actions, from trade and immigration to the hiring of federal workers. Joining us right now is Mark Caputo. He is Axios Trump White House reporter. And Mark, a number of items doesn't really do it. We are less than 72 hours into this president's term, and they came ready to go. There were 100 actions and orders that were issued, I think, in the first day, many more since then. This is a huge storm to cover. What's your takeaway from what you've seen so far?
Well, they promised a shock and awe campaign, and they're delivering on that. And Trump is really concerned or interested in having a promises made, promises kept initial start to his first 100 days. So most of the things that he promised to do, he's doing. He said on day one that prices would come down, inflation would come down. That didn't happen. That's impossible to kind of have by fiat. But the sheer scope of the executive orders that you just kind of briefly touched on are just pretty breathtaking. Not only is it immigration and energy, there's transgender policy, there's a so-called woke policy here, diversity, equity, inclusion. There is healthcare policy, withdrawing from the World Health Organization. It's just on and on and on. It's going to take us weeks to figure out everything that he did in just those first 2 days.
I know that executive orders have been used more and more over the last 12 years, maybe a little longer than that. Can you give us a history lesson in how this measures up to what's been done in the past, and how many of the executive orders that he issued are undoing executive orders that other administrations put in?
Okay, I think it's on order of 80 or so that he undid from Biden's. The history of executive orders really tracks the history of the re-strengthening of the executive branch. You really saw it under George Bush. It wasn't just executive orders, executive actions. You do things called signing statements, where you basically say, okay, I'm going to sign this law, but we're kind of not going to enforce it to a degree. But by and large, the executive orders are a clear sign for those who are interested in wonky history that Congress is failing at its job. The most powerful branch in the United States government is actually Congress. It's the only branch that can write laws, pass laws, kick a president out of office, reshape the Supreme Court, overturn basically everything. But it is so paralyzed by partisan politics, essentially can't do anything. That creates a vacuum, and in that vacuum, the executive branch, the president has filled, and the Supreme Court to a great degree as well.
Yeah, that's a very, very interesting thing. Congress can't even pass a budget at this point, let alone
They
do
can
any of
barely-
the other powers.
They can barely name a post office these days. So that might change a bit because this Congress is, though the margins are small, controlled by Republicans, and by and large, they view Trump, well, they even call him daddy, as the boss. So you're probably going to see Byron Donalds, for instance, so a fellow Florida man who is probably on track to being governor. He literally said, daddy is coming home. It's a riff on something that Tucker Carlson had said at the RNC, and actually something I'd written about a year ago, where people at Trump's campaign had said that after he had taken over control of the party by winning the primary, that, quote, daddy's home. So this is the general view of a lot of Republicans in Congress. So this Congress might be a little different. Nevertheless, there are going to be people who are going to resist his agenda. But Donald Trump is governing from a position of the greatest strength he's ever had, the greatest support levels he's ever had in his party and overall. And he also knows what he's doing, and he has a staff that knows what it is doing. And that's different from when he first took office.
That's right. These people are well versed. They have a mission. They know what they want to do and how to go about it. I thought what was interesting, because it's not a surprise to me to see him overturn things that the Biden administration put in. It's just the swing back and forth of executive orders. But in going back, what I had not realized he was kind of targeting was he revoked decades of executive orders, including the Equal Employment Opportunity Order of 1965 that was signed by Lyndon B. Johnson. Now, that is something that, trying to get DEI out, trying to go against all of those issues and change things. It's not just in the federal government. He also directed each agency to identify what it is, up to 9 potential civil compliance investigations of either publicly traded companies, large nonprofit corporations, associations, foundations with assets of $500 million or more, higher education institutions, on and on. So they want to make sure that this is not just the federal government, but it sets the standard for the nation.
Yeah, and in addition to that, the Office of OPB, the Office of Policy and Management, they had put out a memo that told employees and all the agencies subsequently have repeated the language that in order to get rid of DEI, they believe, the Trump White House believes, that some agencies have tried to implement these DEI programs but by another name. So they've directed all employees to find these secret DEI programs and to report them with a special email. So critics are calling this a, quote, snitch email. It's a good example of how Trump is creating this sort of total information awareness aspect of his administration to get a handle on the entire executive branch. Also, there's the Schedule F issue, which gives him more ability to hire and fire more federal employees. It goes on and on and on. It's a really broad, deep, and wide number of executive orders that touch every aspect of the government and perhaps even American life.
Mark, it sounds like you've got more digging to do. We certainly want to hear more about it, but we appreciate how thoroughly you're covering all of this, and thank you for joining us today.
Thank you.
Andrew?
Thanks, Becky. Coming up, a big lineup still to come. We're going to talk to Morgan Stanley CEO Ted Pick in the next hour. But first, champion skier Lindsey Vonn is here in Davos for the first time. I spoke to her about her comeback bid on the slopes. We'll bring you that interview right after this. Welcome back to Squawk Box here in Davos, Switzerland. A number of CEOs taking some time away from the meetings on the promenade to, yes, play hooky and hit the slopes. Earlier this week, I spoke with ski legend Lindsey Vonn, who's here gearing up for her comeback in hopes of competing in the 2026 Winter Olympics. Cortina, while she's skied before in Davos, it's first time being here during the World Economic Forum.
I am here skiing with Cloudflare and the US Ski team.
And how did you get hooked up with them?
They're actually a US Ski team sponsor. So a bunch of us, Peekaboo Street, Darren Rawls, some current athletes, Jackie Wiles and Laura Masuga, we were all here skiing with clients and business leaders, just testing out their skills on the mountain and see if we can do business together. It's like golf, skiing is a great place to do business.
So there are a lot of CEOs and the like that are good at golf.
Yes.
Do you find that there are a lot of CEOs that are good skiers?
Yes. Golf, skiing, tennis. I mean, we're kind of high achieving people. They're very ambitious, and skiing is, I think, a sport where you're getting some adrenaline and it's a little risk factor. So a lot of businessmen, I think, and women enjoy skiing. Let's talk about what happened this weekend. You were at Cortina. Crash before the competition. What happened? They added some new terrain into the course, and from the last time I was here, which was 6 years ago, and I just kind of got too much air off the jump. My edge caught when I landed, and I just kind of fell.
Did you know it in the air, or you knew it when you hit?
When I landed, it was very quick, and it was clear that was going to happen. My airbag went off, and
but you're
I was fine. I was fine.
Everything totally.
Everything was great.
That's a special place for you, though, because
Yes.
you won a lot of World Cups there.
Just a couple.
Just a couple, and that's what the Olympics are going to be.
Yes, it is. It's my first World Cup podium. I won there 12 times. I broke the women's record at the time, and it was my last World Cup race. So it was really great to be back. And the Cortina Olympics next year, it's a good place for me.
How's the knee?
It's great.
Yeah,
Titanium. It's a pretty strong.
Is this
material.
do you think this is the future though of sports? I mean, of being able to get back on your feet and do stuff that people thought that was never possible.
I mean, I would hope that athletes don't get to the point that you need a knee replacement at, my age, but I do think that it's a very real possibility, and I think that it changes the perception, not just for athletes, but for people in general. I don't think you need to wait until you're 60 or 70 years old to get a knee replacement. If you're in pain,
Right.
there's a solution. It's pretty high tech.
The foundation's a decade old.
Yes, we started with Foundation 2015, and we've given over $1 million in scholarships. Our goal is to empower and inspire underserved girls through scholarships and programs. So, I'm really happy with what we've been doing. We've helped thousands of girls, and I really want to continue to do that in a really meaningful way. We have our own curriculum now, our empowerment curriculum. And
What's in the curriculum?
It's when someone tells you something negative, how to turn it into something positive. There's a lot of kids that really need the basics and need to find their self-esteem and realize that their uniqueness is what makes them special. A lot of kids, especially with social media, it's really hard for them to find themselves, and so it's just a basic guide and journal for them to, find their confidence.
And Becky, most importantly, we always talk about Oura rings and my terrible scores on my Oura ring, and Lindsay wears an Oura ring. I have a very low HRV, so viewers who have a low HRV through their Oura ring and they're
What's HRV?
like scared about it. Heart rate variability. This is like your parasympathetic, how relaxed or not relaxed you are. You don't want to have a low one. You'd want to be 30s, 40s. It's supposed to be measured to yourself. Anyway, I've always had a low one to the point where doctors think it's terrible. And then I saw Lindsay, who's an Olympian, and we have the same HRV. And
See,
so
I think that would be a good thing. It means you have a good resting heart rate, so you don't get stressed out about stuff.
No. So there's two measures. There's a resting heart rate, which is mine probably not as low as you want either. But the HRV you want to have high. You want lots of variability. So some of the great Olympians have HRV 140 or more. So to be at 17, 20, I mean, you start to worry you're gonna have a stroke. Anyway, it's a longer conversation.
But you have the same
by
as
the way,
Lindsey Vonn, so you must be doing something right.
That's what I'm trying to tell myself. That's what I'm trying to tell you, but I don't know if that's really true. Anyway,
I would say take
we're
it,
gonna come
stop
back
worrying.
in a minute with somebody who, by the way, just skied with Lindsey Vonn on Tuesday. They played hooky. That's a tease for you. So we'll tell you about that.
Oh, that's a good tease. I want to see. Also, when we come back, we're going to talk about the future of work, from remote and hybrid jobs to the push to return to offices. That conversation is next. And later, Charles Schwab CEO Rick Wurster will join us in his first earnings interview since taking the top job earlier this month. That exclusive interview is coming up at 8 a.m. Eastern Time. Squawk Box, we'll be right back.
Eating. Welcome back to Squawk Box. We are live in Davos, Switzerland at the World Economic Forum. President Trump has ordered millions of federal employees back to full-time office work, mandating that, quote, heads of all departments and agencies shall require employees to return to work in person at their respective duty stations. Joining us right now to discuss the state of work in the U.S., maybe across the globe, Glassdoor's CEO, Christian Sutherland-Wong, and organizational psychologist. I call him really a behavioral psychologist. So I don't know what's the right term. Author and Becky Quick, a ski partner of Lindsey Vohn's, Adam Graham, who's just named Glassdoor's chief work-life expert. That was the tease. He just spent a day skiing with Lindsey Vonn. Thought that was worth mentioning. How you guys doing?
Doing great.
Let's talk about the state of work, because it does seem like there was a major shift that's happening. It feels like we're under a major shift right now in terms of just the power of workers, labor,
Yes.
relative to management. Something, seemed to have shifted maybe 5 years ago in favor of management, or rather, I'm sorry, in favor of the employer,
Workers,
employees,
yeah.
and now it seems to be shifting back. What's happening?
Yeah, I mean, it's certainly shifted back in the last couple of years that we've seen. Go back a couple of years, a huge demand, intensity of hiring, and then 2023, 24, that shifted back. And so now I think with that, and we've been talking about a lot at Davos, is that there's these new policies coming out as employers are back in the driver's seat. around return to office, around changes to DEI policies. And so it's going to be interesting to see how this plays out.
Adam, you now have a new title. You're the Chief Work-Life Expert.
It's hopefully more than a title.
These guys. So what does that mean?
So my job is basically to work with Glassdoor to figure out what are the most important trends affecting companies and employees and leaders, and how can we have better conversations that are data-driven.
Right.
Andrew, we've talked about this before, but one of my biggest frustrations with both corporate and government policy is people make choices based on opinion as opposed to based on evidence. And when we talk about return to office, for example, there was evidence pre-COVID that if you take a big government job, patent examiners were more productive when they worked fully remotely. And it's the kind of independent knowledge work that doesn't need to be co-located. And I worry that we're not learning from that kind of evidence. And so working with Glassdoor is a great opportunity.
One of the things that I keep hearing over and over from CEOs here, and I've been to now a number of dinners, cocktail conversations about this very topic, which is that the CEOs feel that during the pandemic, a lot of things got loosened up to try to help the worker, right? To make everything sort of work. But that meant shifting out deadlines, shifting out sort of performance. A lot of things got a little bit easier for everybody. And the question is whether that is helpful long-term or not. And a lot of them obviously are saying, get back to work. We can't do it that way forever.
I can't imagine that either or makes sense. So I feel like it's been a pendulum shift back and forth between, okay, we're going to care about people, we're going to care about performance. In the short term, there are trade-offs, but in the long term, what we know is caring about people is the best way to drive performance. And so when we study organizational culture, one of the things we see is there are some cultures that are more results-oriented and others that are more relationship-oriented. Ironically, if you are a results-oriented company and you bring in a relationship-oriented CEO, that CEO drives more value than if you had a fellow results-oriented leader, because they're bringing something that's absent.
What's the difference between, you're saying, what's the difference between a results-oriented versus relationship-oriented?
It's basically people first versus performance or profits first. And I think the surprising lesson from that research is if you really care about maximizing profits, and that's what your culture has been all about, accountability first, then if you bring in somebody who puts people first, that's actually better for your profits.
And we see the same thing on Glassdoor in terms of, with Glassdoor, we're the world's leading platform for workplace transparency. And it's built on hundreds of millions of workplace reviews. And so we've studied it, looking at all the ratings and reviews, and then we've cross-referenced that with stock market performance. And it turns out the companies who do the best by their employees are actually the ones
How much
who
do the
have business
CEOs call you up and say, I can't believe this is happening? I mean, this is a little bit like, people who put down reviews on TripAdvisor and the hotel can't believe that there's something terrible happened. Do you get a lot of complaints?
I get it, but I'd say rewind.
You're empowering the employees to actually tell people what's
Absolutely.
going on.
And 10 years ago, when I first joined Glassdoor, I think people are always, their heads are in the sand, saying, "I hope this thing kind of goes away." And you fast forward 10 years to today, I think employers are much more constructive, and they start to really understand the whole premise of that if you engage your employees, it's actually good for business. And so the narrative has changed.
Let me ask you this: the other thing that happened in the last 5, 6, 7 years was obviously a move inside HR departments to develop DEI programs and the like. Mm-hmm. And there seems to be 3 things going on. There's some folks who are sticking with it. Maybe they haven't gotten a call from Robbie Starbuck yet. There's some who have completely abandoned it, or at least say they're abandoning it. And then there's a third group that says they're abandoning it, but actually is continuing it, just sort of rebranding it as something else. Mm-hmm. What do you think is really happening here?
Well, I mean, from our perspective, I think DEI is not just a fad that's kind of begun in 2020. If you go back to the beginning of Glassdoor 18 years ago, when we first started having workplace reviews, one of the key topics that people want to talk about was diversity. And so we've seen this trend over time where employees are wanting to talk about it and leadership are coming to the table to talk about it. And I think, Adam was saying, we're seeing maybe a pendulum swing back and you're seeing different reactions from different employers. But again, we've seen that the best employers who engage with their employees, who lean into diversity, are the ones who actually perform better as businesses. So I expect, that the conversation will be very different when we're meeting again a year or 2 from now.
Really? What do you think happens?
I think that there's danger right now of throwing out the baby with the bathwater. So I think I've seen a lot of leaders get sort of mired in this zero sum. Well, if we make space for certain kinds of people with underrepresented backgrounds, then we're reverse discriminating against a historically privileged group. And that was not the original intent of this movement. It was to say we want to create opportunities for people who are motivated and talented but didn't have access. And we want to make sure that everybody has a sense of belonging. And I don't think those imperatives go away.
So I think, let me ask you this, and maybe we're going to get into like a little bit of treacherous, sensitive area. I think one of the things that has happened and that CEOs talk about is as they sought to diversify their staffs and things, they changed the parameters for the experience necessarily for some roles. They in some cases they said, you know what, because we actually care about diversity in this instance, we're going to take somebody who maybe has a little bit less experience, who thinks is really a promising person. It may take us 6 months to get them totally ready, and that might be a little different than being able to hire somebody else who's plug and play, right?
Mm-hmm.
The plug and play person says, I can't believe this is happening, if they in fact are not part of that diversity pool, right?
Yeah.
How do you think about that?
Yeah. Well, I think if you look more broadly at the war for talent, and it's only going to get more and more intense as you have aging populations, lower birth rates in developed countries, you're going to have to figure out ways to engage a broader talent pool. And that's what I think many of these initiatives were about, of how do I tap into broader talent pools, because it is getting more and more intense for talent. So, I think that's when you kind of view this not just as something that's about social justice, but actually, again, this is about how do I perform better. I think this can make sense.
Yeah, and Andrew, you know this, the pace of change is accelerating. And I think what that means is the currency of success used to be ability, now it's agility. And in the long run, the people you want to invest in are the ones who have the motivation and capability to learn.
Adam Grant, Christian, thank you for coming in. You gonna go skiing again? More skiing?
Probably.
Okay, good for you.
I don't have a real job, Andrew.
We'll see you. Appreciate it very, very much. Becky, back to you in New York.
So that's got to be intimidating, skiing with Lindsey Vonn, no?
Yeah, do you want to comment on that? What was it like to ski with Lindsey Vonn? Were you nervous?
Could you keep
It
up?
was a lot of pressure. I chased her down the mountain, and I thought I was flying, and then she said basically it was a leisurely stroll for her.
Yeah, she's like, bye-bye. Adam, I give you credit for trying. I would never attempt.
It was a great challenge.
Yeah, well done. All right, it is 7 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, live from the NASDAQ market site. Andrew is in Davos at the World Economic Forum. The futures at this hour are mixed. You're looking at the Dow futures up by about 26 points, but the S&P futures down by about 10 after touching a new high yesterday. The Nasdaq's indicated off by triple digits, down by about 106 right now. And if you take a look at treasuries, maybe not a surprise to see that yields have picked up. The 10-year yield back above 4.6% at 4.63. The 2-year is just below 4.3%, 4.29. American Airlines out with its quarterly results. Let's get over to Phil LeBeau. He joins us with the numbers right now. Good morning again, Phil.
Good morning, Becky. And as you take a look at shares of American Airlines, you'll see that the stock is down, about 7%. That's a reflection of the guidance. We'll talk about that in just a little bit. But in terms of the fourth quarter, look, this was a beat on the top and the bottom line with record quarterly revenue. Company earning 86 cents a share, 22 cents better than the street was expecting, with revenue coming in better than expected at $13.66 billion. The numbers within the numbers in the fourth quarter, revenue per seat mile up 2% compared to the same quarter in 23. Cost per seat mile up 5.7% compared to Q4 of 23, an operating margin of 8.4%. Importantly, the debt at the end of the fourth quarter is now under $40 billion, coming in at $38.6 billion. Paying off that debt has been a big, big motivation for the management team at American Airlines, making progress there. Now let's talk about the revenue by segment. International up 2.6%, domestic revenue up 3.5%. And this is the story in terms of why the stock is under pressure. The guidance for the first quarter EPS, it's a loss of between 20 and 40 cents. The street is expecting a loss of 4 cents. Why is there a difference there? American believes that perhaps some of the analysts did not fully account for all of the labor contract costs that take effect in the first quarter. That may be true because when you take a look at the full year guidance from American Airlines, its guidance is to earn between $1.70 and $2.70, and the street's estimate right now is at $2.42. So perhaps the street has just factored in across the entire year the costs from all of the labor contracts, but did not fully factor it into the first quarter. Regardless, the stock is down 7%. We're going to be talking with Robert Isom, CEO of American Airlines. That's coming up in about 15 minutes. Becky, I will send it back to you for now.
All right, that's going to be interesting, seeing what the street has taken into account and what they haven't. Phil, thank you. We'll see you in just a little bit. When we come back, Saudi Arabia planning $600 billion in new U.S. investments. We've got the details right after this break. Plus, we will get reaction from BlackRock's Larry Fink on that and his thoughts on what we've seen from President Trump's first several days in office. Squawk Box will be right back.
Welcome back to Squawk Box. A news alert this morning. Saudi Arabia's Crown Prince, MBS, and President Trump reportedly closing a deal that would see the Saudis commit $600 billion into expanded U.S. trade and investment over the next 4 years, according to Saudi Arabia's state news agency. The two leaders spoke on the phone yesterday, but didn't comment on whether it would be public or private spending or how the money would be spent, though the expectation is around infrastructure. Trump has promised his first trip overseas would be to Saudi Arabia. We're going to continue our conversations here in Davos. We're going to bring in our next guest, Larry Fink, BlackRock chairman and CEO, somebody who's invested a lot these days in the world of infrastructure.
I have.
There's a lot of questions about what the Saudis could ultimately do with that kind of money in the United States. Right. There's been a lot of debate even in the past 24 hours here about talking about infrastructure. This big Stargate transaction, $100 billion, $500 billion, depending on what you think. How much money do you think actually all of these how much money do you think actually needs to get raised to fulfill all of these promises?
Right now, data centers represent about 50 gigawatts of power. And if you use the U.S. estimates on how much power we're going to need for data centers, It's estimated to go up 5 times, about 300 gigawatts of power. If it's all for data centers, it's all for AI, you should assume for each gigawatt, it's about a $40 to $50 billion spend on the framing, the chips, the coolant and all that stuff, the power sourcing and all that stuff. So we're talking trillions of dollars.
So would you just be long anything and everything that touches data centers right now? Or do you think that it's in terms of the way the equity markets are, that it's already built in?
Some of it's built in, but the areas that are trading at lower PEs, companies that provide HVAC.
Right.
I mean, there is going to be a shortage of electricians here. So we already have shortages in our country with electricians. So all of this is going to stimulate the economy. Now the key is how do you to me it's a triangle of 3 major powers are coming into force. You have technology, and most technology firms thought, okay, whether you're in software or you're in social media or some sort, but now AI intersects not just technology but power and power sourcing. And as with all these announcements, the biggest change in all of this, it requires access to the capital markets, and that is what is probably the most instrumental that's going on. This is not going to be any one pool of money that's going to be raised. You're going to have to be raising money throughout all the different areas. The beauty of this, and this beauty of this growth for the United States is most of this money is going to come from the private sector. It's not going to be ballooning our deficits. It's actually going to probably reducing our deficit because they create more revenues and more jobs.
Let me ask you about the Stargate deal, because
Right.
I think there's a question mark about it, and you probably saw Elon Musk
I have.
taking to Twitter saying they don't have the money to do this. Then, by the way, Satya Nadella saying he has $80 billion, says, I've got that money. That's real money. What do you think's really happening? You, by the way, have a partnership with Microsoft and MGX. MGX, I think, is a partner in this Stargate enterprise.
I'm not sure of that, but I'm not here to discuss that. We announced a few months back our partnership. We're raising $30 billion. We have our GP capital already. We're going to have a few more announcements in the coming weeks. We're going to be going out raising another $22 billion of equity. We have a lot of it already lined up. And then by project, we'll probably need another $100 billion.
You'll need another $100 billion.
Well, that's for debt. So each project we're going to be financing
some equity.
We have the 30 billion is equity.
Right.
And so we are differentiating and trying to describe to everybody, you need the equity first to be able to attract the debt, to finance it. First on the stack, the equity comes first, and then you start raising debt. I spend time with Masa. I spend time with Sam. We want them to be successful. As we said, the enterprise value of all this creation is going to be enormous. And what I just talked about is a need in the United States. We're talking about every country in the world is going to be needing it, and this is going to play into a very large geopolitical issue. You had the Biden administration the last week put restrictions on where we could give our advanced technologies to. And it is my opinion, the country that we deny our advanced technologies, the next phone call is to China.
Right.
And so this is as large as we've ever seen in the role of the capital markets and in issues. And so, but we're with our partnership right now, we're working with many different companies and countries, and we really have the money too.
Right. You have the money too. You're going to subtweet Satya? I never saw that.
I don't do that. I got the tweet from Satya.
You got all the tweets.
And I got Elon's tweet too.
Let me ask you a different question, which is, we talked a little bit when I saw you last week about the markets.
Yeah.
Jamie Dimon was here yesterday, and he was not pessimistic, but he was, as he would say, cautiously pessimistic insofar as he believes that stuff is relatively priced for perfection right now. Does that feel right to you?
So I'm cautiously optimistic.
Okay.
That being said, I have scenarios where it could be pretty bad. I believe if we could unlock all this private capital, we're going to have enormous growth. At the same time, some of this is going to create new inflationary pressures.
Right.
And I do believe that's probably the risk that is not factored into the markets. I think the bond market is going to tell us where we're going. And I've been saying now for some time, I may have said it last week, there's a probability we could see the 10-year over 5%, maybe even 5.5%. That would shock the equity market. That would not be a good scenario.
And do you think that would be a temporary scenario insofar as the bond market says effectively to the U.S. government, we're not doing it this way, folks. And then you'd see
A
the Trump
pivot.
administration pivot, and then the equity market would shift.
I think it would start actually would start a conversation that we need in our country, and that is how are we going to bring down our deficits? The positive side of what the Trump administration is doing, they are trying to find growth from the private sector.
Right.
So depending on how that all plays out and how quickly the private sector can effectively put capital in the ground and start building, that's one side. At the other side of it, there are some very large inflationary pressures that we all have to be aware of. And depending on how this plays out, there is a scenario where we're going to have much more elevated interest rates because of inflation. And that's going to have a very negative impact on the equity market. It's going to change, it's going to force a revaluation. But it will probably create a real conversation. What are we going to do about the deficits?
Becky's got a question back in New York. Becky?
Hi, Becky. Happy New Year.
Hey, Larry. Happy New Year. Good to see you.
Good to see you.
I'd like to hear a little bit more about this. That's not your base case, I assume, this higher inflationary situation and higher interest rates. What do you think the Fed does? First of all, how likely of a scenario is it that we see that higher inflationary issues? And second of all, what do you think the Fed does? Because we've got another FOMC meeting next week. You think they're going to be sidelined for a while, just waiting to see what the impact of the new administration's policies are? Or how do you kind of figure this out from the market perspective?
Well, I don't think the Federal Reserve spends any time focusing on what policy issues are going to be affecting the future. I think they're going to be focusing on the data at the moment, and the data at the moment is fine. Whether they're going to ease one more time or pause, I do not see any scenario in the short run that the Federal Reserve is going to reverse course. And my base case scenario is we're going to have rates staying stickier. And what I mean by that is we're going to have probably a more normalized yield curve. The yield curve is going to become steeper and steeper. So I could see a scenario of the Federal Reserve easing shortly. But at the same time, I think the 10-year is going to be locked in this zone where it's been trading right now. And we'll see how this plays out. In all my scenarios, too, by the way, the yield curve is going to get steeper, not flatter. Remember, we've been living in a world where the yield curve has been inverted for so long, which harms savers, benefits capital because long rates were at lower rates. If we have a normalized yield curve, borrowers, savers are not going to get that benefit, but borrowers are going to get more harm. So it has all these implications in our society.
Hey, Larry, talking about society, one of the questions I had is there's a vibe shift here, not just in Davos, but around the world.
Yes.
Around climate, a topic you've talked a lot about and written letters to many of these CEOs that became the topic of conversation here at Davos for a long time. DI, ESG, all of it seems to have been rebuked in many ways by the election perhaps of Trump and a lot of companies that have now turned the other way. What do you think about all this, and what do you think about, on a very personal level, just your role in it as somebody who I think was an advocate for a lot of these ideas?
Yes. We're in the midst of raising a $10 billion decarbonization fund. We have, first of all, everything we do is on behalf of clients. We have clients who are investing more and more money in decarbonization technology, especially it's gotten so much cheaper. Some of these enterprises' stocks have fallen dramatically. So we have more and more clients who are looking at this, not as a counter trade, but they're looking at it because they still firmly believe it. I've had many conversations with different CEOs here in Davos who are saying they're still moving forward in it. But the narrative has changed. I would say it's a more pragmatic conversation today. It is not being driven by NGOs. It's being driven by client demand and being driven by economics. And so, look at, as a frequent visitor to Davos, let me be clear. I've always done the best when I've gone against every Davos week.
Right.
And what I learned this week in Davos is the abject pessimism from Europeans. I've never seen or heard more pessimism on the future of Europe. So I'm actually coming around now and saying we may be near a bottom.
Interesting.
Two, the euphoria we have in the United States. As Jamie said, we all have to just be mindful that we've had these big macro trends. If you look at the performance of the S&P over the last 20 years versus any other equity index, it has outperformed everything. I'm a believer it will continue, but I have to ask myself, I have to judge myself in making sure are all the ingredients in place for that? And so Davos, in my mind, is I come here to learn,
Right.
but I come here to hear the mood. But I don't.
And you usually think it's the opposite. So
I generally don't invest with mood.
let me just ask you one related question though to the vibe issue.
Yeah.
Which is that, you know, we had Jamie here yesterday, we had David Solomon here yesterday. There are now activist shareholders who are taking on these companies over their ESG policies. Others are taking on. There are folks who are going to court American Airlines over using firms like a BlackRock,
Yeah.
who are looking at certain metrics like, you know, ESG or other things.
But in that case, we weren't.
But
I mean, that I don't want to go to the case, but that's not even a fact.
but I guess my bigger question is, what should companies do as it relates to these things?
And I'm sure both of those CEOs said it. You got to stand by your clients every day. You got to be authentic every day. You got to be doing the right thing on behalf of your clients every day, and that's it. And you have, you know, there are fringes on all sides.
Right.
But you have to stay true to your convictions, true to your clients. I mean, despite all that noise, we talked about it last week, where, you know, we raised $641 billion on behalf of clients. No firm has ever raised anything close to that, of which 300 something of the $1 billion was from the United States. So yes, I am being attacked from the left and the right. At times, it's actually being diminished because we're listening to our clients. We're doing the right thing. But I do believe what you're raising is something what I hope the Trump administration does with the SEC.
Which is
Under Gary Gensler's SEC, they made it much easier for proxy, you know, votes. I mean, so there are so many proxy from the far left
Right.
and the far right.
right, there's folks coming out.
I was talking to a CEO of another company, very large. I think this CEO was on your show in the last
Okay.
2 days. He has 14 proxy inclusions, and he said half of them are from the far left and half of them are far right, and they actually are against each other.
Right.
And he said if we could net it, we had none.
Right. So you got to figure out how to change that dynamic.
I think we have to review what is the role of a proxy vote,
Right.
and it's too vast today, and it's the amount of money we're spending, legal and all that stuff. And I'm talking across the board. I mean, every CEO is complaining right now that it's just like an open warfare, and we need to find ways to minimize that. And it's just not the banks or the asset managers get it. We're talking about real companies, really strong consumer brands that are getting the same type of attacks.
Are you planning on issuing any either meme coin ETFs or anything like that now that the animal spirits seem to be very much alive?
I think the Sorkin coin should.
Sorkin coin. We got to do a squat coin. We've talked. Becky and I. We've talked about a squat coin.
Yeah.
I don't know. Are you fascinated by this, by the way? Just the whole phenomenon?
No, I'm not.
You're not?
I, you know, as a huge believer of crypto and blockchain and tokenization, I mean, I want the SEC to rapidly approve the tokenization of bonds and stocks. That will simplify things, make things easier. Some of the tax on BlackRock would never have to vote on a proxy vote anymore because every owner of record would be notified through a tokenization of equities. And it would save more money for more people. It would bring down the cost of ownership of stock and bonds. So those are the type of financial reforms we need.
Larry Fink, thank you for coming.
Thank you.
Appreciate it for doing this.
Thank you, Becky.
It's gotten colder here.
Yeah, it got colder.
Literally, as the interview's gone on, I could tell we got hand warmers going.
I think it fell 5 degrees while we talked, so I don't know what we did.
I don't know why.
I
Thank
saw
you, Larry.
snow behind you too.
Yep, we got the snow.
Snow.
It's coming. It's coming.
It's 11 degrees here too, so don't worry. you're not alone. You'd be cold here too. We will be back with Andrew in just a few minutes. In the meantime, American Airlines reporting results just a short time ago. We want to get over to Phil LeBeau, who joins us with a special guest this morning. Hi, Phil.
Hi, Becky. Robert Isom, CEO of American Airlines, joins us. You beat on the top and the bottom line in the fourth quarter, but the stock's under pressure because of your guidance, especially for the first quarter, lower than or a greater than expected loss. What's the disconnect here between what your guidance is and what the street was expecting?
Well, Phil, great fourth quarter for us. Record revenues, record free cash flow. And it was all about setting up for the future. Really proud of our team. Difficult operating conditions. We were excellent in terms of performance from a reliability perspective. We're setting up for the future. So record free cash flow, allows us to address our balance sheet issues, strengthening that, hitting our debt reduction target 1 full year earlier. The Citi deal is a really big thing for us as we take a look out into 2026. But the other thing is we were able to get labor contracts done with all of our major work groups. That is hitting in the first quarter. Probably, analysts didn't take that into account. But as you take a look out into the future, it's going to be the first time in my career where I'm not going to be at the negotiating table. Our team won't be at the negotiating table for 3 years. That brings labor cost certainty. We're going to be able to manage that very well. And as we take a look out into the remainder of 2025, those cost pressures moderate, and you're going to see us really do a nice job as we move through the year.
I don't want to belabor this,
Yeah.
but I know you guys, your investor relations are constantly in touch with analysts.
Right.
Shouldn't this have been more clearly communicated, or shouldn't the analysts have taken into account? I mean, this is a big disconnect here in terms of their estimate versus your guidance.
Well, certainly it's a known issue, but it hits in the first quarter. That's the quarter in which we didn't have our flight attendant contract represented, and also our mechanic and fleet service contract. We'll do a better job as we go forward, but I think as we explain and take a look out into the latter half of 2025 and you look into 2026, our labor costs we're going to be able to keep those well under the cost of inflation. I'm very optimistic about the efficiency of the airline, and the revenue backdrop is such that I'm very pleased with what we saw in the fourth quarter. As we look into the first quarter, you're going to continue to see outperformance from American, and that's going to be shown. We're projecting revenues up 3 to 5% on capacity that's flat to down.
How much of your corporate travel that you lost last year have you been able to regain because of the issues that you have corrected in terms of direct booking versus going through third party?
Well, what I like to cite is the facts, and from that perspective, our large corporate travel, our revenue grew 8% in the fourth quarter. That gives us great momentum as we move into 2025. And the work that we're doing with the travel management companies and also the large corporates, it's brought me closer and our team, and I really like what we're doing. We're on target to be able to win back all the share we lost, and hopefully more as we move through 2025.
You talked about the revenue growth and the limited capacity. You're keeping your capacity in check, and if the industry does as well, are we in for a year where we see fares continue to move higher because of it's a supply and demand issue?
Well, I know it's a supply and demand issue, but it's also a premium issue. And from that perspective, as we take a look out into 2025, we see our revenues growing 4.5% to 7.5% over this year on capacity that is low single.
As you add more premium seating.
Yes, in overall capacity is low single digits. And for us, for premium, we think that that's going to continue to grow, and we're skating to where the puck is going to be. And on that front, over the next 2 years, we're going to grow our premium seating by 20%.
Last question. Trump administration, new transportation secretary likely to be confirmed here in the next few weeks. What are you expecting from the transportation department relative to what you saw the last 4 years under the Biden administration?
Well, I'll go back to the first Trump administration, and let's face it, without the Trump administration's quick action in the first term during the pandemic, the airline industry would be in a very different shape. I know that the administration understands the importance that airlines bring to the overall economy. As we take a look out into 2025 with the new Trump administration, I'm looking for a couple of things. One, from a regulatory standpoint, I think that there's going to be a more favorable group to work with. And then the second thing is, I think that there will also be a desire to invest for the long term. We can really do a lot more in terms of efficiency. There's a burden that is brought on the airline industry with all the regulation, and also in terms of air traffic control not being able to keep up.
Not the first CEO has told me that. Air traffic control. I'm sure the Trump administration has heard you talk about that, and other CEOs. Guys, we'll send it back to you. Andrew, back to you.
Hey, thank you, and thank you for that great interview, Phil. Meantime, still to come right here at the World Economic Forum in Davos, Switzerland. We've got Morgan Stanley CEO Ted Pick. He's going to join us right after this. And then later, Elon Musk and Sam Altman, they've been sparring over that $500 billion Stargate deal announced by President Trump. Satya Nadella jumping into the mix as well. We're going to hear from Musk biographer Walter Isaacson about the billionaire battle. And Squawk Box returns after this.
We are watching shares of GE Aerospace after the company reported its fourth quarter results. That company beating on both the top and the bottom lines. GE Aerospace says that it plans to increase its dividend by 30% in 2025 and up its share buybacks to $7 billion. The company is expecting fiscal year earnings a share of $5.10 to $5.45. The estimate was $5.23. The stock right now is up by about 6.5%. Andrew?
Yeah. Thanks, Becky. We've got to talk about Morgan Stanley right now because shares of that company up more than 50% over the past year. The company recently reported strong quarterly earnings that beat on the top and bottom lines. Here to discuss all of that, the banking sector, the path of interest rates, the Davos vibe shift, and everything else. Ted Pick is here. He's the CEO and, of course, now the new chairman of Morgan Stanley. Very good to see you, sir.
Thank you for having me, sir.
Okay, so we're all trying to figure out, and we've been sort of taking the temperature of everybody who's joined us, just what the level of confidence is, and how much you think the feeling here in Davos is actually accurate, because as you know, oftentimes
the contraindicator
it could be a contraindicator. So tell us what you think the feeling is, and then you can tell us whether you think it's positive indicator or contraindicator.
Okay, well, I had a view on this, but the temperature here has dropped. About 5 degrees in the last 5 minutes. So you got to factor that in.
You got to factor the temperature.
I think the temperature is mild and positive.
Okay.
And I just think the enthusiasm that is typically, people don't want to be exuberant, but I think there's definitely a fresh step.
Are you feeling that? So I've heard that from a lot of the U.S. CEOs.
So there's
then
another
you go to Europe, and it's like
more reflective.
People feel like they're on the death's door.
No, I don't think it's that. I think it's a reflective moment. There's been talk about capital markets and banking unions since, again, the Draghi report of the fall, which everyone read, but nothing happened. And I think the new administration is a catalyst. Catalyst is we should really talk about where we fit in the global community, what the new framework is, and I think there's the beginnings of a real discussion. So I think, in a sense, it's positive. Now, there's some folks that say Europe, the negativity is such that maybe assets are available and there'll be activity. But I think in the short term, what's more important is that we're thinking about what's going on in the U.S. And clearly, there's a sense of greater connectivity of the business community to new administration.
What about
positive vibe?
How do you think about given you own E-Trade, how do you think about the equity markets? I mean, are they priced to perfection? You look at some of the PE ratios and the like, and you're like, this is pretty high.
Right. So the index looks pretty full. But the reality is we've been talking about growth. And so you really have to not look at the earnings we've seen, but the earnings we think we're going to see over the next 12, 24 months. That is kind of the indicator. And the earnings continue to be strong. How many companies right now are really talking about recession? If anything, talking about inflation. So I feel like the earnings pull through looks pretty sanguine. But more importantly, I know we like to look at the index, but the index is dominated by the half dozen technology companies, which, by the way, are all doing great. But if you look at the deregulation possibility in the energy sector and the financial services sector, those sectors are still at multiples that aren't actually that expensive. So I just think in the sort of, if you're an investor and you think about allocating over the next 6, 12, 18 months, maybe, sure, there could be a drawdown at the index level. You really want to be thinking about where do I have sector exposure.
And what about country exposure?
Country exposure matters too. I mean, I think the two themes, Andrew, right now are kind of the end of financial repression I've talked a little about, which is sort of zero interest rates, zero inflation. That's behind us. And whether we're going to have we're going to have 1 or 2 moves by the Fed this year or none at all, we kind of know where we are on the bond market, somewhere around 4.5%.
Do we though? Because there is real questions about, we're going to hear from President Trump this afternoon. About tariffs. Jamie Dimon was here. Mary Erdos was on stage talking about how they're building war rooms. JP Morgan. Sort of analyze these executive orders and what's going to happen with tariffs, both for the clients and the firm. I don't know. War rooms.
No, we all got them. But I think what's important here is that in the broader context of the post-pandemic period, where we're trying to figure out what rates would generally be when we had a roof off the back of the inflation burst, we know for this moment, for the next period of time, we're somewhere in the 4s on a risk-free basis. And as you know, if you're an analyzer looking at portfolio company, you're a private equity sponsor that's sitting on 2,000 companies. As you know, they're out there each worth $1 billion or more. They want to move them. So what's been one of the arguments not to move them? The argument has been the uncertainty around rates. So I'm not saying there isn't rate uncertainty at all. I'm saying we're kind of have that in a box. And the second box, I think, is kind of the end of history, which is we're going to have nation-state rivalries and interests. And you could argue, oh, but isn't that a chilling effect too? And I would argue, no, actually, if you have the combination of some certainty around general rate framework, and you know now that there is going to be discussions at the nation state level, well, gosh, I have to act then. Am I going to be a buyer? Am I going to be a seller? Am I going to do some financial engineering? And that's why I'm bullish on the M&A side. I know some folks are still wondering, like, when's it coming? And there could be a pacing of that. But I feel like it's those two coming together, zero behind us, and kind of the global race in front of us. That breeds M&A and capital markets activity, which is great for
Given
more
the confidence you're talking about, there is an animal spirits situation going on in the markets right now. You have a wealth management business. E-Trade obviously is a big part of that, so you've got the retail side of it. What do you make of crypto under Trump, this Trump administration, what may happen, and what that speaks? I mean, we're talking about meme coins. I don't know if you're following the Trump coin or Melania coin, and what that says about what's happening.
Well, I think there is liquidity, and the liquidity, expresses itself in all kinds of different ways. I think the broader question is whether some of this has come of age, whether it's hit escape velocity, and time is the friend. The longer it trades and perception becomes reality. For us, the equation is really around whether we as a highly regulated financial institution can act as transactors, sort of follow the money, and there we'll be working with Treasury and the other regulators to sort of figure out how we can offer that in a safe way.
Let me ask you a different question. You've now been a year in this role, and people look at this succession plan, this transition, as one of the great successes. Your former chairman, former CEO, is now managing the succession plan at Disney. People give him a lot of credit for it. What do you think that you guys did that worked? What didn't work as other companies sort of, to the extent that you're supposed to be a role model for this? What was it?
Well, the way you asked that is excellent. I think it worked principally because of the people. And when
The other people?
Yes.
Not you.
No. I mean, I was happy to participate, and I was honored to participate. But it doesn't work without James saying, on my time, I'm going to go on to the next thing. I mean, he was spectacular CEO and chairman, transformed Morgan Stanley. I mean, he just said, I'm done.
I mean, we just talked about some great results, though. And I assume when you walked into this job, were you scared? Were you thinking, oh, I can make these numbers jump by 50%, if that's possible?
Well, I think some self-awareness would be, you should be a little scared every day. Oh my gosh, there go your notes for the next 7 questions.
I don't know.
Now we're
going to see.
ask you. Now we're going to see. No, I also think Dan Simkowitz and Andy Saperstein. I mean, people talk about collegiality, and there are lots of memos around that, but we're friends. We deeply care about each other, and that's what's made this partnership work. And the vibe at Morgan Stanley's, our history. Right. You've written a little about that. The reality is that we have some humility, because very rare is a financial institution that gets to the brink and comes back. So in our good days and our good moments, we don't forget that. When we're hosting dinners for our global clients, we did last night, we'll do again tonight, we talk a lot about that, because you don't want to get imprisoned by it. You got to transform. You kind of want to remember where you've been, and that's important.
Okay, last one, maybe easy, maybe hard, but the Wall Street Journal's reporting it was a note that fell on the floor.
Yeah.
Morgan Stanley star banker Michael Grimes discussing job in the Trump administration. What can you tell us?
Michael Grimes, one of my favorite people.
One of your favorite bankers.
Yes.
Banker to Elon Musk.
Broadcast.com for Mr. Cuban.
Yep.
We worked on that together, and then we worked on the Google auction back in 04, I believe that was, for a year. Michael's one of the star bankers and one of the culture carriers of Morgan Stanley. If he in the end decides to do something away from us, we need him back.
You need him back when it's over.
Of course.
Ted, thank you.
Thanks so much for having me.
Thank you. Becky, back to you in New York.
Andrew, thank you. And I just want to say to Ted,
Yeah.
I admire what you're
Good to
saying,
see you,
Ted.
Becky.
Good to see you too. I admire what you're saying about being humble, having a little bit of fear every day. I think a lot of people are afraid to admit that, but I think that's how you stay on your toes, how you don't get complacent, and I appreciate that you're willing to say that.
Appreciate that. Every day we just got to get a little better.
It's a good attitude.
I
Everybody
believe
should think that way.
It's a good attitude. We all
Appreciate that. Appreciate
Yeah.
that. Thanks for having me, guys. Really
Nice to
appreciate
see
it.
you.
Good to see you, Ted. When we come back, the push to create oil and gas jobs while lowering prices. Senate GOP Policy Committee Vice Chair James Lankford is going to join us to talk about his new bill and much more. Squawk Box will be right back. Oklahoma Senator James Lankford is pushing a bill to get oil and gas drillers relief from the corporate alternative minimum tax that was imposed by the Inflation Reduction Act. Senator Lankford joins us this morning. He is the vice chair of the Republican Policy Committee. He's also a part of the Majority Whip team. And Senator, first of all, thank you for being here. Why don't you tell us a little bit about this bill?
Yeah, the corporate alternative minimum tax caught a lot of different entities on it, and really it was focused on primarily on the energy side was the initial target coming out of the Inflation Reduction Act. If we can't get rid of that entirely, we at least need to give some relief to those folks that are those independent producers. We're not talking about the mega companies, but a lot of independents, because as folks know, if you actually grow to a level that you actually get caught with a CAMT, you're stuck in it at that point. So we need to be able to get some relief to them so they're not constantly worried about it. The last thing we want to do to a business is say, you can't keep growing. You've got to be able to cap your growth. That's not good for our economy, and it's not good for our energy future.
Yeah, I understand the idea of wanting companies to be able to consider intangible drilling costs as a way of really promoting drilling, doing what the president has talked about. But do you think this flies as a separate bill, or shouldn't this get wrapped up in the one big beautiful bill that's going to do everything from, figure out the taxes to figure out where we're doing with tariffs and other issues along the way? Why do this as a one-off?
We're dropping it to be able to put it out there and to say, let's talk about this as one beautiful amendment and one big beautiful bill. So how do we actually get this out there, get it into the conversation, and make everyone aware of it, to say we're not just talking about the 2017 tax bill and moving that forward. We're also talking about some other areas as well, including some things that were done in the IRA that really hurts our economy. But frankly, the intangible drilling cost really incentivizes companies to drill the next well, to make sure we're doing more domestic production. And it's a basic expense that every single business has. So right now we're treating energy production differently than we're treating other manufacturing. This just levels the playing field for it.
Okay, this is interesting though. Is this what we're going to see? A lot of bills that are put out for discussion to really elevate the issue, make sure that people understand it, the public, the other senators, the House potentially on these issues. Is this what we're going to be looking at for the next several months? Everybody trying to say, look at this very carefully, because we're talking about one big beautiful bill, but it's going to have a lot of moving pieces. And I would guess that the negotiation began 3 days ago and will continue until that bill gets put forward.
Actually, the negotiation began about 9 months ago when the Finance Ways and Means Committee, we sat down privately and said, okay, let's say all the different, for instance here, one of those was, what if we win the House, the Senate, the White House, and we have an opportunity for reconciliation? So we started gaming that out to be able to determine what could be done, what should be done. So we've got all the things on the whiteboard on it, but we've actually got to get the language right in each individual segment. So you don't write the whole bill all at once. You write the different pieces, do the technical work that's on that, and then be able to say, let's get this piece into the whole.
That sounds like a protracted and kind of messy process. What are the odds that these things each get picked up? And even if this gets voted on, what are the odds it winds up in the final? I mean, there's so many stories we hear about the back and forth, the negotiations, the deal making. Let's just take salt, for instance. You have the New York and New Jersey Republicans who have said that they would vote against it in the House if they can't get the salt deductions lifted to 20,000 or maybe more. How does this all work out? As somebody who's on the policy committee, as somebody who sees everything that's taking place, describe the process.
It's a big, messy process on that. So I serve on the Finance Committee, which is that tax writing committee in the Senate. So we'll take different pieces. Let me take not just the intangible drilling costs, but let's take bonus depreciation. Bonus depreciation in the 2017 tax bill was diminishing each year. Well, we've got to get a stable, higher bonus depreciation up there to be able to incentivize, again, businesses to be able to compete with China and to be able to do more manufacturing, more energy production, more semiconductors, all the things that we need to be able to do here, but that allows those businesses to be able to write off that deduction faster. That doesn't change the amount of income coming into the Treasury. It incentivizes business activity and for them to be able to write it off right now rather than in the future. That's a way that we can actually impact the economy. That's one slice of that I'm working on among many. So we work it out in our committee. We work it out with the House members. I met with some of the House members on Ways and Means earlier this week, and we start talking through what's the parameters, what's the fence that we're going to try to put in, how we're going to manage this, and to be able to make sure that we get the pieces in that help our economy and take the pieces out that don't.
All of that has to be negotiated behind the scenes, and at the same time, I would assume you're working pretty closely with President Trump to make sure that he's on board with the proposals you're putting forth.
Sure, yeah, they've got ideas. The White House has ideas. Ways and Means has ideas. The Senate Finance Committee has ideas. So we work those together, and then once we put that out, then other members not in those committees, they also have ideas, and they'll say there's something significant they want to be able to do. Welcome to a very messy republic. We're pretty noisy, and this is how we work things out.
Yeah, I bet the lobbyists are going to be working overtime trying to get their words in on this
They
too.
will. Yes, they will.
It's all happening at the same time that the president is carrying out his own negotiation on a global level, talking about tariffs, talking about security issues, talking about things that he'd like to see happen. We're now looking at potentially February 1st for tariffs of 25% on Canada and Mexico, 10% additionally on China. You think that happens, or how do you even prepare for that with the legislation that you're putting forward and all of this? I mean, is that in the back of your mind? You think that's a negotiation? You think that actually happens?
Yeah, it affects the global economy on it. So a couple things is we want more international trade. That should be a basic benefit. We've been free traders in America since before we were a country. It's one of the arguments in the Declaration of Independence from England is that they were suppressing our trade around the world. So we've been passionate about trade for a long time. When other countries put high tariffs on us to be able to block our products going to them, the president's been pretty clear. We're going to put tariffs on you. We're going to try to bring levels down on this, or we're going to equate to you. But if you want to get access to the American market, you've got to open up your markets as well. President Trump and his team was very active in doing trade agreements. President Biden was, to our great frustration, would not go get new trade agreements. He would tweak existing, but he wouldn't go get new agreements. We need to go get new agreements around the world. And as far as Canada and Mexico, it's pretty clear. The president's said, hey, I want to negotiate. I want to talk about border. I want to talk about fentanyl. I want to talk about the issues that we've got in all these trade agreements, whether it be softwood lumber, whether it be dairy products coming from Canada. Those are big issues to be able to negotiate. And he says, let's actually get them resolved. And in the meantime, I'm going to put a tariff to try to get you to the table to try to get things resolved. I don't think he's looking for tariffs long term, but I think he's looking for things to be right for American companies to be able to trade more.
Is Canada really the problem with fentanyl?
Our issue with fentanyl in Canada is just enforcement there and seeing what's actually coming from the northern border to the south. We're seeing some movement of fentanyl from there as well, much more from Mexico. The primary issue is, quite frankly, China. I think that's why the president put a big piece on China to say if China actually stops sending precursors to Canada and Mexico, we'll have less supply actually coming at us. We got to deal with our desires with the issue of demand in the United States, but also we got to deal with the supply issue at the same time.
Senator Langford, thank you for the peek behind the curtain at the messy process that's taking place. We hope you'll come back and tell us more as things progress and you get a better feel for what's going to wind up in that final bill.
But we look forward to the conversation.
Senator Langford, thank you. Let's get back over to Andrew in Davos. Andrew?
Hey, thanks, Becky. I want to discuss the future of work with our next guest, Workday CEO, Carl Eisenbach. It's great to see you, sir, as always.
Great to see you, Andrew.
One of the things we talked about yesterday, I think it was yesterday, all the days come together now. Mark Benioff from Salesforce, a partner of yours, was talking about AI and was talking about the future of the workforce with Agentforce and the like. But then we started talking about how many new engineers he was thinking he would need to hire. And he said none, because AI was that powerful in terms of helping his firm really be able to do things that they couldn't do, make them that much more productive. And I'm curious how you think about that, because we all think about like the future of labor.
Yeah.
Your whole business is dependent on labor, I imagine.
Yeah.
And how you think about that dynamic.
Yeah. You know, it's a great question, Andrew. Our business is dependent on labor. Today, it's dependent on human labor.
Right.
Going forward, it's going to depend on both human labor and digital labor, right? So there's always going to be incremental labor that's being added, and someone has to protect all of those employees, whether they're human and digital. They have to onboard them, right? They have to have policies, they have to have controls, right? They have to have access, right? Someone has to manage them. And we think we're uniquely positioned to manage.
You're thinking, when you use the phrase digital labor, you're thinking that you're actually going to be onboarding a digital labor, like not a real person, but a digital labor that's going to have instructions about what they do and how they do it.
I absolutely do believe that. If you think about what everyone's talking about here in Davos is agents, and we're moving into this world of agentic future. If you think about what we do today, we onboard human employees. In the future, when these new agents come into work, someone's got to manage them. Someone's got to secure your enterprise. Someone's got to protect your enterprise as they come in. And I think there will be people, and we're going to be one of them, that manages the entire labor force, whether it's human or digital, and they're going to peacefully coexist on a platform in a secure way. And there's no one better positioned than Workday to do that. So while you may see some decrease or moderation in human capital from a human side, there's also going to be increase in digital labor.
What is the defensive moat, though, around that? And I ask because if AI is as good as we keep hearing it's going to ultimately be, won't I, too, be able to build that app or that software package that is able to instruct my digital labor to do what it's supposed to do?
Yeah. So the moat is all around data. Everyone spends a lot of time talking about AI, and I think you would agree at this point, Andrew, the output of AI is only as good as the data you're training off of. And the moat we have today is we have 70 million employees on our platform in a highly curated platform, all the same data set. And not only do we have all that data, but we understand the context of what's happening with that data. And we're processing now 800 billion transactions a year on that platform, which gives us an ability to train off of that data that is so clean to drive true output that will drive business value around AI. One of the things I see everyone talking about, even here this week, is the impact of AI. And everyone's talking about it and how it's going to reduce your costs to operate the enterprise. While that is true, it's going to drive efficiencies. I think we need to turn the conversation, how can we leverage AI to drive growth in our corporations? How do we drive enterprise growth through the use of AI? We need to take those savings and apply it to growth. That's the opportunity around AI. It's not just a cost-saving exercise.
Are there any trends you're seeing? I mean, I remember talking to you were his successor, or he's your successor, Neil, about different trends over the years where there was stuff in the data about what's happening with employees right now. I mean, is there anything right now that's jumping out at you?
Yeah, so listen, we do see a lot of data. Today, we're processing almost 1 million applications a day on top of Workday. That's a 3-to-1 ratio on the number of job recs we see on the system. So while there's still jobs being created on top of the Workday platform, it's actually harder and harder to get access to those jobs because the demand is outweighing the supply for jobs today. So we are seeing that, but we're still seeing growth. Everyone talks about AI and the impact of the human workforce. It's moderating, but there is still growth, and that growth will continue with every tectonic
Well, we keep
shift.
saying that there's a shift in terms of the power, that actually labor is losing power to management, right? There was a period of time where everyone said that labor had more power over. Do you see that being the case? If you're saying there's a shortage?
So here's what I see. We talk about the power of AI. We're truly in one of the most revolutionary tectonic shifts we've ever seen in technology with AI. We think that is going to drive an AI, skill set revolution. What I mean by that, we're going to move from a world, Andrew, where today we work with technology, you work with technology. In fact, most people spend the majority of the day using technology. Yep. We're moving to a world where technology is going to work for humans. And what that's going to do, it's going to free us up from those mundane tasks, and we're going to go reskill our workforce, and we're going to go reskill management. And I don't call it soft skills because I think they're life skills that we need to bring back into the enterprise. Empathy, being authentic, having conflict resolution. How do we think about emotional intelligence? All of these things I think we've lost because we spend so much time using technology is going to free us up to go focus on those life skills and soft skills. And I think management is going to be even more effective because of the power of AI going forward.
Carl, thank you. It's great to see you, sir.
Great to see
Hope
you.
to see you back stateside. Meantime, it is just past 8 a.m. right here. I shouldn't say here on the East Coast. It's just past 8 a.m. Just past 2 p.m. If you're watching here in Davos, Switzerland. We're on Squawk Box on CNBC. I'm Andrew Ross Sorkin. I'm at the World Economic Forum. Becky is at the NASDAQ market site in Times Square. Joe is off today. I want to quickly show you where markets are headed right now, ahead of the jobless claims data we're going to be bringing you very, very shortly. Futures right now, 44 points up on the Dow. The NASDAQ off about 93 points. The S&P 500 off about 6 points. And let's show you treasuries. We're looking right now at the 10-year and the 2-year note. The 10-year sitting just about 4.642. The 2-year at 4.3.
Thank you. Shares of Charles Schwab are up more than 8% so far in 2025 and 26% over the course of the last year. On Tuesday, the brokerage giant topped the street's revenue and profit expectations for the fourth quarter pretty handily. That stock was up sharply on Tuesday as a result. I think at one point I saw it up by 7%. The company said investor engagement surged following the election. The company, of course, has a new CEO, and that would be Rick Wurster. He took the helm at the beginning of the year, and he says the company is positioned for strength and poised for liftoff in 2025. Rick Wurster joins us right now. And Rick, it's great to see you this morning.
Becky, really nice to see you. Thanks for having me on.
Thanks for coming in. So let's talk about why you think you are positioned for growth. The numbers were really strong, stronger than the street was expecting. I think you beat by 10 cents or something on the top line, 101 versus the 91 cents the street was expecting. Revenue was up 20%. That was a pretty strong turnaround from what we'd seen in the quarter before. What happened?
Oh, we have engaged clients. In terms of our being ready for liftoff, we're number one or number two in the two fastest growing areas of the financial services market. We have what we think is the broadest set of ways for investors to engage and the broadest methods for people to come and find us, whether it's digitally, whether it's walking into a branch. And there's a bull market for ease. And so being able to find us in multiple places and do more in one place, that's leading to lots of client growth. And that growth is what's accelerating our stock.
Where are the clients that are coming in? Who are they?
We see clients across the board. I think a little known fact about Schwab is that about 1 out of every 6 households that have more than $20 million in our country work with Schwab. And at the same time, we're crushing it with younger investors. Roughly a third of our new to Schwab households last year were from clients under the age of 30.
That shocked me. I was reading through some of the demographics numbers on that. A third were under age of 30. How many were under the age of 40?
It was more than 50%, close to 60%. So we really are doing well with young clients. And our model is that we attract them, and then what we do is we try to do everything we can to delight them and grow those relationships over time, both through digital channels and through in-person interactions.
What delights them? What makes them happy with that? What makes them stick around? And I guess I ask because if you think of younger investors, a lot of times people think it's Robinhood, right? That stock was up about 192% last year versus the 26% that you guys were up. What are you doing to find these younger people, and how do you keep them once you find them?
Well, our success with young investors is driven by the fact that we can do so much to help them. So young investors often are figuring out how to pay off their college debt, or they're figuring out how to buy their first home. And investing is an important part of that journey. And we can help them both with the investing part, but with also the broader life and how it's all going to come together from a financial standpoint. That's where we really stand apart. It's not just about a trading app. We have what we think is the best trading app in the market. We do more trades than the next 2 closest competitors in the retail brokerage space. But it's also because of everything we wrap around it.
And where do you find them? Are you finding them online? Are you say you bring them in person too? Where are the majority of these new younger customers come in?
I think our younger clients tend to engage with us first digitally. And we have a great brand. We have a terrific marketing department that goes and finds young investors where they are and introduces content to them that's of interest to them. We have about 35 hours a week of content that is curated specifically for newer investors that are just figuring out how to invest. We have a capability in our Thinkorswim trading tool that allows young investors to practice investing without using real money. So it allows them to get used to what trading and what investing is like.
So they're like, whoops, what did I just do?
Right. That's a good way to learn.
Right. So what do you think when you hear the hotshots like a Robinhood or an Interactive Brokers or something who comes in? How do you guys measure up? How do you think of them as competitors?
We feel great about our positioning. Being number one or number two in the 2 fastest growing segments of our space is a great starting point. Having the breadth of capabilities that we have, which we don't think can be matched in a period where people value that more because they value ease and they want to get things done in one place. Having that breadth of capabilities is very helpful. Having the lowest expense base in our industry relative to client assets is a big advantage, and being able to work with clients in multiple ways. We often find that as clients' lives change, big moments, whether it's paying off their college debt, whether it's buying a home, whether it's having their first baby or getting married, all of those things, people tend to want to come into one of our branches and have a discussion about it, or talk to one of our experts on the phone. And being there for them in multiple ways, I think, is what sets us apart. It stems from seeing through clients' eyes and doing right by them.
So you get frustrated when you see the stock gains of somebody like a Robinhood?
No, listen, I think we're focused on delivering for our clients. So I don't look at, with envy at anyone else's stock price. I look at nailing it for our clients. And what I feel great about, we had a lot of outstanding quarterly numbers that we just reported on Tuesday. The number that gave me the greatest satisfaction was the fact that our clients' satisfaction scores across our major businesses are all at all-time highs. That's what I'm excited about.
Let's talk about some of those other numbers. Net interest income was up 19% to $2.5 billion. That's the biggest portion of your revenue. What happened there? Why did it ramp up like that? Net interest income obviously is the difference between what you are paying or the interest that you have to pay to people to get them to keep their deposits there versus what you get paid on your interest.
We've seen a real stabilization of cash deposits at Schwab, and that's what drives our net interest margin. And if you look back the past couple of years, what has happened is clients have been, at our suggestion, finding places to put their cash where they could earn more.
Okay.
And now we're down to levels of cash where it's really about their transactional needs. And so we saw the last 4 months client deposits grow by about $52 billion, and so that has added to our net interest margin.
And the net interest margin, again, with rates, let's just talk about what the Fed has done right now. Is it harder for clients to find more attractive places to put their money? And that's just a broader example of where the Fed stands right now.
I think it's a great time to be a fixed income investor right now because you can find yield. It wasn't too long ago we were talking about zero rates, and now clients can find great rates in a lot of different places. For me, if you're a retiree right now buying 30-year tips, you can get a 2.5% real yield. Not really any inflation risk and not a lot of risk generally. To be able to go out and earn 2.5% real, it's as high as they've been in a long time. It's a good time to be a fixed income investor.
You all have talked about some opportunistic buybacks at this point, stock buybacks. We haven't seen that in about a year. What are you looking at? Because it would have been more opportunistic maybe at the end of last year than right now, just given where the stock's taken off. What would make you do the share buybacks at this point?
Well, we've been building capital, and we've been building capital towards what we expected to be the new Basel III regulations.
Right.
And we're now at a place where we meet the new Basel III regulations should they take place. And we're at a point now where we do think we're getting ready to be able to opportunistically buy back our stock.
And if Basel III goes away, you would buy more aggressively?
Well, I think we'd want to think about the safety and soundness of our firm and what the right level of capital is. But certainly, we would be well above the capital targets that we shoot for.
And Basel III, in your opinion, was that? I mean, most bankers will say that they thought that was too aggressive.
There were elements of it that I think made sense, and other elements that didn't. We commented on it like many other financial institutions, and I know the Fed is thoughtfully looking at it and likely to repropose some form of it. And I think it's been a good example of being able to have a voice and share collectively our industry's thoughts with the Fed, and they've been responsive.
You all have been looking at having spot crypto trading later this year. What has to happen before that comes out?
Well, first, crypto's been of incredible interest to our clients. We had a 400% increase in traffic to our crypto site in the fourth quarter alone, 70% of whom were prospects that we don't work with. So what's exciting to us about crypto right now is there's a lot of interest, and when there is interest, they come to Schwab because they know it's a place they can trust, and we offer lots of ways to invest in crypto at Schwab. We don't yet offer spot crypto because of the regulatory environment. We think that is likely to change, and when it does, we're going to be quickly, we'd like to be quickly into the market.
Because you want to be able to offer everything that somebody's interested in.
We want to be able to meet someone's crypto needs in a variety of ways. Today they can invest in ETFs, they can invest in futures, they can invest in closed-end funds. We'd like to add spot crypto at the right time.
What did you see post-election? Additional interest in trading, additional optimism from the retail traders that you're dealing with?
We did. We saw one sentiment increase. So we saw in November and December, we measure sentiment among our trading activity, seeing what they're buying and selling. Trading activity increased in November and then increased again in December. And then we saw activity increase. And so our December daily average trades were up about 30% over the prior December and up over the prior month. So there definitely has been an increase in sentiment and activity.
Rick, I want to thank you very much for joining us here in-house. Rick Worster, again, the CEO of Charles Schwab. Thank you.
Thank you for having me.
It's great to see you. Andrew, we'll send it back over to you.
Great interview, Becky. When we come back, we got some more interviews in Davos, including a chat with Scale AI's Alexander Wang. Speaking of AI, Elon Musk biographer Walter Isaacson is going to be weighing in on a brewing feud between Musk and OpenAI's Sam Altman that involves Satya Nadella here in Davos as well. Stay tuned. Squawk Box coming right back after this.
Com.
Things were all smiles for tech leaders attending President Trump's inauguration, including Elon Musk. But in the last 36 hours or so, Musk has caused friction for the new administration. He got into a spat on X with OpenAI's Sam Altman over the White House's new Stargate AI project. Hours before that, Altman had appeared at the White House with Trump as he announced the Stargate plans. Joining us right now to talk about this and Musk and other billionaires' impact on the government is Elon Musk author Walter Isaacson. Of course, he's also a professor at Tulane University. He's an advisory partner at Perella Weinberg and a CNBC contributor. And Walter, you're a great historian who has looked back at some really phenomenal figures in time. I think of Ben Franklin, your book on him, your book on Einstein, your book on Leonardo da Vinci, Steve Jobs, and now Elon Musk. And Jamie Dimon was with us yesterday. He said, you know, Elon is our Einstein. And I think that is true, but I think part of the reason people think it, not just because of how many spectacular things Elon has done, but also because you've put him in that pantheon. You only look at really interesting people. What do you think of what's happened in the last 36 hours or so between Elon Musk, the administration, Sam Altman, and beyond?
You know, if you want to understand Elon Musk, just look at the way he's been for the past 50 years or so. And there are 2 chapters in my biography of his relationship with Sam Altman and the forming of OpenAI and Musk's fury at Sam Altman when OpenAI no longer becomes open and it no longer becomes a nonprofit. And there's a simmering resentment there. As you know, there have been lawsuits there. And I've seen them together. It's sort of this interesting thing that Musk can do is be both a total enemy, but also somebody who feels like it's just a gladiator contest. You know, we were in one of these conferences not long ago. I saw the 2 of them talking together. And yet, when Trump rolled out Sam Altman, along with Larry Ellison and others, to talk about this new Stargate AI storage system, and Musk was not a part of it, you just knew from the history that you see that that would cause another eruption in Musk. And Musk's genius comes in, you know, from his amazing ability to do things, but it's driven by a darker force of intensity that erupts time and time again.
I think that's something that the new president, President Trump, will just kind of gloss over because he likes the good part of Elon and what he gets in the relationship there, or does it risk a broader fissure with these 2 who have worked so closely together?
You know, the broader fissure is the rift between what I would call Musk and the tech bro community in terms of having a growth strategy and even wanting H-1B visas. That was one of the flashpoints of this, versus the more populist Steve Bannon crowd who doesn't feel that the tech companies of Silicon Valley should have that much power. And we saw in the inauguration who won that, because Steve Bannon said by the end of inauguration day, Elon Musk, I'll make sure he's not around. And it was Steve Bannon who wasn't around, and there's Musk sitting in front of the Commerce Secretary designate. And so that's the big one. The rupture, as you know, I've shown in the chapters in the book that involve AI and its development, come from Musk's passion to create safe AI and robotics and his rivalry with Altman. But there's not a philosophical, at least a major philosophical dispute. And this is a problem because this is Musk with his own interests and sometimes resentments taking on Sam Altman. And that's going to have to be resolved by Trump.
I think Andrew has a question too.
Andrew.
Hey, Walter, hey, it's great to see you. One of the things that I
Hey, by the way, let me just say, your Satya Nadella answer that you got, was it yesterday, about I got the money to do this, even if Elon Musk said there's the money? That was a classic interview. Thanks.
Thank you, Walter. As it relates to that, though, you know, one of the things that I was curious about from your perspective is when Elon sees this all happening, and clearly he was left out of this particular transaction with OpenAI. You know, one of the worries that I think people had or about his relationship with Trump was, you know, would it impact an OpenAI? Would he use whatever influence he has to try to shut down certain things that OpenAI or Jeff Bezos might try to do because they're competitors of his? Both Sam Altman and Jeff Bezos have been quite public about saying while they have lots of questions and issues with maybe certain things that Elon's done, that they don't think that he would use his influence to hurt them. Do you think that's true?
Yeah, I think that in his rational moments and, you know, clear thinking, he knows he actually kind of supports Jeff Bezos' ability to go into space, even though he's a competitor. SpaceX is a competitor to Blue Origin. Likewise, you know, his AI company, XAI, is a competitor to OpenAI. And it's just in these late night tweets. I mean, he's done a flurry of them in the past 4 or 5 hours. He lets his resentment show. The question is, will he actually try to stop OpenAI and Sam Altman for doing something, or will he just sling in barbs on X as he has been doing? And I suspect it's the latter.
And Walter, it appears that his barbs are aimed at Sam and OpenAI as opposed to President Trump. But at the same time, this announcement was made by President Trump behind a presidential lectern, by something that President Trump was trying to suggest to the public he was very proud about. And I wonder whether you think that undermines the relationship in any way, or you think that President Trump says, oh, he's not really trying to point the finger at me, he's trying to troll this other guy.
Well, what's also interesting, and you just described, is Donald Trump deciding to make that announcement in a field that's right core to what Elon Musk is doing, and to have Larry Ellison there, have Sam Altman there, make the announcement, but not have Elon Musk be a part of this whole thing, or for that matter, some of Elon Musk's, colleagues, like a David Sachs. And it's sort of like when Biden had a summit on electric vehicles and invited Mary Barra of GM and the other major companies, but not Tesla. This got into resentment. So what was Trump thinking? Why does Trump do this and cut out Elon Musk? Is it Trump playing a game too? I don't think so yet. I don't think so. I think this relationship is solid.
This felt like it was more of a Masa-san who had come with the $100 billion. Trump immediately said, make it a $200 billion investment. Masa-san maybe came back with Larry from Oracle and Sam. But Walter, now he's got an office in the executive building next door to the White House. We hear he has a White House email, although I haven't seen any emails from him on that. I mean, he's in a much closer position. You point out that over the last 4 or 5 hours, he's had a lot of things that he's been going back and forth. He's very frustrated by people accusing him of this Nazi thing. He's forwarded some stuff from Benjamin Netanyahu. Now he's making some other postings on this. I guess, have you spoken with him lately? Where do you think he stands? Because he seemed like he was in pretty good spirits at the inauguration. But you're right, some of this late night texting or tweeting doesn't quite match up with maybe where I thought he would be at this point.
No, I've talked to him recently, but if you, as you know from the book, as you've read it, Becky, he just goes in waves. Sometimes he's in engineering mode, sometimes he's in giddy mode, like he was at the inauguration, just jumping up and down and doing things. Sometimes he's in engineering mode when he's focused, and sometimes he's in what his former girlfriend Grimes called demon mode, where he just gets dark. And I do think that sometimes late at night he gets into that dark demon mode. And I think you're right, Trump is very transactional. This whole thing about 100 billion, let's make it 200, let's make it 500 billion. I think just Trump did that in a typical Trump fashion. It wasn't a gig at Elon.
What do you anticipate, expect, and while he may very well welcome the broader moves of a Bezos moving into space, I mean, the AI battle with OpenAI seems so personal, and obviously there's that long history. We've talked about it often in the past, but Elon funded Sam Altman. Sam Altman agreed to not take any equity in it. He's now looking to take an equity stake, and Elon was tweeting about that yesterday, or Xing about that yesterday, posting on X.
Absolutely. I mean, if you saw, the chapters in the book when they start OpenAI together, and Musk tries to push Sam out early on in that relationship, and then they come back together. Then Altman, changes it, and Musk's resentments begin to rise. And you put your finger on it. Sometimes Musk just gets very resentful, and has trouble containing those this anger he feels about what Sam Altman did. I think that Musk's power in the federal government is pretty secure because, as you say, he and Trump are very close. But Musk has been able, over the past week, to make sure that his people are embedded at OMB with Russell Vought and others, embedded in various departments. And I don't think that's going to be used against personal vendetta against Sam Altman. It's going to be used for this mission he has for government efficiency.
Walter, it's fascinating. I feel like we can't have you here often enough to talk about these things because it's affecting so much of what happens in business and in politics these days. But thank you to Walter
Thank you
Isaacson.
so much, Becky.
Hey, by the way, are your book sales taking off again?
Yeah, but it's not about the books. I think people want to have the playbook of How has
That's
he
what I
done
think
this in the
too.
past 20 years?
They
And
gotta
how
look
he's
at
going
this.
to implement it? And this
Anybody
is the
who hasn't
playbook.
read it yet already needs to. That's exactly what I would think. This is going to be pretty important. Thank
I
you,
think
Walter.
people in the federal government should read it right now. They
Yeah.
see what they're coming at
I
them.
think so too. All right, when we come back, we've got breaking jobless claims data. Stay tuned. Squawk Box will be back after.
Welcome back to Squawk Box. Rick Santelli here, live CME HQ. Breaking news: initial continuing jobless claims. On initial claims, 223,000. That's a little higher than we're used to. That would be the highest level going back to the first week in December of last year. And keep this in mind: we haven't been over 250,000 on initial claims since the first week in October of 2024. Continuing claims also a bit higher. We're watching yields move down on this info. 1,899,000, literally a whisker under 1.9 million. We haven't been above 1.9 million now in 33 weeks. 33 weeks, yes, that's correct. And in the rearview mirror, subtle revision, 1,853,000 now is last week. We know we were closed Monday of this week for Martin Luther King Day. That next week will probably show us some seasonal adjustment issues, but these numbers right here should be pretty straight, and they have moved up a little bit. As I said, yields moving down, but maybe the big news in yields, if you look at yesterday's yields in treasuries, they traded above the previous day's highs. Today we're already trading above yesterday's high yields. Looks like the market on interest rates has had a subtle turn to the upside. Andrew, back to you.
Thank you, Rick. We are here in Davos, Switzerland at the World Economic Forum, and for the first time on the show, we're going to, not for the first time on the show, but for the first time, we're going to be talking about AI, global AI. Of course, we've been talking about that all week, but first time on the show, Scale AI founder and CEO Alexander Wang. His company provides accurately labeled data to help companies train their AI tools. And back in 2022, he became the youngest self-made billionaire in the world. Pretty amazing.
Thanks for having me on.
I want to go straight to what we were just talking about off camera, which is the idea of where the US is on AI versus China, because you have some very surprising statistics that I think will probably, frankly, freak out some of the viewers.
So yeah, first of all, the AI race and the AI war between US and China, I think, is one of the most important issues of today. We took out a full-page ad on the Washington Post on Tuesday saying that, you know, America must win the AI war. And so this sort of relative race in AI between the US and China is critical. Today, we released Humanity's Last Exam, which is a new evaluation or benchmark of AI models that we produced by getting, you know, math, physics, biology, chemistry professors to provide the hardest questions they could possibly imagine that are relevant to their recent research to really put the test to the models. To give you a sense, no model is getting above 10% on this test. That being said, you know, what we found is that DeepSeek, which is the leading Chinese AI lab, their model is actually the top performing, or roughly on par with the best American models, which are O1 from.
Okay, so I think we have been all under the impression that the US was way ahead of China as it relates to AI, in large part because we have access to, you know, NVIDIA GPUs and chips and other things that supposedly the Chinese do not have. I keep hearing from people all week, from people, Chinese AI executives, that they say, we're so close, and by the way, we're doing it with one hand tied behind our back. Our algos are better. We're actually going to figure out how to do this, do it better than the US, and in even a more energy efficient way, because we don't need these super powerful chips. Are they happen to be right?
There's two things happening. First, it is true, it has been true for a long time that the United States has been ahead. And that's been true for, you know, maybe the past decade. That being said, you know, the very recent event on Christmas Day, you know, about a month ago, DeepSeek released a model, which, by the way, I think is symbolic that the Chinese lab releases, you know, an earth-shattering model on Christmas Day when, you know, the rest of us are sort of celebrating the holiday. And they released it to much fanfare, and then they followed up with their reasoning model, DeepSeek R1, which is the one that we evaluated as top of the leaderboard. You know, the reality is yes and no. So you know, the Chinese labs, they have more H100s than people think. You know,
and these are the highest powered NVIDIA chips that they were not supposed to have.
Yes, my understanding is that DeepSeek has about 50,000 H100s. Which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, you know, I think they have more chips than other people expect, but also on a go-forward basis, they are going to be limited by the chip controls and the export controls that we have in place.
How do you, I mean, you work with everybody, so I don't know if it's fair or unfair, but how do you stack rank these large language models and who ultimately is going to be a winner? Or are they all so close and it gets commoditized?
The interesting thing that we see right now, so we actually specialize in this. We've produced our SEAL evaluations, our safety evaluations and alignment labs, evaluations which measure across many different dimensions. We measure across math capabilities, coding capabilities, multilingual capabilities, and reasoning capabilities, and many different dimensions, including tool use and agent capabilities. And what we see is different models are better at different things. So it's hard to put a clear stack ranking among all the models. You know, for example, the OpenAI models are extremely good at reasoning, but the Anthropic models might be really good at code. And sort of there's a diversity of capabilities of the models. That being said, I think what we're seeing in general is the space is becoming more competitive, not less competitive.
I keep hearing from business leaders here that they're all playing around with, you know, OpenAI, or they're playing around with Claude, which is the Anthropic model, or they're playing around with Gemini, et cetera. And then they're going and using Llama. They're going to find some open source version to try to get close to what they could approximate these other guys doing because of just the different price points of these things. Do you think that's the future of this?
I think
like in a Linux world?
There's definitely a dimension. You know, it comes down to ultimately the level of capabilities and intelligence that are required for your use case. I think ultimately what we're going to see is, you know, what we do with all the leading labs, including OpenAI and Google DeepMind and Meta and many others, is continuing to push the frontier and push the boundaries. And so how do we leverage data, given that, you know, as an industry, we've sort of run out of publicly available data? How do we generate new data to keep pushing the frontiers? And our belief is that, you know, advanced capabilities are going to enable incredible use cases where you're going to be willing to pay for those increased capabilities. But for the more simplistic use cases, those will probably go more towards open source or more basic models.
We've been talking all morning about Stargate and the debate happening on Twitter between Sam Altman and Elon Musk about whether they really have $100 billion or $500 billion. Satya Nadella was sitting in your chair just yesterday saying he's got $80 billion, his money's real. He took to Twitter. What do you make of all this? You know all these players.
You know, so much is on Twitter anyway, so I'm not sure I have
X, we should say.
Or yeah, X. But I mean, I think one thing that is very real, regardless of sort of Stargate specifically as a program, is that the United States is going to need a huge amount of computational capacity and a huge amount of infrastructure. So this was actually we wrote a letter to the Trump administration on recommendations on how to ensure that the U.S. stays ahead. And one of them was really around infrastructure. We need to unleash U.S. energy to enable this AI boom. And that's clearly what we're seeing right now, which is, you know, in addition to the Stargate program, many of the major AI companies and major clouds are going to be looking to build giant data centers. So
the reason I asked this about the different companies doing this, do you ultimately think we need 5, 6, 7 companies all trying to build frontier models? Or, I mean, there's been a talk forever that, you know, in a different, if Lena Khan hadn't been running the FTC, would have Amazon wanted to buy Anthropic already, for example? Or would have Microsoft bought OpenAI? Or would have some of these folks, so there wouldn't be as many, everybody competing against each other in the same way? I don't know, maybe you think the competition's great. I just don't know how long term, how many models there ultimately would be like that.
I mean, our view is actually that this is potentially going to be one of the greatest markets or the greatest industries ever. You know, right now, let's say there's between 10 and $20 billion of LLM-based revenue. And if you believe that we're actually on a track towards superintelligence or AGI, then it stands to reason that that's going to go to $1 trillion or more of revenue. And so if you're looking at a market that's going to go from, let's say, 10 billion to 1 trillion over who knows how many years, I tend to believe a fewer number of years. I think we're sort of in the 2 to 4 range.
2 to 4. To get to AGI. And what's your version of AGI?
I think, you know, obviously there's many definitions. You know, the definition I believe in are powerful AI systems that are able to use a computer just like you or I could, and could use all the tools that a computer could, and could basically be a remote worker in the most capable way. You know, one of the ways I think about it is one of the areas where capabilities have moved the fastest is coding. And you know, let's say, you know, Mark Zuckerberg said on Joe Rogan that we're going to have you know, mid-level software engineers this year. Let's take that as at face value. Then you're pretty close to having AI development agents that will work on their own, and then you're at self-improvement. Right. And once you have self-improvement models, the models get very good very quickly. So I believe that. So again, economically, if you believe this industry goes from 10 billion to 1 trillion, you should have more competition. This is going to be one of the biggest industries in the world, and frankly, we should have more players.
Workplace question for you. You were very outspoken about switching or talking about, instead of a sort of DEI framework to this MEI framework. I'm curious what the reaction has been here in Davos this year about that topic for you.
Well, it's interesting. So this was last year when we rolled out MEI.
But now with Trump winning, the world has moved towards you.
Yeah, in fact, Trump mentioned in his inaugural speech, you know, a removal of DEI programs, making sure that hiring was merit-based. And I think what we're seeing is sort of a broad-based realization that, you know, the meritocracy is the core and fundamental, you know, North Star. Well, you know, we operate in an incredibly competitive and fast-moving industry in AI, and I don't have any option but to hire the best and most brilliant and most capable people for every single job inside the company. So as a result, we have no option but to be meritocratic and to practice MEI, and in the process, we achieve diversity.
What do you make of President's executive order as it relates to this?
Which one?
Around DEI. Because, you know, he has he's made an executive order that if you have DEI in your title, for example, that you should be fired. There's now some efforts, if DEI is not in your title, that other employees are supposed to, you know, ID you effectively, and he wants to remove all of those people. Is your sense that they should be removed? That should they be recast? What should happen?
I haven't read the exact text of the executive order, so I'll be sure to look to that. But I think in general, what we saw was an over rotation towards DEI. I mean, I think diversity is not an evil. It's just the full over rotation towards DEI resulted in a bunch of strange behaviors that weren't conducive to meritocracy and weren't conducive to business success.
Alex, it's great to see you. Thank you. It's fascinating. Fascinating. Come on back. Are you coming to New York ever? Come to New York.
I would love to come to New York.
Okay. You have an invitation to sit on the set, and we'll continue this conversation. Becky's back in New York. Becky, back to you.
That was fascinating. Andrew, thank you. A lot to think about with what Alexander was talking about. When we return, another can't miss interview. This time we're going to hear from the CEO of broadband giant Liberty Global, live from the World Economic Forum in Davos. Mike Fries will join us. Stay tuned. You're watching Squawk Box, and this is CNBC.
CNBC. Welcome back to Squawk Box. We are live in Davos, Switzerland at the World Economic Forum, and 5G and broadband adoption in focus in Davos. Our next guest provides 85 million connections across Europe. Joining us right now is Mike Fries, CEO of Liberty Global. Good morning to you.
Nice to see you, Andrew.
An annual meeting with you.
Yes, we do.
We get to find out what's happening in Europe. By the way, before we even get into the sort of broadband media ecosphere, in the U.S., it feels like a lot of the U.S. CEOs are very optimistic about things.
Right.
A lot of the folks that I've been talking to, the European CEOs, are very seemingly pessimistic about the state of affairs. And I'm curious, since this is your land, what you think of that.
I bet. I mean, they may come across as pessimistic. They're probably just uncertain.
Okay.
That's a difference there. What does it mean? What does U.S. policy going forward mean for them? And remember, Europe is in a very important inflection point. The Strahi report that came out was a wake-up call for Europe. If you want to increase productivity, increase investment, increase innovation, we better get this regulatory thing right.
Right.
And historically, Europe has not gotten that right, which is a long conversation we can get into. And the telecom sector is a poster child for where they got it wrong. Focused on prices, not focused on investment in infrastructure. And I'm hopeful that the European Commission has received that message and will actually start making changes.
Where are you in the shift of what Liberty Global ultimately is? I mean, I'm thinking of all the things that have happened just basically in the last year. Buybacks, spinning off the Swiss telecom business. You bought Warner Brothers Discovery's controlling interest in Formula E, that's motorsports for what does this ultimately look like to you?
Yeah, well, look at
and John Malone's also has his own designs on the rest of his empire.
Look at, we are following the same playbook that John has been using for 20 years, which is, if you can, in the case of Sunrise here in Switzerland, if a business is better off on its own and will trade better than it does inside the belly of the whale, give it freedom. And that's what we've done here. Punchline is, we issued our shareholders a $9.50 tax-free dividend on a stock that was trading at $18 by spinning off 20% of our EBITDA. Just do the math. We'll do those things all day long, because this is about value creation, not empire building. So we have a telecom business that remains, a pretty big one with, $8 billion of EBITDA. So we have a lot of telecom assets yet to sort of rationalize, crystallize value for. We have a very exciting growth portfolio, $3 billion of assets in tech, media content, sports, infrastructure. And so we're busy. And I think the value creation opportunity, shrinking the value gap, that's what we do at Liberty, and that's what we're doing here.
Curious about what do you think is happening with both unbundling in Europe versus what's happening in the US?
Right.
And also, by the way, broadband, wireless versus physical.
Yeah.
Because that seems to be a major shift that is upon us.
Yeah, I mean, Europe is moving much more slowly in this unbundling, this melting iceberg of linear television, moving much more slowly. Broadcasters.
And why is that?
Because broadcasters here have a much stronger position and presence. It's a fragmented market, so nobody dominates media in Europe. What country are you in? Then I'll tell you. So it's a very difficult thing to dominate media and content. Netflix does a great job, of course, and Amazon, they're all over and they're penetrating widely. But I think people still watch local news, local sports. So I think that's one of the reasons. And so it will happen. Unbundling is inevitable. I think it'll happen here. We're doing those kinds of deals, but just happening on a slower basis. Broadband, we're in both fixed and wireless. Fixed business is healthy. I think we're offering a gigabit up to 2 gigabits almost everywhere. So broadband is good. Mobile, tougher business, lower ARPUs, and Europe faces a 200 billion euro investment gap to get to the magical 2030 goals of fiber and 5G. So we're in a bit of an investment cycle, which is why having greater regulatory certainty is a good thing.
Long term, how big a threat does satellite represent to you? Thinking of what Starlink's doing, Amazon's going to have Kuiper.
I think what they're doing is brilliant. We don't believe, there's two applications. One is, will it replace your home broadband? Unlikely, because we're offering 1 gig, it's going to be 10 gig, and just the economics, the physics of that make that difficult. The second question is, will it be broadcasting to your device? Right. Harder. The cost of that device, they need spectrum in every market to land that signal. Now, I don't underestimate either of those companies. And when my team says, hey, don't worry about it, boss, I say, I'm worried about it, because they have unlimited capital, it seems, and unlimited ambition. So, but I think for the next 5 to 10 years, 5% of the world's population multiplied by the world's population is a big business. If he were to get to 5%, he may not be satisfied with that, but he has succeeded. So I think that's how we see it.
Becky's got a question for you from Times Square.
Hey, Mike, how are you?
Hi, Becky, good.
All right, I want to talk to you about Formula E. I mean, it's something that you now own, I think, 65% of. You bought the 25% stake from Warner Brothers Discovery earlier last year.
Right.
It looks like it's on a phenomenal growth trajectory, 400 million fans. I know you've got 16 cities that it races in on like 4 continents, but it's also listed as like the #1 ESG sport. With this turn we've been talking about at Davos about how ESG and DEI is losing popularity in the United States. How do you market with that? What do you do? And what do you do just as majority owner at this point that you want to change and boost things?
Thank you for that question. Listen, we are very excited about Formula E. It has been net zero since day zero, and it is, a poster child for sustainability for sure. But it's also a really exciting sport. First of all, there are very few global championships, and this is, I think, the second biggest ever to be developed in the last, this century. So it's exciting to be in it, to own it, to drive it. What's happening? The cars are getting faster. Our car on the road right now beats an F1 car 0 to 60 by 30%. So that car is just going to get faster, more powerful. It's inevitable. Fans are excited about this. We have much more of a younger fan base, more female fans. And I think, look, it's a global sport, and at least 400 million. We need 400 million to be 800 million. And Formula One is a fantastic business. Listen, it's done incredibly well, and we think we're in a pretty good wake there, and we're excited about the future. And the teams are exciting. Porsche is exciting. McLaren, Nissan, Jaguar. These folks are in for a reason. The electric vehicle business is only going one direction. You might disagree on when or how many, but we have an exclusive for quite a long time. And in that time frame, we all own electric cars, and that's really where everybody's attention is going to be, including the manufacturer, which matters a lot.
It's fascinating.
Yeah.
I'm curious what you think is going to happen. I know it's outside of your world, sort of, but in the U.S., given the new regulatory environment,
yeah,
do you see massive consolidation happening in media? And then how does that relate back to
a lot more than we've had in the past, right? So I do believe that the floodgates are going to open, at least in terms of deal flow. What will get done, what won't get done, tougher question. But I do think people see a window here opening, and I think they will jump through it, and I believe it'll involve the entire sector in deals that you could probably never consider or imagine in the past. In terms of our business, we're seeing a similar opening in Europe. The UK just changed the chairman of the CMA to, apparently it'll be somebody who's more open-minded about consolidation and the importance of regulatory relief, which is really the message. And I think the European Commission will follow along. So I think there's a global trend towards regulatory relief. I think that's a good thing.
Can anybody catch up to Netflix? I mean, did they just now? It's just
yeah, I don't know. I mean, Disney will try.
Can they?
Well,
can they get close?
I think it'll be tough. I think it'll be
economics
tough.
of where Netflix is now is just in a it's almost like they're in a different business.
I think it'll be tough. Although Disney has a leg up on sports, Netflix is obviously embracing sports. Amazon. So I think the sports question will be a really important one over the next 5 to 10 years. Who kind of owns that? Which is another good reason to own a sport like Formula
One. Okay, Mike, thank you. It's great to see you. Really appreciate it.
Me.
Thank you.
Yeah.
We got a lot more coming up on Squawk in just a moment from Davos, Switzerland, and Times Square.
/30.
Welcome back, everybody. A programming note for you. Tomorrow, right here on Squawk Box, Verizon CEO Hans Vestberg will join us for our first on CNBC interview after the company reports its quarterly results. A few earnings headlines this morning of note. American Airlines beating expectations, but that stock is way down. We're looking at shares of Apple right now. Let's try American Airlines. Maybe we can get that up. This is a guidance story. For the first quarter, American is projecting a loss of somewhere between 20 to 40 cents a share compared to the street's expectations of 4 cents a share. American thinks that the big reason for the difference here between what the street was expecting and what they actually are expecting is that some analysts didn't fully account for the extent of labor contract costs that take effect during the first quarter. You can see right now that stock's off by about 4.8%. It's actually shown some improvement through the course of the morning. Again, beating on the current expectations, but warning, or on the quarter's expectations, but warning that the current quarter is going to be more impacted by those labor costs. Earnings also out from GE Aerospace, the company topping fourth quarter profit and revenue expectations and issuing some encouraging EPS guidance. That stock up by better than 7.6%. And one non-earnings headline for you, Saudi Arabian Crown Prince Mohammed bin Salman telling President Trump his country wants to invest $600 billion in the United States over the next 4 years. The Saudi state news agency reporting a phone call between those two leaders. That was President Trump's first visit abroad in his last administration. We'll see how this shapes up. A quick final check on the markets this morning. Dow futures now indicated up by about 32 points. The S&P futures down by 6. Remember, the S&P set a new high yesterday. And the NASDAQ indicated off by close to 100 points. Andrew, wrapping things up in Davos, phenomenal the last several days that have been there. I hope you get some well-needed rest, maybe in a little bit.
It ain't over. We got President Trump in 2 hours from now,
That's
and
right.
I'm actually going to go do an interview right now with Governor Sarah Huckabee Sanders and Andy Beshear. So a lot more to come. Stay tuned, and we'll see you tomorrow.
That's right. Right now it's time for Squawk on the Street.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl King today with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-market fairly steady following Wednesday's intraday high and that brief trip above 6,100. Corporate earnings dominate today. Jobless claims at a 6-week high. The president does address Davos in a couple of hours. Our roadmap begins with stocks trading near that record territory as investors digest another big batch of earnings reports.
Plus, Elon Musk and Sam Altman continue their online feud on X. This over that $500 billion, or it could eventually be a $500 billion Stargate project. Apple's the worst performing stock in the Mag 7 names so far this year. Another major firm cuts its price target on the name.
Let's get to this market's record run as we finally got back above some all-time highs. Although Europe, Jim, year-to-date is outpacing U.S.
I'm surprised because we're getting a lot of reports about how people are more negative about Europe than ever. Larry Fink, the CEO of BlackRock, just saying unmitigated negativity. So it's obviously a contra rally. If you have to be there, go to Santander because they're going to have the best numbers. But look, I think it's going to be short-lived because I've tried to find companies that are doing really well in Europe, and I can't really find them. I see many that are doing well in the United States, but some today are reflective of negative things over Korea, and we have to stay close to that. I think that I know David likes me to opine in the first minute and a half about NVIDIA. There's a company, let's just get this straight, SK Hynix, they do DRAM, they do NAND, they've got high bandwidth, and they were saying that NAND was weaker, and they're saying that that DRAM's weaker, not high bandwidth, but it doesn't matter. People decided the long knives are out again for NVIDIA. It was at 47, David, off of random kind of, we're gonna get there, stargazer, that's what I call it. But that's leading the NASDAQ down, not Apple, for once.
Yesterday, we saw the move up in any number of the names associated with this project.
ARM, we were part of that stoking.
ARM in particular, obviously Renee Haas joined us in the early part of yesterday's show, but clear to me exactly what the benefit to ARM initially is, and I think there is still some.
They have a SoftBank has a position.
Yeah, right. They have this, and there's there's still. I'm looking at some decent research this morning, and certainly people come back to the idea. Well, is SoftBank going to have to actually if OpenAI and SoftBank are both contributing 19 billion, that's what they have now put in to writing, I believe. They're not that liquid today at SoftBank. No. So do they have to actually sell some of ARM?
My case is
yes. Renee would not comment on it, but no. It was notable how much the stock ran up yesterday. Now, it's not a big float at all.
No.
There may be a halfway decent short position. I don't even know, Jim, but it was notable how much that stock.
Oh, I think you're very right. And what Renee said, and I've had Renee on a number of times, including last week when I was in San Francisco. Renee is very specific. Where there are GPUs, there are CPUs. He makes CPUs, and he's got the contracts. And I think that is important and very real. Now, is it very real enough that it should have gone up so much yesterday? I don't know. You know what he said last week when he was on the show on Mad Money? He goes, there are GPUs and there are CPUs, and when there ever are GPUs, then you find ARM. So I would not call it revelatory. I would not call it new, but we have a market that has animal spirits, David, and you can say the same thing on Thursday as you do today, and people take it up again.
You can, Carl, in part because the numbers being bandied about are just so enormous. Now, 100 billion is obviously a big number. Who knows if they really get to the 500 billion? It's possible. You got the Saudis now talking about 600 billion investment over 4 years. By the way, the Saudis are always investing here. A lot of their money ends up here, so it's never clear when you make these kinds of announcements how much of it is actually new
or public
capital.
Or private. We don't. We're still waiting for confirmation on this state news agency report.
Right, and the conversation between the Saudi leader
they're putting out some pretty big
President
numbers,
Trump.
David.
They're putting up some big numbers everywhere.
Big numbers.
Big. Microsoft, by the way, 80 billion in capex spend, not going to be enough to satisfy OpenAI.
No.
This was what we talked about at the open of our show yesterday. I think very much importantly so, and I'm glad we focused on it because that ended up being sort of the back and forth that went on throughout the day yesterday with Elon Musk chipping in from the side, but really between Nadella and Altman sort of saying things are fine, but how fine are they really?
Right. Look, I think that the stocks reflect the full bore 100 bill. My problem is that no one's even coming anywhere near that when they talk about the money that they have.
Right.
So it may be chimerical, but it's going in the right direction. And I think in terms of stocks, instead of just talking in terms of like oligarchs, the main thing that people are talking about is that China has reverted to a conversation of no give without a get. We'll give you some NVIDIA chips if you buy some of our soy. It's that, and that's why NVIDIA should go up, not down. But because of this SK Hynix, I mean, when SK Hynix came out, NVIDIA immediately went down 3, and that's so knee-jerk because SK Hynix has a lot of different products. We know, and they were called NVIDIA's man in the room, basically, and that's not true because if you go to Sanjay Mehrotra, he would tell you, no, we're the high bandwidth, and their high bandwidth numbers were very good. I come back and say, I like to look at how NVIDIA is doing when I look at NVIDIA, and NVIDIA is doing fabulously. And that's what people should do, and stop making these analogs. Stop doing what they did with Apple so here.
Just buy NVIDIA.
Own NVIDIA.
Own NVIDIA because that's what, at the end of the day, all this money just ends up there.
Well, it does, and remember...
I mean, a lot of it, the project that they're talking about does include the build-out right now, 20 data centers. 10 are already underway in Abilene, Texas. 500,000 square feet each. So there's a lot. I mean, beyond just NVIDIA.
Right.
It goes into a data center.
I don't think the president's going to go with that last-minute 18 friends that NVIDIA can do business with.
No, he's going to do 18 countries that don't get tariffed.
Yeah, I mean, look, he's transaction-oriented. I don't really know what the Biden administration was doing in the last few weeks. I've been reading a lot about Woodrow Wilson in his last year.
That's great, Jim.
Yeah.
Okay.
Mrs. Wilson lived in a house I tried to buy, and I lost the bidding war.
Well,
but she was running the country, so it was viewed as the second White House.
Yes, it might be a good thing you lost the bidding war for that one. Because your insurance bill, as we all know, just keeps going through the roof.
He always tries to bring it back to me, and I don't mind.
No, of course not.
But I do think that
you did bring it up.
Well, because Biden put out a bunch of things at the list. I had Rusty Brazil.
Why are we still talking about Biden? It's Trump now. and he has been awfully busy.
I was offering a bit of an historical, kind of insight.
But is it of any value to me in terms of trying to understand the current
Yes,
moment?
because if you want to do everything that Biden did, you find that the earnings per share go higher. Like the pause on liquefied natural gas, that's done, and now companies are going to make a lot more money.
Okay.
I do think that the last things that they did that were prohibitive to NVIDIA, and they gave all this money to Intel.
Yes.
Which is a punchline, but that money could make it so Intel does okay. But NVIDIA was the one that was principally being targeted by Biden in the end.
And you feel like that is no longer going to be the case?
No, I think that NVIDIA is going to be something that Trump likes.
Right.
But Jen Swan didn't go to the inauguration. He did have commitments for the holiday in Asia. But anyway, I don't get too granular here, David.
That's okay.
I think that we have to go right to what happened with Microsoft and Stargate.
Okay.
What happened?
What happened?
Well, yeah. I mean, you got to talk about oligarchs who are mad at each other. Let's do oligarch mad at each other segment.
Okay.
You know, Sam Altman, the stuff on X was hilarious by Trump. And as we heard from Walter Isaacson, it may have been the dark side Trump.
Yes. Sam Altman and Microsoft are clashing. Elon Musk as well. I mentioned this. The companies are in that joint venture. They don't have as much to fulfill the $500 billion. And yesterday on Squawk Box, Microsoft's Satya Nadella did speak about his company's investment in OpenAI as well. Take a listen.
Look, all I know is I'm good for my $80 billion. I am going to spend $80 billion building out Azure. Customers can count on Microsoft with OpenAI models being there everywhere in the world, serving OpenAI models and other models. That's, I think, what I know.
And it went on from there, Jim, as you point out, sort of back and forth on X during the course of the day.
I mean, part of the pushback yesterday was this idea that large language models are getting commoditized very quickly. DeepSeek's one example, and that Microsoft essentially is willing to cede what might be a low-margin business.
Well, I mean, look, Microsoft, I think, is actually under pressure. I think that they've got, they're being attacked on this Clippy 2 comment by Mark Benioff. There's this morning, the kiss of death. I saw a piece about the super cycle for the AI PC. We know that super cycle precede where there was a coal super cycle, there was this fracking super cycle. And when you see super cycle, that means you're dead. I think the AI PC so far is dead, and that refers to Microsoft. Where is that, David, the AI PC? What are they doing? Super cycle.
I don't know.
Well, it's going to matter very much to that company's numbers because Microsoft, you mentioned Apple underperforming. Microsoft hasn't exactly exhibited great.
Wow, you're really negative here on Mr. Softy.
Well, Microsoft did not have a great, compared to its peer group, the stock was not as good a performer last year, as we know.
Have you talked to anyone who has an AI PC who says, wow, you got to see what I have?
We were waiting for that to happen during holiday. We didn't get it. Did have Best Buy. We talked to HP yesterday.
No.
Still waiting.
I have a Chapel Trust. I have my monthly meeting, and I have Best Buy on it, and I don't have anything good to say. And we have positions where, you know what, I don't have anything good to say, and that is because I believed in the AI PC. And we got to drop it, by the way. We got to stop talking about how the AI PC is going to take the world by storm, because nobody cares.
Why is that? Why do you think that's the case?
Because you can hit up GPT, you do whatever you want.
You don't need it.
You don't need it, and because I think Benioff's right. By the way, Benioff's agent force, we got a comment today that it's going to add, I don't know if you saw that with Goldman, that it's going to add 2% to their numbers.
Top line revenue?
Yeah, and there's 12 commercials with Matthew McConaughey, who is, by the way, a Washington Commander fan, which means he's a little bit ill-advised ahead of a game. But I think that these ads are working, my sources say. And not only that, but let's go a step further. There was a double downgrade of Viva today by Goldman. I think Mark Benioff is targeting Viva, which is a vertical, healthcare vertical, and Agent Force works perfectly for us.
So this indifference between on AI, PC-wise and Apple-wise, do those two stories rhyme?
Apple. I mean, somebody, another guy, the Goldman guy said, look, I'm below the consensus. Well, you know what? The consensus is full of Apple. It doesn't matter anymore. The consensus is like, why don't we just get the consensus to move so when it disappoints, it doesn't disappoint us badly? And remember, what people always talk about is it's not this quarter. It's the estimate cut that I know that nobody else knows. Everyone knows there's going to be an estimate.
All right, you've been defending all week. Stock keeps going down.
No, I said this. I said it at my morning meeting and said it could go to 190.
Right.
Why is that a defense?
Right.
How kind of defense is that?
Well, you've been saying
You
as
took some
always
off.
do.
I took some off.
No, you always say own it, don't trade it.
Yeah, but
You've
you
been
know, it
saying
got
that this
very
is all
big.
known.
Well,
Every time you talk about that should be in the stock price already. You've
Well,
been
there were
talking
some
about the fact-
stupid buyers. There were a series of stupid buyers who took it up way beyond where it should be. I don't know what they're thinking, but they're losers, and that's okay. Because remember, you have every right to be a loser in this business. Nobody says you don't have that. Everyone makes the playoffs. I think the AI hardware super cycle Morgan Stanley piece is perhaps the most damning piece I've read, because there's absolutely no evidence of a super cycle whatsoever.
That's probably the most negative thing you've said about AI in general in the past
Well,
few
it's
quarters.
the one part. I mean, I think AI is very good when you listen to what Jamie Dimon has to say. I think AI is very good when you listen to what Mark Benioff has to say. But the PC, I thought we were all going to upgrade, and now we're all in wait and see mode. And the people I know who have it haven't used it, or there's a button there and it doesn't work.
Did you hear the kid from Scale AI who joined Andrew in the last hour talking about $10 billion to $1 trillion over the next few years in terms of revenues from AI? He's a believer.
Yeah,
ChatGPT, by the way, does keep improving. It does keep getting.
I use it every day.
There's a story in the Times today about the inability to create a test that is hard enough for AI. They're coming up with questions that
I had one.
I mean, they went. Remember, GPT-01 was when now it can start to reason. Now they're talking about 03.
Do you pay for the one?
I paid for a while, and then I stopped because I was not using it in any way that was worth. I mean, $20 a month.
I'll give you an example. I'm doing a comparison of Johnson & Johnson's antidepressant drug versus Bristol Myers. And you start at ChatGPT, you really do. And it's very authoritative, and it tells you who to go to, and I think it's extraordinary. It's an extraordinarily good product. I think I'm on ChatGPT maybe 5 times before I come down here, 10 times before I do Mad Money. There's nothing I don't run through because I don't want to make a mistake. Not necessarily that it's not.
I was going to say, does it make mistakes?
I mean, look, when I go in and find out whether Abbott has all these drugs that I think are double digit, I just check. Or how many drugs does Abbott have? Any products are double digit? I suggest anyone use it before they buy a stock. It's that good. And I use Meta. I use, I use the other guys. Perplexity, and they're fun. Meta's fun. It doesn't really have a lot. Versus the other guys. Well, Meta gives you, I don't know anything, which is fine. I like that. I like candor, but I even like better. I like the answers.
Sounds like it's improving your productivity, that's for sure.
Oh my God, no, it's fabulous.
Yeah.
I mean, I got this one really, really early. I'm doing this piece about the billionaires who surround Trump. You got to check, see what they're said most right. Ramaswamy, what did he really do? Was he angry, or did he just decide to go for a run for Ohio? And I think that the billionaires reminds me very much of Survivor meets Trader, and of course The Apprentice. And Jeff Probst, White House.
That would be a good one. Survivor White House edition.
Don't you think?
Yeah.
I'm planning this already.
Or
will you get on the phone with Kavanaugh?
Oligarch White House.
Kavanaugh.
Be great.
President of a company.
Yes. Sure. I'll get right on.
And he worked at JP Morgan, which is great background.
It's true. Although not for that much longer. Going to be a phone call we need to make.
No.
Take a look at the pre-market little mix this morning. We'll get to some corporate results, including GE on the move pre-market. Also some airlines on the tape as we got some of the rails reporting today as well. More Squawk on the Street is straight ahead.
Insurance.
Futures are mixed, but there are some laggards to watch. EA is going to be at the top, going to open down about 17 as they cut their bookings guidance on the future of their soccer franchise, which has been a big piece of their gaming empire. We'll talk about some of the other movers as well, and the ones in the green, like GE and Alaska Air. We'll get Kramer's Mad Dash, countdown to the opening bell in just a few moments.
Good morning, retail traders. Myth of incognito mode. What you need to know. Well, my computer is protected. Protection. Oh yeah. How to trade the ODT at the close. Good morning, Randy. Good morning, E. Good morning, Florence. Good morning, Johnny. Good morning, Jesse. Good morning, Lunch Lady. Oh, you're listening in. And a special good morning to Magnificent. To Magnificent. Was that funny? Good morning, Florence. Good morning, YouTubers. Let's have a good day. In the key of C. So Jamie Dimon says he's a little bit overbought. Waiting for Rhyme to bounce. Ooh, we got to pull back here on AMD first thing. Watch it. Keep your 4 eyes open. What time? We got 7 minutes. I think I could go in there and make me a cup of tea. Now I got a low support today. Hey, don't want to listen to you right now. Jim. I have a low support today, bottom line on the SPY at $679. Alaska Airlines and GE are up this morning on earnings. Called them out yesterday. AMD is pulling back to my first support. And my first real support is 120.80. But we did hit the first linear channel, the standard deviation of 122.14. You could probably get away with shorting GE Aerospace. It's up $12. A little more than that. It's up. Right now it's up 16. I'd put 50s on that. Take that first support. And this is how you do a breakout, just in case YouTubers. Run your Fibonacci down to the opening breakout point right there. And then you got that support channel, which is off the 9, right around 198.38. Now, what was that other stock I had on watch this morning? Let me go find it. There was a penny stock that I was quite interested in. Let's see if I can find it. QNRX. And I'm going to put that on here. And I got it on my QNRX. Had some kind of QNRX. Whoa, baby. I might scalp this baby here. Let's see if we get a pullback first thing today. We did have a pullback on the SPX yesterday. Should be, and the SPY also had a nice little pullback this morning. So we got it head and shoulders right about in here. Oh, AMD hit the support level. Could call that a head and shoulders right there, or we could call this one. So somewhere in that vicinity for the SPY for right now, but I got a lot lower support. Now yesterday I come jumping out of the gate and puts, so I'm going to give it a little time today. We got a double bottom right at 608,431, mama yay. Randy's a little sad today, so we got to cheer him up. Everybody tell how much they love Randy. Larry Funk, you know Larry Funk? Immigration taking his work crew away. He likes the Mexican workers. Okay, my ding-a-ling just went off. Don't tell Vegas. So we opened up flat. Tesla at 416. Let's see if we get a pullback first thing this morning. We got a lot of stuff coming out Florence sent me a list of stuff. I'll put it in the room. So we've got initial jobs claims, continuing claim, Kansas City Fed manufacturer, Bloomberg. To take them as we got S&P Global manufacturing PMIs coming out, Michigan sentiment, current conditions of Michigan. So yeah, Michigan, that ain't gonna be much. Existing home sales month over month, Kansas City Fed service activity, yay. Thank you, Florence. Randy's back home, where the buffalo roam, and the deer and the antelope play. I heard of a word, a discouraging word, that Washboardjim's going to make your day. We're at the 200 SMA on the SPY, so we're going to have a decision-making opportunity right now. Jimmy's got a support here at 605.18 if it doesn't hold. Jamie Dimon says the market's overbought. Apple's got a little pop. I'm swinging Apple. I'm hanging out with Nancy Pelosi. NVIDIA, watch it. Keep an eye on NVIDIA. Okay, we've got a pop on Tesla here. And Mr. MSTR had a little pop. SMCI pulled back to my first support of 32% from the high on the Fibonacci. Mr. though, and I bet you if Mr's popping, coin's popping, Bitcoin probably be popping. AVGO at 236 had a pretty good sell-off, $10 from yesterday. Oh, here we go. QNRX. I'm very tempted to buy me some right here. Snake, fallen wedge. Now this is a penny stock, so anytime you play anything that's in a penny category, you're taking some kind of risk. I'll make myself perfectly clear. Falling wedge with a double bottom. Can't you do anything right, you idiot? Hurry up. You don't want to piss me off this morning, Toss. Tesla pulled back to the 63. Mister is holding resistance. The SPX had a bounce to resistance. SPY bounced off the 200, called. Let's see if this wants to stay glued or if it pulls back. Pot stocks are down. C had a little breakout. See if you put you an alert on the VWAP for the SPY. Right at 605.81. Whoa. Nitty bounced the video. Nitty. Someone mentioned Apple yesterday. Calls were at people were buying the 225s. Is it 225 or 224? Come on, you fucking Jim, watch your mouth. It's not professional. And on the 24th, I got the Apple Strikes. I'll probably have to sell them today. Yeah, I'm going to get out of my apples right now. Should have sold them a little bit sooner. Damn, I should have sold them sooner. I just now thought about it. That was a big mistake. So we got a double top with a lower high on the SPY. Do you understand me? you want, baby. Apple's got a 1, 2, 3 bits. I'm gonna clean that chart up. I'll be right back. I need to take a little break. So we did hit yesterday's low on a wick on the SPX. So that's going to be today's resistance, 6084.38. We got a symmetrical flag in play. Looks to me like it could break out the flag, but because we got a steep going up, you know, the steep higher lows. See, yeah, you can tell when that is steep, that vertical climb is steep. That's a pretty good example of what could break out. If you know what side of the street I'm on. Pretty steep. We got to break 608438. Then we do that, we could probably see 6096. I'll be right back. Don't tell nobody I'm going.
Tell me about that. Well, what do you mean by that, that application layer? I like that.
Yeah, I mean, I think what's really interesting is that we've seen a lot of innovation happening at the model level. At the model level! At the infrastructure, data center level. But what we haven't really seen is a lot of innovation happening at the end user use case application layer. Now there's a lot of things being experimented with, a lot of things happening, but in terms of like broad adoption and what's actually going to transform our lives and where you see applications becoming ubiquitous, we really haven't seen that yet. It's up for grabs, and an initiative like this does position the U.S. and also potentially some of our companies, you know, in a way that could be very positive.
What are the range of outcomes right now you think that this brings that maybe changes the existing range of outcomes? Like, weren't these hyperscalers already spending tons and tons of money? Like, you know, at what point does that rate of change like get de minimis?
The rate of change, I think, what needs to happen is that the compute and the efficiency of the compute needs to make the generative AI applications very efficient for enterprises and individuals to leverage. And so as the models continue to train and learn, they get better and better, and ultimately that compute power is going to help to drive that. And by transforming data centers from general computing to accelerated computing, we see a foundation layer across data centers that could really support generative AI.
Talking about where that's going to hit the hardest in terms of benefits, beneficiaries, in your coverage right now, like who's the most rock solid, Melissa? Who would like extra money and spending but doesn't need it?
The whole space right now is a bit of a rising tide. You know, right now, and it's still fairly embryonic, you know, in terms of where the trajectory of generative AI is going to shake out. There's general consensus that it's moving in that direction. We're seeing the groundwork laid. We're seeing a lot of initiatives. We're seeing creativity creep in, co-pilots emerging, all these different things that are helping to drive that innovation, but it's still up for grabs.
Okay. Thinking about I guess, underlying fundamentals, do the companies in this hyperscaler, in the big tech space, do they still meet high-quality definitions of financials in your mind, Melissa?
Absolutely. Fundamentals are going to be critical for these companies, in terms of their free cash flow, in terms of how they invest, and also aligning with their shareholders in a way that justifies the level of CapEx that they're spending. I think shareholders are likely to be comfortable with the investment, provided that they feel the longer-term return on that investment is going to come to fruition. And I think they would like to see incremental evidence of that. Normally we do see that in earnings calls when companies demonstrate that with their numbers and then also articulate it with their stories.
Good stuff. Like the perspective and a good reminder of the stability here, the rock upon which this market is built. Thanks, Melissa.
Thank you.
Let's go to George Tillis. We got some trades. Looking at Oracle, look at Microsoft. George, you got a pretty bullish trade on Microsoft restructuring. Take me through it.
Yeah, I mean, if you consider what's going on, obviously, with the Stargate initiatives, OpenAI, and the relationship Microsoft has, there's a lot of compelling story behind this particular name, and of course, the dominance that Microsoft has in the enterprise software space. But if you consider also the events next week, we've got earnings coming out, I believe, on the 29th for Microsoft. So we're going to trade around the earnings. We're going to structure a bullish trade and capitalize on high implied volatility in the options that expire next week. So what I'm going to do is I'm going to structure a long call diagonal spread. This is structured for a debit. I'm going to sell next week's expiry, 8 days to expiry, out of the money 460 calls, and I'm going to use the proceeds of those sold calls to purchase the February monthly in the money $435 calls. So we're essentially playing this as a bullish trade with capitalizing, like I said, on that high implied volatility. Now, altogether, you could structure this for about $13 a share or $1,300 a contract. So in essence, it's bullish. You just don't get to participate if the stock moves beyond the short strike by the end of next week at 460. Again, your break even is 448 if you do hold this entire position until expiry in the February contract, which again expires in of course 29 days. So you're essentially capped between now and the expiration for the January contract. But then again, if it doesn't, if you're not exercised on these options, you do get to participate in the total upside potential if it does continue higher for the February contract.
Okay. So you get the upside and then you get capped out, but that gives you some breathing room also to the downside too. I feel like we did a trade similar to this yesterday. George, we bought the in the money call, and I like that approach because it gives you, early on.
George.
Yeah, and so if you look at this kind of structure, I'm basically selling the expensive, out of the money, near-term option, which has higher theta decay as well, time decay, and I'm buying the in the money, distant out option, which again already has more intrinsic value and actually has a higher probability of profits.
Okay. Higher probability of profits because you got the in the money and you're hedging it by selling the further out of the money call, which I think for a lot of these big tech trades seems like a good way to approach it right now. So I like that. You got a different one though for Oracle, George, after a pretty fresh pop yesterday. Different chart to deal with.
Yeah, so if you look at the chart, there's sort of a fair value gap that goes back to December, about a month and a week ago, so about 5 weeks ago. So that also corresponds to yesterday's low, which is right around the $180 mark, and it's trading around 185. And you can see that today they tried to, push it below that, but the buyers stepped in. So what I'm going to do in this case is I'm going to structure a neutral to bullish trade. It's a very simple trade. I'm going to sell a cash secured put. I'm going to go out to February with 29 days to expiration, and I'm going to sell right around the 180 strike, and that's corresponding again, to yesterday's low. Today's almost level low. And again, you could harvest about $4 a share or $400 a contract. So in essence, it's a very simple trade. If it stays above 180, that $4 premium that you
SPX
sell for
couldn't break.
or earn will
We're getting
go
close to the
zero.
VWAP
That's the whole
on the
objective of
SPY.
trade. If you do structure this trade, you have to consider also the risk. You would be assigned shares at 180 if the stock goes down below that level between expiration and expiration. But at the same time, you can structure this trade if you are willing and able to take ownership at a lower price, but your break even is at 176.
Okay. All right, a little bit of a different approach, given the pop, basically betting that this thing's not going to reverse and crash, which is also, I think, a pretty good high probability approach to it.
Correct. And so if you look at the option premium as well, or the option delta, it's around a 35 delta, which does, again, imply about a 65% probability that the stock will expire out of the money, which, again, is what you want, and the out of the money would be above the 180 strike.
Okay. Just obviously monitor the trade and be aware, and I guess be ready to earn some oracle if it goes against you, which is not the worst thing. I mean, that's kind of the point of the trade too. You get into something that's been crushing it. GT, thank you very much. Appreciate the trades. Nice good approach to the tech side. We'll talk consumer. We'll talk corporate spending when we come back. American Express, looking at the upcoming report, doing a little trade in it. Be right back.
You got inverted hammer. Shit.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Welcome back to Morning Trade Live. I'm Oliver Rennick. We are in hour 2 of our show here. We've got some stocks to talk about. American Express, as we've got earnings to keep an eye on. We're also looking at a market somewhat divided this morning, but there's a lot of winners out there. American Express is one of them. We're going to trade it ahead of its report tomorrow morning. Stocks basically even. S&P 500 slowly finding its footing this morning.
We're at the VWAP.
After a little dip at the open, some buying. Watching bonds that look to be selling rallies this morning, so that's interesting. Bonds got hit pretty hard about halfway, about 30 minutes into our show, and then firmed up again. So I'm keeping an eye on that. Equity is probably okay with most of it, but maybe if it gets more intense, we'll come back to that subject. As the 10-year yields at 4.65, it is familiar territory, so it shouldn't be too scary. But watch the dollar, which tried to fade and couldn't quite do it. Bounced up a few times from overnight lows. And the dollar right now only up 8 bips. But if bonds keep selling off, I'd look for the dollar to firm. Nvidia is up 1%, rather down 1%. Sorry, semiconductors are under some pressure. Chips down 1.3%. None of that's equating to higher volatility, though, as VIX is below 15, as you just saw. Apple actually stronger today alongside Meta and Netflix. Netflix carrying through some earnings strength from their big beat. But overall, the Mag 7 group is quite mixed. And the market's basically the same way. Sector-wise, you've got 5 up, 6 down. We're going to talk crypto, Bitcoin, Trump coin, Melania coin. Get your coins, minting them heading into the election, dumping them heading into the election. BTC fighting for 105,000 right now, trying to get through that 110. Looking forward to that conversation with the guests coming up. Always fun to talk crypto. You know, I love it. Then we're going to get some charts. So for earnings,
Apple's back at 186.
Intuitive Surgical coming post-market. Verizon tomorrow pre-market. So a lot of stock chat too. Told you we got a lot of ground to cover. Let's get to it. Mr. Alex Coffey hosting Next Gen Investing with me here in the studio. Interesting movement maybe in bonds. Alex kind of highlight this morning. I don't think necessarily stocks seem to have an issue with it just yet. Tell me what you think.
I think this is a little bit of front running what Trump might say in Davos. He's no friend to the Davos crowd, and we know that he doesn't really pull punches. Isn't really too scared about who's in the crowd and about what he's going to say. I would expect tariff conversation to come up, and it could just be a little bit of the market kind of going back and forth with those headlines on potential, trade war 2.0 and where that might go from a policy standpoint of the government. You do see gold lower as well, though, which I think is quite interesting, despite that, increase in potential inflation. It does seem that there's this feeling that the Fed will, hold or whatever it may be, maybe be a little bit more likely to continue its battle, and gold doesn't necessarily see a bid despite this potential uptick on that front. I would say also, gold to me has served as a geopolitical indicator, and the temperature seemingly has come down on that front. It's certainly not over. There's certainly always going to be tension, at least in the kind of current world that we live in and sort of the power dynamics. But that temperature come down quite a bit over the last few months with the notably what's going on in the Middle East. And so I think that could be reflected a little bit. But we're looking day to day. I mean, you mentioned semiconductors in your intro to this hour. Yesterday, big move to give back some of it. Natural
What was
market
I gonna
movement. One thing that did stick out to me, I'm not sure if you saw this, was according to Deutsche Bank's data, they kind of follow what in the world of markets is referred to as CTA position. This is essentially commodity trading advisors. These are kind of rules-based investors. Sometimes they're technical-based, whatever it may be. According to their data, positioning in U.S. equities amongst those rules-based, discretionary, algo-driven traders is the lowest that it's been since basically August in that big kind of rundown that we saw. So to me, that does make sense. It's not that in the longer term, there's that.
The SPY's at the 200 right now.
Was yesterday, and the second best time is
with
today.
a double bottom high or low.
Short term, kind of positioning and trading. it's not that the market is primed for some massive down move, but it just had this incredible, 7-day streak now, new all-time highs. There's uncertainty. It might just be primed for a little bit of a pullback that may present better opportunities. I think that's how many of these rules are sort of set up and perhaps waiting for.
Okay. I wonder whether or not he's going to talk any crypto at the economic forum, because Bitcoin is moving in the last half hour. Woke up after being lower, about like a 3 percentage point swing there. All right, back to the main stuff. Okay, maybe market got a little bit kind of over-levered long, perhaps, in the near term, so makes sense to run into some chop 61. That's kind of like the technical level that KG and I were talking about. When things happen that you can kind of see from a far ways out, they strike me as generally non-threatening. But I do think that if bonds really start moving, it could get kind of interesting again, because the market really tried over the last week here to push yields back down, as Kevin Hinks likes to say, beach ball underwater. That's kind of giant beach ball held underwater, Oliver. Like, that's kind of what I feel like yields are
Apple
right now.
210.
Like after all the Waller stuff.
Pissing me off.
To me, Waller was like so far out there, got the market all jacked up on this dovish vision that like I have trouble seeing it.
I see. Well, in my mind, maybe we had a 10-year that was in a range between 4 and 4 1/4, and now maybe that range is closer to 4.5 and 5, and maybe we're towards the lower end of that range. But I don't see like a 6% 10-year in the next few months, and maybe I'll be wrong. I'll adapt to that. If
216.
But I just don't see if I'm looking at this from a risk reward, and I'm trying to say, where's the outlier? The outlier move to me is there's massive, perhaps revisions in the job data. We miss on a couple payrolls reports. Inflation comes in a little bit cool, and you start repricing in cuts and saying, hey, is a recession here. To me, that is much more likely than runaway inflation. And hey, runaway inflation is not a 0 probability, but to me, if I'm looking at where's the asymmetric outlier risk, to me, it's downside in yields. But that doesn't mean it's a high probability event. It just, I see if I were to draw where the tail is, the tail risk to me is downside in yields.
I guess the thing that I would say is that I don't think, to some extent, the runaway inflation, I feel, could be argued as a bit of a straw man, and not in like a pejorative way. I mean, that's just kind of the only way I can think of to describe it. Whereas just stability in the economic data, I don't think you need runaway inflation for bonds to just kind of keep inching higher for yields, lower in price, as long as the economic situation doesn't break down, because we still have like term premium that's normalizing, things from this like whole post-GFC world that I feel like are kind of over some of those trends, whereas the post-COVID trend we're seeing has been surprisingly good economic data, sticky general inflation. I feel like as long as it sticks there, bonds can't rally too far.
That's fair, and I guess in that way I can see the beach underwater, or beach ball underwater, because once it gets to the surface it stops and it just sits there. So I guess we can get back to the highs and kind of watch bond volatility plunge and just kind of trend there. But I mean, again, for you to put in substantial higher yields in the 10s and the 30s, you're basically saying I see growth and inflation basically into perpetuity remaining at these levels, and I just don't know that we're in an economic position where so much of it was driven by fiscal spending in the last few years to say that that's going to basically remain the case over the next 10, 20, 30 years, because that's essentially what you're pricing in. Now, it doesn't mean that it can't move back towards 5%, like I said, in the 10-year, but I just don't see it meaningfully above that in the short term without like a massive beat on inflation or a massive beat on GDP or labor market, and we just have not had that. We've had better than expected or slightly higher than expected, but we really haven't had massive beats where you have to just go back to the model and reprice everything. Totally. That's essentially what you're going to need to get substantially higher.
No, that's a very good point, and I think too also, jobless claims 220 or whatever they hit at this morning is generally in your actually kind of. Our reaction to that number kind of like finds the overlap of what we're talking about, because bonds did sell off, but not that much, and the number was
contained, is how I see it.
Yeah, contained. All right. So if stocks don't have a problem with bonds, so what we're trying to do is trying to sniff out if there's going to be any problems. Basically, that's what we're trying to sniff out. I don't think that's going to be a problem right now necessarily. So I do kind of side with you ultimately for the moment. It's not an immediate issue. Bitcoin kind of having a weird little up and down here over the last 10 minutes. The chip's under a little bit of pressure. We'll come back to the crypto stuff later on. But sniffing for things that could get in the way, it's not easy right now. It seems like
I really
generally
screwed
still
myself
most
on Apple
things are
there.
quite supportive of the market up here at all-time highs.
Yeah, I think that's right, and it just comes down to, I think this is probably like I don't have the look inside the black box of some of those CTAs and why they're positioned the way they are. But you look
Could've
at
made
it
another
here,
300
in the world
bucks.
we're in, where a headline can flash this morning on tariffs, and you could see a flush.
Yeah.
It just doesn't seem. It seems like we've priced in a lot of the positive headlines, and it just,
Policy-wise, yes, I agree.
presents the opportunity for any type of a hiccup on that story to cause a flush. Now, that flush might be a great buying opportunity, but after a market that's run 100 points in a handful of days, sometimes just waiting for those opportunities is the prudent thing to do for short-term traders. Now, that's just for equities. When it comes to Bitcoin or something that maybe is more momentum-driven, when we're talking about something like bond market.
I think that's policy big time too, though.
Yeah, it may be, but I'm just saying, like when you're talking about different assets, I think it's important to say those might require different things. I'm mostly when I'm having this conversation, I'm talking about S&Ps and talking about Nasdaq.
Yeah. Okay. Good stuff. Love the analysis. Market generally well supported. To the point about the positioning, to the point about the policy expectations, it seems kind of like the only thing that can get in our way at this point is maybe the excitement that got us here to some extent. That then when today the president talks at the World Economic Forum, I do think the traders, investors, crypto people too, kind of have this checklist of like stuff they're wanting to hear, right? Think about like the drill baby drill people. They got, if you were short and crude because you thought that was going to be a big policy, you got that inauguration night. If you've been buying crypto because you were looking for balance sheet, you didn't get that. When you got Melania coin instead.
If you bought it like running up.
No, I'm saying the actual policy.
Oh, fair.
Yeah, so that's where like today I think this could be a move of the economic
This
policy.
can actually, yeah, for sure. And this ties actually, I think, to the Treasury conversation. This is something we've had, an ongoing conversation we've had within these segments, Oliver, for weeks now, which is I personally look at the Treasury market and say a lot of what you're describing perhaps has already been priced in. We've watched the ZBs, 30-year Treasuries, go from the high 120s when the Fed first was cutting 50 basis points, now back near basically multi-year lows in that, so multi-year highs in the actual yield itself. To me, we may have already priced in a lot of this beating on economics in terms of growth. We might have priced in a lot of the beating in terms of inflation. That doesn't mean that we're going to have a massive rally back or a decline in yields, but how much more upside in yields is there? That's the big question to me, and I'll be the first to admit I'm wrong if I see more, but there's nothing to me that suggests that that's coming without a major surprise.
Okay, fair enough. I think also to the point of like policy expectations that have so far been unfulfilled, if you were trying to like bet on tariffs, trade tariffs, if you thought that was going to be a negative for the market or a negative for bonds or whatever it may be, that's where, today you've got that checklist that if it doesn't get fulfilled, you might see some movement.
And if you're looking for a cleaner way to express that and you're a go-anywhere type of investor, maybe just direct investment into the U.S. dollar itself.
Boom, there it is.
Easier to do that, or just shorting some of these FX pairs as opposed to trying to figure out what yields are going to do after this massive move.
Agreed. I do think the dollar is a good expression of that. You looking at my positions right now, Alex Coffey?
I'm just looking at the dollar's move today versus some of these other moves based off the data.
Good stuff. Great conversation. Thank you very much, Alex. So host the next gen.
We got to pull back on Mr. to the 200.
There. Let's get into some of the stock moves and all of that for equities. Little change, but
AVGO's at the 200.
Tiny
SMCI's at the 200. We got a double bottom on Tesla.
Tomorrow morning.
Pre-market low.
Amazing, Jeff. To the point about solid economic data and the consumer corporations also looking like they've got plenty to spend.
Yeah, absolutely. And to your point, this chart has been amazing over the last 12 months. We look at most of the last few weeks.
IWM hit the 200.
The question you guys were just talking about is whether
SPY holding the 200.
Positivity kind of baked into the stock right now. I think it's going to be an interesting earnings report.
SPX at the 63. Third trip.
Pretty steady growth. The growth we've seen for the last few years for this company, which investors have reacted, positively to the majority of the time. Now, I think if you look at the chart, and this is something that short-term and long-term investors need to look at, is we do see some negative reactions post-earnings. The stock has continued to bounce back in the following days. if we look at the expectations around this report, very steady, what we've seen in the last few. Earnings expected to come in up around 16% at 34 cents. Revenue expected to rise about 8.8% at 17.18 billion. That's what we've been seeing over the last few years, 8 to 9% revenue growth. If you look at network volumes, expected up about 5.6%. Discount revenues up about 6.1%. International expected around 13% year-over-year growth, with U.S. consumer up 5.8% and commercial services up about 1.1%. They look at total cards in force, and this is how they make their money, right? They want to get as many cards out there as possible. 5.2% growth, which is very in line with what we saw last quarter. Average card member loans up about 12.4%. And then total interest income, and this is an area where American Express has really differed themselves from some of their competitors. They don't make the majority of the money on this interest. They look at fees, both for the consumer as well as merchants, but that has made up more and more of their revenue stream over the last year.
Apple has a new high. God, why did I sell it?
All of this is totaling for 2024 expectations on revenue.
Left $70 on the table, contract.
65.95 billion, with earnings at about $13.40 a share. That's up about 19% year over year.
Okay. Amazing, and it seems like very congruent with the direction of the chart. Those are pretty good numbers, and international components, I feel like, have only started to maybe fulfill some of those expectations. There's a long recovery the last couple of years for Europe, for Asia, for international travel. So as that's hitting its stride the last 18 months, I would imagine Amex is hitting its too.
It is, and I think we're going to see more detail around the sort of spending we've been seeing over the last quarter, certainly, and I don't think that we're going to see a big surprise there, but that's something investors should be, very focused on. Expected move on the stock is around $12.71 or so in either direction, so there is some volatility built in. But the good news for investors is they watch with American Express. Again, lower credit risk, typically
snake breakout pullback.
Higher income customers. These clients feel the sting of an economy that's worsening a little bit later. They're not as affected by higher borrowing costs. So that's why most of their focus is on that spend-centric model, where they make the revenue off merchants and consumer fees. And like I said, if we look back to 2023, net interest income was up 33%, accounted for about 22% of their total revenue. So that is something that we'll see baked into this report as a bigger number for them. But if we continue to see the macro backdrop getting better, that's going to provide a boost here for American Express. Despite some of the concerns about the Fed not lowering interest rates, despite some of the concerns about future inflation, consumers continue to spend. Optimism around this new administration, I think, appears to be adding that strength. Some of that's probably built into the pricing right now. But for now, it looks like the loan numbers, the interest numbers, the fee numbers are all rising at a pretty steady rate. There's nothing too surprising, both to the upside or the downside, as far as projections are going.
Okay. Good stuff. Thanks, Jeff. Good assessment and a good preview. Stock a little changed, but higher today, sitting at 323. Let's trade it with Joe Teagay, portfolio manager of the Rational Equity Armor Fund. Joe, I feel the Amex chart correlates pretty well to the United chart and the premium travel that's happening. And I mean, come on, we're not betting against this, are we?
Maybe not betting against it. Maybe just fading some of this move that's baked in here. I think. With a lot of these stocks, we just had like a really nice run up here. Maybe it makes sense just to take a little breather, have a little bit of a second glance at everything going on. And I think bottom line is, yes, there's a lot of momentum right now in the stock market. There's a lot of wishful energy, things that might actually happen that people are pricing in right now to the market. If they happen, that's great. Maybe that's great they were priced in early. If they don't happen, there's potential for a pullback. So I'm just very cautious. Alex said it best. We're going to see some big sharp pullbacks. Those are going to be opportunities to be adding to our portfolio. Right here, I think I'm just looking at selling some of this momentum.
Spies back at the VWAP.
Into this earnings. We got a company that doesn't have huge moves post earnings, priced pretty much accordingly on their options market. So I'm just going to be looking at selling a Fab Strangle, really Iron Condor, actually. I'm going to sell the downside put spread, sell an upside call spread. A short delta. I'm closer to my short call spread than my put spread. So I'm actually looking at the 310, 300 put spread. I'll sell that.
Coming down to a double bottom.
330, 340 call spread.
Watch the SPY right here.
323, so we're closer to the 330, of course. So short delta, Iron Condor. I'm going to collect 575 to put this on. So that's great for me. I got a better than 50-50 risk profile. I'm risking 4.25 if we close below 300 or above 340.
Okay. I like this approach actually, because you're not betting against it, but you are kind of betting for it to maybe cool the Jets off a little bit.
Yeah, and this isn't a name you expect to see, 20% months or 10% months very frequently. And if they did, you definitely would want to fade those. This is a name that's going to kind of ride with the economy. For me, I think the economy should be in good, stable footing. However, I think it's going to be one of those volatile, slow grind higher, if that makes sense. Like on a month-over-month basis, I expect to see the market higher, but on a day-to-day basis, I expect to see some volatility. So in this instance, we're just higher at the moment. I just want a soft fade to this higher momentum. If we did go lower, like down to 310 here in AXP, that'd be a place where I'd love to buy more.
Okay. So that's the other key point is that if it does slip, that you like it to pick it up lower. Pretty good range. So to your point, it seems like folks are making bets that maybe this is just going to be a little bit more of a manic report than this stock usually has a capacity for. So fade the notion that it's going to go, above 335 or below.
Yeah.
What's the lower end there?
305.
Right. I mean,
is my break even.
Those are big moves. So
yeah,
that seems reasonable to fade that potential, for massive vol. You get 575 to do it?
575, put it on. I have to hold it through Fed expiration here, so that's a little bit of a time here. But I'm comfortable that that's going to come in nicely after this report and through the weekend for sure.
Okay, makes sense. Thanks, Joe. Appreciate it.
Thanks for having me.
Joe Teague, portfolio manager of the Rational Equity Armor Fund. Coming back, let's talk some coins. BTC had a pretty interesting little up and down there in the last hour. Maybe some hopes that crypto will get a shout out at the Davos Economic Forum. Coiners have had the support of the president and the people around him, but they didn't get a mention in the inauguration speech. Time to make up for that, perhaps?
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Got a little swing in BTC the last half hour there right now. The coin's sitting just below 104, down about 0.5%. The president said to address the world at the Economic Forum in Davos. Joining us, Martin Leinweber is the Director of Digital Asset Research Strategy at Market Vector Indexes and an author, judging by the background. Martin, thanks for being here this morning.
Thank you very much for having me.
Do you guys cover Melania Coin and Mastering Crypto Assets?
Well, the book was published last year, so I didn't have a crystal ball with me. It's not included, but we talk about meme coins.
Okay. The Trump and Melania coins that were launched heading into the inauguration, would you describe those as meme coins?
Yeah, definitely. That's definitely a meme coin, and it took everybody by surprise that directly before the inauguration that the US president could issue a meme coin. with the First Lady, but here we are, crazy times. And so I think the markets took that also as a surprise, and you can have your moral or ethical standards here, whether you as president can do that or not. But I think the major message here is that the US president of the United States says it's okay to issue a token.
Wow.
And so overall, that's bullish.
What do you? I love that. That is crypto if I've ever heard it. That statement concluding with "it's bullish." Tell me why it's bullish. Launching meme coins that might infringe on what it seems that you described as maybe some ethical issues.
Well,
yeah, why is it
here's the
symmetrical?
thing. You have to separate between how the token is distributed and if it's okay that a US president does it and keeps the majority of it. I rather look at what does it mean for the token economy, the token world in general. And if you think of it where we were last year, basically everything was prohibited besides Bitcoin and Ethereum. Now you can say that the US president is a major crypto holder. Think of it, the majority of his net worth, if you look at a mark-to-market principle, is now in crypto. And so, as you've also heard from Larry Fink at Davos, he's all on tokenization. And I think, generally speaking, that's just a green light for tokenization in the US.
I still have a little bit of difficulty, though, with the logic that a proliferation of worthless coins or meme coins is a necessarily good thing. Like, if there were a bunch of companies IPOing that didn't make any money or were, nonsense, then I would be saying, wow, this is a very concerning market. It likely will crash. That's basically what happened during COVID when we launched a bunch of nonsense SPACs. A bunch of those crashed. Market did go through a very rough period in 2022. Is that not a fair comparison?
Well, you can question meme coins, yes, but I say meme coins is just a subcategory of the overall token economy. And so you have in every asset class, you mentioned it, for equities, you have SPACs, you have leveraged ETFs. You also had corporate credit during the 2008 crisis, which were worthless. So does that mean that the whole asset class is worthless? So again, you can question what Trump did and the token distribution of the Trump token and the Melania token. But I would rather go back to the bigger picture and say, hey, okay, that's the meme coin of Trump, but there are also good use cases in crypto. And I think it just shows that the US is overall all in on crypto now. And so I expect a pro-crypto regulation, a pro-crypto stance, and also more serious projects. Yeah. So it's not my job to criticize the meme coin of the US president. Yeah. So that's.
Well, that's kind of where that's a good place to lead into, because if the idea then is that it's green light go and we're going to do these great things with crypto, but then so far it's just launching meme coins, then what's the maturation of the process? What then is something real that we need to see? We didn't hear about crypto in the inauguration. We heard some other economic plans, but there's also a lot of stuff that they've said that they want to do that they haven't gotten to, right? It's like day 2. So what do you want to see then? Because I think that it sounds like we probably agree meme coins are not like the most productive thing. What can they do here then that's actually going to bring meaning and substance to the industry?
Well, I think we all agreed on that the crypto industry is waiting for some executive orders for the strategic Bitcoin reserve, for example. But a key component, what is missing so far, is that you have a proper regulation similar to what we have in Europe, how digital assets are defined, what is a security or not, so that you have a clear framework for investing in this asset class under secure and so regulatory secure environment. I think that's the most pressing point at the moment. And the next thing is also, how do you handle stable coins? You need a regulation for that as well. And so that will be helpful also for the larger US asset managers to finally issue the ETFs, and also that the retail public can participate in this broader ecosystem, be it AI, be it gaming token, payment is a huge use case.
He has nothing to say. That's good about it. That's for sure.
Get a clearer regulation, and I think that will come.
What if they don't put it in the strategic reserve then? What is the, what's the alternative? What happens to price? Do you think that's built into price now?
No, I think we are ranging between 92, 106 now since the end of November. And I think the market is at the higher end and waiting every day for this announcement for this strategic Bitcoin reserve.
I'll get my tea going. I'll be right back.
If we don't get that within the next 1 to 2 weeks, I think the market will start trading heavier, right? So that's important that we get these messages rather sooner than later.
We're back at the 200 on the SPY, trying to break it.
On this specific headline, day by day.
But
I'm curious, Martin.
A lot of negativity going on right now.
The technicals, the charts, and one thing that I've continued to monitor is a long-term bearish divergence, really since the beginning of Bitcoin, where each successive high, the percent change to its next high, has shrunk, meaning that your returns are correlated directly, basically, to your point of entry. And we're still in that. Does that concern you at all?
No, I think, listen, it's a larger asset class now, and it's not a surprise that you have the law of diminishing returns. For me, from a technical standpoint, it's important now with a short-term time view that we get above this 106 level pretty soon, so that we can target the 120 level. And anything else remains to be seen. If you look at the expectations of the market, I think a lot of participants expect 140 to 150, some even higher. But I think in this asset class, we have to be more cautious, and so I'm more short-term oriented. So for me, the next level is 106, and then the way to 120K.
Okay, appreciate that. Like the technicals, thank you very much, Martin. Appreciate your time. Good conversation, good prep for us today as we look for policy potentially coming down the pike. Thanks.
Thank you very much.
Yeah, good conversation. Martin Lean-Weber joining us, Director of Digital Asset Research Strategy at Market Vector Indexes. Lean-Weber, I believe. That's my third attempt at the pronunciation. Martin Lein-Weber, thank you for being here, coming back. We got some charts, we got earnings. We're getting ready for the next couple days of reports here. Stocks still within about 10 basis points for the S&P 500. We got some big names that have come up. Intuitive Surgical, the maker of the Da Vinci machine, lifesaver, has been roaring again.
No noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market.
Kevin Hickey.
Weekdays at noon on the
I'm Kevin Hickey.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is
It's the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Well, that was
Schwab,
convenient.
A modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
We got 3 white soldiers here now.
Let's talk some charts. We got some earnings. Mr. Big Dude Cat, Mrs. J Horn. Let's talk Intuitive Surgical first. Da Vinci machine is a lifesaver. It's like the real AI. Like, this is the robot that's been saving lives.
This is the first thing that I ever made me understand, like, the real world application of AI, because it's amazing. I mean, like, watch YouTube videos on it, it's incredible.
Not like the new stuff, but like, this is classic.
Like the basically like precision and like the zero faults that this like can entail. I mean, not entirely, but like the room for error with some of the Da Vinci stuff is frankly amazing. I think hugely why we're at all-time highs. I mean, 616 we touched earlier. We pulled back somewhat from there, but a chart that looks pretty much unlike most that we talk about, frankly, on the year. It's up 60% over the last 12 months. And it's going to pretty big moves on the back of earnings, so could see some substantial volatility when we get numbers after the close. We are expecting around $2.2 billion in revenue and $1.77 a share on earnings. They have managed to grow their earnings at a pretty healthy clip. I mean, from back in 2017, they were earning around $3.03. 2023,
well, that was a good trade. I didn't take it.
And now expecting to earn another $6.91 on the year and up to about $8 now in fiscal 2025. So that would tell you that this earnings is at least matching the pace in which the stock price has accelerated. They do, though, now have a PE of 90, which is high. I mean, relatively, I know we talk about valuations, some of these names just carry lofty valuations, and perhaps the earnings growth justifies that, but that is still pretty considerable. And again, I think that all of the analyst notes I read this morning mentioned Da Vinci, so that's the brightest spot, at least ahead of this report. But there's 23 buys, 10 holds, no bears in this name. But price target right now average is 586, so that would tell you that we've perhaps maybe overdone a bit of the upside, or we're just not seeing analysts update their coverage to accommodate price.
Yeah, it's been a really great return to glory here, return to form for a very innovative business and one that has like price insensitive buyers at hospitals. Rick, breakout?
Well, yeah, we did break out to the upside recently.
You got a double top now, triple top.
One of those charts that exhibits the stair-step type pattern we talk about of periods of consolidation followed by rallies in the direction of that upward trend here. You can see pretty obviously, it'll be even more apparent when we put on our volume profile study. But yeah, some breakouts to the upside by 2 different measures. So first we can see that we have this consistent
options are actually cheap.
Near about 550. That's when we had a sharp rally to the upside. Notice as well, we had pretty much the same thing here during the last phase of our stair-step pattern, around 495 here. We held the line at our orange 63-day EMA several times during the past year. Now, more recently, we had a very sharp push to the upside. This rising wedge type shape in a very narrow, very steep pattern is maybe the best way to describe the price action. Today forming what looks like a bearish engulfing candle potentially though, where today's red candle is swallowing up the previous day's smaller green candle. So not really the most encouraging sign here, but the day is still pretty young. RSI still overbought and enjoying an uptrend here. Now, when we include our volume profile studies and standard deviation channels, you can see some of these horizontal areas that we have highlighted line up pretty closely with these volume nodes. So these are areas to watch in the future for potential support. So around 540 or so, and around 510, and around 480. To the upside, +1 channel, standard deviation channel, 616. The +2 channel comes in near 681.
All right. Sounds reasonable to start thinking about where it could go to the upside. When you have like a steady kind of linear trend up and to the right, and then all of a sudden it starts going more like exponential, that's usually a sign that things are getting pretty heated. So pressure into earnings, but if they deliver, I mean, it could be like nitrous on top of already a pretty fast-moving chart. Texas Instruments, none of those adjectives really come to mind when I think of Texas Instruments. Fast-moving, nitrous. What's going on?
They sure don't, and especially because, I mean, we're expecting more weakness ahead. Like, based on guidance, we're expecting a contraction of 5% for revenue. That in itself is concerning when you are in AI, the fastest growing in most right now funded area of the market, and I think hugely because you look at the way this company operates, and I mean, the industrials area of the overall chip trade does remain challenged. I mean, right now it's estimated, really interesting key bank note I was reading that highlights about 26% of semiconductor demand is still from these autos and industrial end markets. PCs make up about 20%, but those two areas do remain sluggish. It hasn't been like full speed ahead for semiconductors, as we know. And their CEO on their last earnings call did say, apart from actually their Chinese market, which I will be very curious to hear an update on that, they actually see continued weakness for the rest of these automotive markets. So that's a concern. And the biggest risk, I think, does still remain inventory. They've had a really bad issue of like not being able to clear their current inventory and then respond to these new AI orders. So they've got to fix that, obviously. And I think that if China is seen as your savior of the rest of your fiscal year, that's a concern, given the fact that we're so right now, I'd say, volatile with our relationship with China. So I'll be curious any update on that.
That's a good point. As a chip maker, right in the crosshairs of that relationship, tension, tariff possibilities, also just not really an economy you want to bank on. Rick, it fell off pretty hard, but then has recovered. Tell me about this kind of half a V we got going on here.
Yeah, sure. So when we look back a little bit further, the big push to the upside came with this earnings event back here in April. And then we had, our rally to the upside. But ever since we moderated a little bit after that big push, we found a home near the 195 level or so, moved sideways here, and really very little net progress from that point here, despite some swings to the upside and the downside, even these highs near 220.39. That's the start of the V shape Oliver was talking about, where we had a sharp downward sloping wedge type shape, a falling wedge type shape here. We did have the breakout to the upside here that has seemed to have gained some traction, but still within the boundaries of this upward sloping white channel for the most part here. Notice that we did not test those old lows, our green line there. That was a high point before we had our breakout, and then a subsequent low around 180. So that could be a key point to watch to the downside. But momentum getting a little bit listless here. We have a longer-term downward sloping trend on our RSI, but we do also have an upward sloping green trend. We're above the 50 midline, but we're not taking out the previous highs on the RSI. So a little bit of a question mark here as we seem to be stalling out near the 63-day exponential moving average. So to wrap it up here, we can see our big volume area is right above us, 201. That's the point of control here, and that would be just above our old highs as well. So 199 to 201 could be an area worth watching. Then another high point right here, 207.67, 208 or so, lines up with the yearly linear regression line near 209. To the downside, that green line, like I mentioned, pretty close to our -2 standard deviation channel. So around 180, 178 or so.
It's not the worst this chart has looked. That there is support on the moving averages, that there's support on kind of this longer term gradual uptrend in, this period that we're looking at, but a lot of potential resistance too. Maybe it doesn't really kick in until 200 though, who knows, maybe that's kind of the line in the sand, the big whole number. So it's a pretty interesting chart. I like that look at Texas Instruments. Verizon, last one, tomorrow morning. What do we got?
So there's been, I feel like, this increased focus in some of these value stocks. I mean, if you're looking for basically the opposite of what we just talked about with like Intuitive Surgical and some of the semiconductor stocks, you could be interested in Verizon, given the fact, it pays like right now is 6.74% dividend yield.
That's nice.
That is nice. So that's about as attractive as things get here, because it's a pretty brutal chart, frankly. $39 is where we've been stuck. We were sideways for a lot of like the last year. It felt sideways when you just basically look at the fact that we've gone basically nowhere over a 12-month basis, but didn't always feel that way, as it definitely seems a volatility. But they have had some pretty major partnerships throughout the quarter. They did say that they had this massive test of efficacy for their fiber infrastructure and handling huge AI workloads. They also did collaborate with NVIDIA to power some real-time generative AI applications for their 5G private network. I think that helps whenever you're able to tag on to NVIDIA's success. But what's interesting about the telecom space is it's been somewhat monopolized by the fact that you have basically 3 companies competing trading. So I was reading a note today that highlighted that there's not really the competition on price for customers anymore. But given that, actually, Verizon's profit margins are increasing. And again, I mentioned its dividend, 7%, which compares to, say, about a 5% yield for AT&T, about 1.6% for T-Mobile. So it does have that going for it. But again, you have to really dig into, like, finding the value names. And I feel like we've been talking about the value trade forever, and it hasn't paid off. So that's one trade of thinking, sure, but it's a lot closer to the 52-week lows than it is to highs.
It's by breaking out.
Very true, and nice juicy dividend, not enticing people right now, I guess. Bouncing off that recent low, Rick, pretty ugly though, generally.
It's not great here. Really not much net progress for most of the past year that we're looking at here. Even the move downward off these highs, we're only down like 13.5% or so. Maybe looks a little more extreme than it is. Nevertheless, though, it's not good. We had this downward sloping trend line here matching up along the closing prices, not necessarily the intraday highs. And then if we extrapolate it, put it along our low point, it matched up pretty decently with those lows. Now we're finding ourselves in a situation where after this bounce that you described that took us beyond this blue trend line, this sharp, steep trend line, beginning with that high point that I mentioned earlier, now we're getting stuck. We're getting stuck at the bottom of our old channel and our yellow 21-day EMA, which are in confluence around 39. So the old support has now become a resistance point to watch. Even so, RSI
it's a nice breakout.
RSI broke out of its downward sloping trend line, though it remains below the 50 midline. Things won't really make a definitive turn until we cross above this resistance and cross above that RSI threshold of 50. We can see here volume profile point of control comes in just above us as well at 40, lining up with that significant low close from here. We topped out around that same area. That's our -1 standard deviation channel and our point of control all coming together around 40. So 40 to the upside looks significant. 37.59 our recent lows, -3 standard deviation channel near 37.
Okay. Yeah, not great. The breakdown, not great. The overhead resistance of the moving averages. Maybe this bounce can turn into something a little bit further before you start getting into real obvious resistance. But I mean, you could argue with the down channel too that we're kind of already there.
I mean, right here too, another big volume node plus 252 and 63-day EMAs right above. So between 40 to 41, even a pretty tight range with a lot to work through.
Yeah, it kind of looks like Verizon's running into walls. All right, good context, like the chart. Thanks, Rick. Thanks, Jenny. Good prep for earnings. Looking at the technicals for those names. Mostly tomorrow. When we return,
they about to dip on that one.
Firm up. Stocks going positive. The S&P 500 flips green. That little bounce in Bitcoin maybe was a sign of risk appetite building. BTC closer to 106 now, as chips also have firmed up. Semiconductors now only down 1%.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Arms down 12 bucks. You hit my support. Flood of red.
We got some action here as we count down the minutes until the president speaks at the Davos Economic Forum. It seems like there's some speculation running in markets as we firm up. Early softness. The S&P 500 and futures now positive. The index is the same too by a couple basis points. Bitcoin's trying to get started here, up 1%. Kind of gave the heads up that we were going risk on earlier in the hour. Alex Coffey's back with me in studio. Mike McCurr joins us, director at Schwab Advisor Services. A chart master himself, looking good, Mike. We don't see you enough, sir. What's up with that? No, just kidding. You're a busy guy.
No, it's all good. Sorry, the Zoom dropped, and then you caught me, combing my hair. Good to see you, Oliver.
It's all right.
Too.
Thanks, man. It's kind of a new thing that we've been doing on set. Where we had Jim Carson doing it the other day. All right. What do you think, Mike? S&P chart-wise, are we like full-throated breakout bull stampede, or did the chop at 61? Give us second thoughts.
A little bit in between both of what you just said. So we came extremely close yesterday to actually triggering a pretty rare breath thrust known as a Whaley breath thrust. We've talked about over the last 6-7 years. They're historically quite rare. We didn't get one yesterday, and usually they're quite bullish. It's really signaling a burst of short-term breath momentum.
We got that. We got the Whaley.
Cat's up today.
We were decimals away from it. The last one we got in July, which actually was a pretty big bust, and those are quite rare too. But it just shows that
Cat's had one heck of a run.
We've seen come out of that narrowing technical analysis formation, sort of in between a wedge, in between a triangle, implies that there was a hypersensitivity, in my opinion, to data that was going to move us one way or the other. And it, of course, was benign inflationary data that alleviated concerns not only about reinflation fears coming back into the market, also Fed, their impacts to their policy. And as a result, we're getting a big move higher in the broader market. So old resistance, I would now consider support right around that 5,980 level. That's that resistance level sloping to the downside, also the 50-day moving average. So that's your first support. Otherwise, we've got a couple gaps to the upside here, which could continue to move higher. If we move back down, plenty of support for the time being until the data forces investors to fear what they now don't really see as a fear.
Okay. So just to iterate again real quick, we haven't hit the Whaley breath thrust.
HIMX is up huge.
You nailed it. What was it like? It was pretty close to like the October lows a year and a half ago or whatever. Like, didn't we have a Whaley breath thrust then? Because I was kind of laughing about the name.
We had both a Whaley breath thrust and a Zweig breath thrust. And historically, those produce upwards of double-digit returns in the S&P. Nearly 100% of the time, 12 months later, we certainly have that be the case. Once again, they don't come around very often. In the last 50, 60 years, there's only been about 24 of them, so it's always good to watch them. But we did not get one this time on the Whaley, and that 5-day period has ended, so it's not really on the table anymore.
Okay. That's why we love Mike McCurr, right?
It is. I think the last time I talked to Mike McCurr, heard him talk, he was talking about this. So it might have really been that long ago.
No, I mean, the Whaley breath thrust, like when it really, really hit, just totally nailed it.
Well, it hit my resistance on the SPX, broke it.
Hand comb there. Well, that's a good strategy. I need to implement that myself. But I brought some more. I did a little bit more looking into some of that CTA conversation we had earlier. One thing that I think is interesting, this may combine a little bit to what Mike's talking about, which is looking for things that could cause the market to continue to go higher. Clearly the trend's been up, but we talked about that reduced exposure on some of those rules-based trading advisors. Well, if we just stay flat or move higher, according to the Goldman trade desk team, those same funds would be expected to add back basically, 15 to 30 billion dollars in the next 30 days. For context, where we're sitting right now is net exposure of about 30. So it would basically be like increasing the exposure again by 50 to 100% from where they're at, which is pretty significant.
Yeah. Okay. That's kind of where I guess the rubber meets the road, which is when you get to new highs and they either act as walls and you double top, or they kind of act as slingshots to kind of take that momentum and push it even further. There's not a lot, like, people always like wish and look for double tops, but I mean, it's not like a very prominent thing, right? I mean,
No.
I know there's a couple big ones in history. There's like a pretty big double top, I think, .com maybe. Mike, am I imagining things?
No, I don't think that you are. I mean, to really put that into the conversation at this point, I think is
way too early.
A little out of place, premature.
For sure. Yeah.
From what the market's showing right now, especially when we look at the options market, this is a really interesting one. Typically, I like to look at 25 delta risk reversals, and what that means in layman's terms is you look at the 25 delta strike on the puts and the calls, and you look at the changes in implied volatility at each strike. When we get into the big bear downside moves, you see volatility on the puts just skyrocket, calls come down, fear comes into play. We're almost back to even parity on the 25 delta risk reversal, which tells me there's no fear in the market right now. VIX at 14, equities have support in my opinion.
Yeah, love the context, love the analysis. That's why we need more McCurr. Thank you, Mike. Great stuff. Thanks, Alex Coffey, too. A fantastic bond conversation earlier. And a good close to the show there. All right, listen up, see what the president says at Davos. Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe.
AMD did bounce back up.
Now.
$3. Apple's pulled back to the 200 right here on the 1 minute.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
It's now my lunchtime.
Unlock support from the Schwab Trade Desk.
I ain't traded much at all.
Live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Morning
Netflix.
Movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning
pulled back and
Movers
hit my
covers
first
it all.
support.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Pedalides. We're live on the floor of the New York Stock Exchange with a big show for you today. Our 360 Spotlight. I'm joined by the CEO of Calamos Investments, growing assets under management, launching the new Bitcoin ETFs that they want to tell you about. You'll want to hear about that. Our disruptor, Palantir. And Dan Ives thinks there is still upside after an over 300% rally. Our panel taking a look at the airline.
I'm gonna put my lunch on the thing, and I'll be right back.
Here's a look at the numbers. We right now are seeing the S&P 500 6090. We broke into new record highs yesterday, then pulled back some. So right now we are looking at whether or not we'll hit some new record highs.
Well, that's standard deviation.
Today, 6,181 was the high yesterday.
That's what that is.
The Nasdaq pulls back down a third of 1%.
Woo, SPY.
83 points. The Russell down a quarter of 1%. Gold losing $19 at $27.52 a troy ounce. Oil 75.63 the barrel. That's gaining slightly. The VIX at 14.73. So that's.
God, I missed that.
There's the 10-year bond yield for you, 4.65%. Like seeing that up there. 108.13 on the dollar, and Bitcoin 105,410. You remember the record of over 110,000 earlier in the week. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on Schwab Network, taking a look at GE Aerospace, a best performer on the S&P 500, surging since the company split. And tell us a little bit more. Certainly seems to be paying off at 201 today.
Yeah, no kidding, Nicole. Not a whole lot to complain about here as far as their quarterly update, as the results were definitely strong. We saw about $9.9 billion as far as their fourth quarter sales, operating profits of $1.9
billion. 300 and 400% on the SPX.
$1.32 versus the $1.02 expected. Net orders were also up 32% from last year. We also saw that revenue pace of growth was about 10%, which now they do expect for 2025 a lot of the same. They're expecting their pace of revenue to rise around 10%. That would put it in line with prior forecasts. The midpoint of their operating profit guidance was also about $8 billion, which aligns with estimates. And the midpoint of their earnings guidance was also slightly ahead of what the street had been expecting at $5.30 a share. But the reaction, I think, that is so amazing is this name had already climbed about 80% over the last 12 or so months, beating most of the major performers in their various sectors, as well as the S&P 500. But it does seem as though demand, at least in the commercial and defense aerospace industries, look very solid, especially when we get, hopefully, more supply. We do know that production at Boeing and Airbus has been constrained for years as a result of some of these internal problems, as well as supply chain shifts really following the pandemic. But right now, we are expecting this to improve, and GE Aerospace CEO did say that the operations and the production of their key suppliers improved in 2024. And
What time are you in? 9:34?
So all things considered, an amazing report from a company that has already been trading at a relatively high premium and also had seen a very high bar going into earnings. We do know.
Say don't sell the SPY until we dip below the 9.
Another component of GE that spun off last April didn't see the same kind of love on the back of earnings.
The 9 EMA on the 1 minute.
I think what is working right now in this market, and that's defense, especially with a new administration.
It seems like time we should start selling them.
Trend to the defense budgets and defense spending. So lots of upside today, up about 7%, and we're even slightly off of session highs here, which we did touch around $207 a share.
Yeah, it's true.
That's a good breakout.
This GE Aerospace now seeing the highest levels since 2001, as you noted. I mean, pretty nice showing here. Okay, thank you, Jenny Horn, markets correspondent. Great to see you. Let's get some insights in the news shaping the markets. For that, we welcome in Ted Weisberg, founder, president, Seaport Securities, is here. Good to see you. I want to get a broad market take, but I have to kick it off with the airlines. You had liked UAL, which really was doing well, right? That has been a game changer. 1 year, it's up 173%. Kudos to you. But what happened with American Airlines? I don't know that the group is so great.
Well, you know, you need to have a sense of humor in this business. And American reminded me today what a stupid, horrible business the airline business is. We're still long the UAL, and you know, UAL was last year's third biggest percentage gainer. Hard to believe that an airline would have been in the top 10 list of percentage gainers. So, yeah, I'll pat myself on the back for UAL. It was a great trade. We bought it in the low 40s and stayed with it, and we're still going to stay with it. But I got a little too greedy, and I thought, you know, I good news for Delta, good news for United. It's got to be good news for American. How wrong could I be?
And about 9% wrong.
Yeah.
Certainly you're seeing the big move here.
He's joking about it.
To date, it's down 2.6%, but it's still a winner over 1 year, up about 25%. Let's have your big picture. You have a new administration and Trump 2.0. Some of your thoughts. Are you feeling more optimistic, less optimistic, or much more in a wait-and-see mode?
I'm still in a wait-and-see mode, quite frankly. You know, when the rubber meets the road and we get a little time under our belts with the new administration, we'll find out where we are. But for the moment, I'm just kind of staying the course, not trying to do anything dramatic. The markets are a bit pricey, if not overbought dramatically. Hard to find new stocks to buy other than the stuff that we talked about that we bought at the year end in December. You know, those lumps of coal that hopefully will turn into to diamonds. But for the most part, we're just kind of picking our shots where we see some
Trump is speaking.
weakness in names we like. For example, we
Anybody have a link?
Chubb positions.
Which has been a great pick.
Well, and the stock got beat up pretty good because of the LA fires.
I didn't look after that.
Yeah, but in fact, all insurance stocks are always good buys, you know, when they have a lot of negative exposure to events, because all they do is raise the premiums the next year and they get it all back. And then
Contractors will soon be asking for their 1099. Don't keep them waiting.
Wealthier and more united than ever before, and the entire planet will be more peaceful and prosperous as a result of this incredible momentum and what we're doing and going to do. My administration is acting with unprecedented speed to fix the disasters we've inherited from a totally inept group of people and to solve every single crisis facing our country. This begins with confronting the economic chaos caused by the failed policies of the last administration. Over the past 4 years, our government racked up $8 trillion in wasteful deficit spending and inflicted nation-wrecking energy restrictions, crippling regulations, and hidden taxes like never before. The result is the worst inflation crisis in modern history and sky-high interest rates for our citizens and even throughout the world. Food prices and the price of almost every other thing known to mankind went through the roof. President Biden totally lost control of what was going on in our country, but in particular with our high inflation economy and our border. Because of these ruinous policies, total government spending this year is $1.5 trillion higher than was projected to occur when I left office just 4 years ago. Likewise, the cost of servicing the debt is more than 230% higher than was projected in 2020. The inflation rate we are inheriting remains 50% higher than the historic target. It was the highest inflation probably in the history of our country. That's why from the moment I took office, I've taken rapid action to reverse each and every one of these radical left policies that created this calamity, in particular with immigration, crime, and inflation. On day one, I signed an executive order directing every member of my cabinet to marshal all powers at their disposal to defeat inflation and reduce the cost of daily life. I imposed a federal hiring freeze, a federal regulation freeze, a foreign aid freeze, and I created the new Department of Government Efficiency. I terminated the ridiculous and incredibly wasteful Green New Deal. I call it the Green New Scam. Withdrew from the one-sided Paris Climate Accord and ended the insane and costly electric vehicle mandate. We're going to let people buy the car they want to buy. I declared a national energy emergency, and it's so important, national energy emergency to unlock the liquid gold under our feet and pave the way for rapid approvals of new energy infrastructure. The United States has the largest amount of oil and gas of any country on earth, and we're going to use it. Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto. My administration has also begun the largest deregulation campaign in history, far exceeding even the record-setting efforts of my last term. In total, the Biden administration imposed $50,000 in additional regulatory costs on the average American household over the last 4 years. I have promised to eliminate 10 old regulations for every new regulation, which will soon put many thousands of dollars back in the pockets of American families. To further unleash our economy, our majorities in the House and Senate, which we also took along with the presidency, are going to pass the largest tax cut in American history, including massive tax cuts for workers and families, and big tax cuts for domestic producers and manufacturers. And we're working with the Democrats on getting an extension of the original Trump tax cuts, as you probably know, by just reading any paper. My message to every business in the world is very simple. Come make your product in America, and we will give you among the lowest taxes of any nation on earth. We're bringing them down very substantially, even from the original Trump tax cuts. But if you don't make your product in America, which is your prerogative, then very simply you will have to pay a tariff, differing amounts, but a tariff which will direct hundreds of billions of dollars and even trillions of dollars into our treasury.
You don't need to say that, you idiot.
Down debt. Under the Trump administration, there will be no better place on earth to create jobs, build factories, or grow a company than right here in the good old USA. Already Americans, you can see this, I think, maybe even in your, in your wonderful, wonderful room that you're all gathered together. So many of my friends, but Americans, the economic confidence is soaring like we haven't seen in many, many decades, maybe not at all. Upon my election, it was just announced that small business optimism skyrocketed by 41 points in a single month. That's the highest ever. There's never been anything like that. SoftBank has announced between a $100 and $200 billion investment in the U.S. economy because of the election result. And just 2 days ago, Oracle, SoftBank, and OpenAI announced a $500 billion investment in AI infrastructure. Other companies likewise have announced billions and billions and billions, adding up to trillions of investment in America, in the United States. And it's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion.
Yes, I called him a nasty name.
Very good to them. And I'm also going to ask
people should still be able to manufacture in their own house without penalizing them.
Bring it down, which frankly I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent, for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us. All over, the progress that you're seeing is happening because of our historic victory in a recent presidential election, one that has become quite well known throughout the world. I think a lot of things are happening to a lot of countries. They say that there's light shining all over the world since the election, and even countries that we aren't particularly friendly with are happy because they understand what there is a future and how great the future will be. Under our leadership, America is back and open for business, and this week I'm also taking swift action to stop the invasion at our southern border. They allowed people to come in at levels that nobody's ever seen before. It was ridiculous. I decided and declared to do, and very, very importantly, a national emergency on our border, immediately halted all entry of illegal border crossers, of which there were many, and began promptly returning the illegal trespassers back to the place from which they came. That action, as you've probably seen, has already started very strongly. I've deployed active duty U.S. military and National Guard troops to the border to assist in repelling the invasion. It was really an invasion. We will not allow our territory to be violated. After 4 long years, the United States is strong and sovereign and a beautiful nation once again. It's a strong, sovereign nation. In addition, I'm pleased to report that America is also a free nation once again. On day one, I signed an executive order to stop all government censorship. No longer will our government label the speech of our own citizens as misinformation or disinformation, which are the favorite words of censors and those who wish to stop the free exchange of ideas and, frankly, progress. We have saved free speech in America, and we've saved it strongly. With another historic executive order this week, I also ended the weaponization of law enforcement against the American people and, frankly, against politicians, and restored the fair, equal, and impartial rule of law. My administration has taken action to abolish all discriminatory diversity, equity, and inclusion nonsense, and these are policies that were absolute nonsense throughout the government and the private sector. With the recent yet somewhat unexpected great Supreme Court decision just made, America will once again become a merit-based country. You have to hear that word, merit-based country. And I've made it official, an official policy
That
of the
I agree
United
with.
States that there are only 2 genders, male and female. And we will have no men participating in women's sports, and transgender operations, which became the rage, will occur very rarely. Finally, as we restore common sense in America, we're moving quickly to bring back strength and peace and stability abroad. I'm also going to ask all NATO nations to increase defense spending to 5% of GDP, which is what it should have been years ago. It was only at 2%, and most nations didn't pay until I came along. I insisted that they pay, and they did, because the United States was really paying the difference at that time, and it was unfair to the United States. But many, many things have been unfair for many years to the United States. Before even taking office, my team negotiated a ceasefire agreement in the Middle East, which wouldn't have happened without us, as I think most of the people in the room know. Earlier this week, the hostages began to return to their families. They are returning, and it's a beautiful sight, and they'll be coming in more and more. They started coming back on Sunday. Our efforts to secure a peace settlement between Russia and Ukraine are now hopefully underway. It's so important to get that done. That is an absolute killing field. Millions of soldiers are being killed. Nobody's seen anything like it since World War II. They're laying dead all over the flat fields. It's a flat field farmland, and there's millions of Russians and millions of Ukrainians, and nobody's seen anything like it since World War II. It's time to end it. And here in America, we have big events coming up. Next year, we have the 250th anniversary of America's founding. I'm so honored to be president during that. That's been a big event. They've been talking about it for 10 years. We also have the World Cup, and I understand Gianni's in the room. Infantino, he was very instrumental in helping us get it. He's there with you someplace, I think, and I want to thank him for that. And then we have the Olympics coming up, which I was instrumental in getting also in my first term, and who would have known that by skipping a term I would get the Olympics. I was upset. I said, you know, I got the Olympics to come and I won't be president, but it turned out through a stroke of luck, or whatever you might call it, that I'm going to be president during the World Cup and the Olympics and the 250th anniversary. So that's going to be 3 big events. And we've accomplished more in less than 4 days. We have really been working 4 days than other administrations have accomplished in 4 years. And we're just getting started. It's really an amazing thing to see, and the spirit and the light over our country has been incredible. Under the last administration, our nation has suffered greatly, but we're going to bring it back and make it greater, bigger, stronger, better than ever before. I want to thank everybody for being with you. I would have been there myself, except the inauguration was 2 days ago. I thought it might be a little bit quick to make it the first stop. But we'll get there one day. We hope to get there. But I do appreciate, I heard the audience is fantastic, and many of my friends are in the audience. And I will be taking questions now from some very distinguished people. Thank you all very much.
You think Biden could talk like that?
Thank you very much, Mr. President, for that very powerful speech. And I think you could hear the applause all the way from Davos to the White House. But next year it will be even better, because then you can get the applause here in Davos. So we wish you welcome to our village next year. We hope to see you.
Yay.
Thank you very much.
So, we also know, Mr. President, that you open up for interaction here. We have a great panel with some of the most distinguished business people in the world. Let me start with someone that you know really well, that I think is almost a neighbor of you in in Florida. Mr. Steve Schwartzman, Chairman, CEO, and co-founder of Blackstone Group. So, Steve, floor is yours.
Well, Mr. President, I'm sure the Crown Prince of Saudi Arabia will be really glad you gave this speech today.
What do you mean by that?
You've had the busiest 4 days that anybody can imagine, and congratulations for that. My question is about some of the things I've observed here at Davos. It's a terrific forum. I've met lots of people, as usual.
Spy working on a new high.
I've been here 30 years, and a lot of the European
Now, Randy, we got
people.
We got some resistance at 607.60.
Frustration with the regulatory regime.
607.60
in the EU, and they attribute slower growth rates here.
60.62.
Because of the numerous factors, but especially because of regulations. And you've taken a completely different approach in this area.
Yes.
And if you could explain the theory of what you're doing, how you're going to do it, and what you expect the outcome to be, I'd appreciate it.
Well, thank you very much. And
it's a simple question.
Steve, you're a friend of mine, but on a great career. You've had an amazing career, and it continues. Just want to congratulate you. Very inspirational to a lot of people. I want to talk about the EU, because you mentioned specifically that I've also had a lot of friends and leaders of countries. I've gotten to know them all my first term and a little bit during this period of 4 years, and know them well, like them a lot.
Like them a
But
lot.
they're very frustrated because of the time everything seems to take to get approved. Environmental impact statements for things that you shouldn't even have to do that, and many, many other ways that it takes. And I'm going to give you a quick little example. In the private life, my beautiful private life, before I had all these things happening, the world is a little different. I had a nice, simple life. You knew that. But when I had that simple life, I did projects. And I had a big project in Ireland. And it had to get approval on something that would have made it even better. And I got the approval from Ireland in a period of a week. And it was a very, very, very efficient, good approval. And they informed me, though, the problem is you're going to have to get it from the EU, and we think that'll take 5 to 6 years. And I said, you have to be kidding. And this was before politics. And I said, wait a minute, it's not that important. I don't want to go 5 or 6 years, but it would have been a big investment. It would have been nice, and it would have been good for the project. And I sent the people to the EU to see if they could speed it up, and basically it was a 5 or 6 year wait just to get a simple approval that Ireland gave me in a period of literally not much more than a week. And I realized right then, that was the first time I really was involved with the EU, but I realized right then that's a problem, and I didn't even bother applying to do it. And or if I did, I pulled it very quickly. I have to be very accurate because I don't want to be criticized. He did apply, actually. No, I want to be very accurate. So I don't think I did, but if I did, I pulled it very quickly. It was just something you couldn't wait 5 years or 6 years to get an approval. So a lot of, in a very big business sense, a lot of people are claiming that's the problem. From the standpoint of America, the EU treats us very, very unfairly, very badly. They have a large tax that we know about, and a VAT tax, and it's a very substantial one. They don't take our, essentially don't take our farm products, and they don't take our cars, yet they send cars to us by the millions. They put tariffs on things that we want to do, like, for instance, I think they actually, in terms of, these are non-economic or non-monetary tariffs, and those are very bad, and they make it very difficult to bring products into Europe, and yet they expect to be selling, and they do sell their products in the United States. So we have, hundreds of billions of dollars of deficits with the EU, and nobody's happy with it, and we're going to do something about it, but nobody's happy with it. So I think the EU has to speed up their process. Friends of mine that are in some of the nations within the EU, great people, they want to be able to compete better, and you can't compete when you can't go through the approval process fast. There's no reason why it can't go faster. So, I'm trying to be constructive because I love Europe. I love the countries of Europe, but the process is a very cumbersome one. And they do treat the United States of America very, very unfairly with the VAT taxes and all of the other taxes they impose. One other, just to finish up, I got a call from the head of a major airline, one of the biggest airlines in the world, and he said, "Sir, could you help us? What? Landing in Europe is brutal. They charge us fees for everything, and it's so unfair." I said, "How does it compare to China?" He said, it's much worse. And the other thing, as you know, they took court cases with Apple, and they supposedly won a case that most people didn't think was much of a case. They won 15 or 16 billion from Apple. They won billions from Google. I think they're after Facebook for billions and billions. These are American companies, whether you like them or not, they're American companies, and they shouldn't be doing that. And that's, as far as I'm concerned, it's a form of taxation. So we have some very big complaints with the EU. Thank you.
Thank you very much, Mr. President. We'll now go to one of your friends in the EU, Patrick Poyana. He's the chairman and CEO of Total Energies. I guess you have a question ready, Patrick, for the president.
Mr. President, as we understand, energy is at the top of your agenda, and it's an honor for me to represent the energy industry tonight. In this panel, Total Energies is indeed the fourth largest oil and gas and electricity company in the world. I will not ask you a question about the oil price. It's quite clear what you expect from us. I will go to gas more. And our company is the largest #1 exporter LNG from the US company. We are a strong contributor to, and we invest in a mammoth LNG projects in Texas, $20 billion. It's far from 200, but it's $20 billion. And we contribute with that to security of supply to Europe, as we export this LNG to Europe. Some experts fear that if there are too many projects developed in the US on LNG, this could have an inflationary impact on the US domestic gas price. And they recommend a pause on these projects. I would ask you the following question: what are your views about such a pause on investments on LNG in the US? What would happen if you would observe an increased domestic gas price because of these exports? And final question, which is important for Europe: would you agree to guarantee security of supplies of US LNG to Europe?
Well, on the last part of your question, yes, I would. I would make sure that you get it. If we make a deal, we make a deal, you'll get it. because a lot of people do have that problem. They make a deal and then it can't get supplied because of war-type problems and other problems. So we would absolutely do that. LNG is very interesting because when I took office for the first term, one of the first things I looked at was there were two very massive plants in Louisiana, a state that has been very good to me, won it by many, many points. And I felt strongly indebted to it, actually. And they said there are two plants that have been under environmental consideration for more than 10 years. And they were costing, as you say, you know how expensive those plants are, but they were costing like 12 billion and I think 14 or 15 billion, but they couldn't get their permits. They were in review for years, many, many years, like a decade or more. And I said, so ridiculous. I know so much about that because in the construction industry, I had to go through it too, but I got good at it after a while. But I saw the projects, and you're talking about a total investment of 25 to 30 billion dollars, and it looked like it was going to end. They couldn't get their permits, and I got them done in less than a week. It was done, completed. In fact, when they called them to announce that it was done, the countries, largely countries, Japan was involved, and another country, and some very big investors, they couldn't believe it. They actually couldn't believe it. And I said, just do yourself one favor. Don't pay any consultants, because the only one that got it done was me. I got it done because it was the right thing to do for the U.S. and for the world, but the consultants had nothing to do with it. You know, the consultants go in and they say, give us millions of dollars because Trump did it. Nobody called me about it. I just heard it was a problem for years. And I got it done because it was the right thing to do for the U.S. and the right thing to do for beyond. It had to do with energy, very important. So I think it's very important. I think I disagree with one. I think the more that you do, the lower the price is going to go. And what I'd like to see is rapid approvals. We're going to get very rapid approvals in the United States, like with the AI plants, talking to many people want to build them. That's going to be a very big thing. We're going to build electric generating facilities. They are going to build. I'm going to get them the approval. Under emergency declaration, I can get the approvals done myself without having to go through years of waiting. And the big problem is we need double the energy we currently have in the United States. Can you imagine? For AI to really be as big as we want to have it, because it's a very competitive, it'll be very competitive with China and others. So I'm going to give emergency declarations so that they can start building them almost immediately. And I think it was largely my idea because nobody thought this was possible. It wasn't that they were not smart, because they're the smartest. But I told them that what I want you to do is build your electric generating plant right next to your plant as a separate building connected. And they said, wow, you're kidding. And I said, no, I'm not kidding. You don't have to hook into the grid, which is old and, could be taken out. If it's taken out, they wouldn't have any way to get any electricity. So we are going to allow them to go on a very rapid basis to build their plant, build the electric generating plant.
Spy back to resistance.
Anything they want, and they may have coal as a backup. Good, clean coal, If there were a problem with a pipe coming in, as an example,
60762,
and a pipe gets.
I still think we're going to see the VWAP.
For some reason doesn't work. There are some companies in the U.S. that have coal sitting right by the plant, so that if there's an emergency, they can go to that short-term basis and use our very.
Spies at 60762 and pulling back a little bit. It's got to break that resistance to go higher. If not, we're going to see the VWAP.
Get a little smaller, might make it a little different shape, but coal is very strong as a backup. It's a great backup to have that facility, and it wouldn't cost much more money. And we have more coal than anybody. We also have more oil and gas than anybody. So we're going to make it so that the plants will have their own electric generating facilities attached right to their plant. They don't have to worry about a utility. They don't have to worry about anything. And we're going to get very rapid approvals.
Thank you. Thank you so much, Mr. President. We'll now go to another CEO that you know very well, Brian Moynihan, the CEO and Chair of Bank of America.
Good afternoon, Mr. President, and congratulations, and obviously a eventful week for you and your family. If you remember 5 years ago, you came here and we walked among 150 CEOs from all over the world and you engaged with them about your policies and your procedures. This year you're not here, and yet this week was eventful from the orders that you mentioned earlier, literally a wave of orders coming out on immigration, on trade, and many other matters.
The video?
So, as a representative of the United States here, we got a lot of questions about what does all this mean and how would the president square this with his clear focus on growth, prosperity, market growth, stock market growth, a good bond market, and bringing down prices. So how do you think about the impact of all these orders and how fast they come out and how you're going to balance them with that scorecard of being successful in both continuing GDP growth, bringing down inflation, and also having a good stock price appreciation for the American citizen?
Well, I think it's going to actually bring down inflation. It's going to bring up jobs. We're going to have a lot of jobs. We're going to have a lot of companies moving. And, you know, Brian, we're at 21%. It was at 40%, and I got it down to 21%, the corporate tax. And it was actually, if you look at state and city, it was in many cases much higher than 40%. I got it down to 21%. And now we're going to bring it down from 21 to 15% if, there's a big if you make your product in the U.S. So we're going to have the lowest, just about the lowest rate. It'll be, the 21 is on the low side worldwide. The 15 is about as low as it gets. And by far the lowest of a large country, a large, you know, rich, powerful country by far, not even a contest. So we're going to bring it down to 15% if you make your product in the USA. So that's going to create a tremendous buzz. We're also probably going back to the 1 year deduction where we deduct, you know, we did that originally, and that was amazing what the impact that had, the 1 year deduction, which built up over a period of time and then it expires. But we're going to go back to that when we do the renewal of the Trump tax plan. We have to get Democrats to approve it. But, you know, if the Democrats didn't approve it, I don't know how they can survive with about a 45% tax increase, because that's what it would be. And so I think they're going to do. We've been working along with them pretty well. I think it's very hard for a political group to say, let's charge people 45% more. So I think we're in good shape. But we're actually doing a reduction for business and small businesses where you're going to bring it down to 15%, which is really something. And by the way, speaking of you, and you've done a fantastic job, but I hope you start opening your bank to conservatives, because many conservatives complained that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. They don't take conservative business, and I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Mr. President, I'll say that your friend Gianni said hello, told me to tell you hello, and we look forward to sponsoring the World Cup when it comes, both this summer for the club and next year. So thank you for getting that for the United States.
Thank you very much, Brian.
Thank you, Mr. President. We'll now go to Ana Butin. She's the executive chairman of Banco Santander, one of the big European banks, and also in the U.S. So, Ana.
Mr. President, congratulations on a historic victory. I believe you don't know me as well as my fellow panelists, so a few words. Santander is one of the largest banks in the world by number of customers, 170 million. That's more than my friend Brian or my friend Jamie have. And those...
They fixed the regulation.
That's coming, that's coming.
That was cheeky.
We're a big investor in the United States. We have many million customers, 12,000 employees. We're one of the largest auto lenders. And we recently launched a fully digital bank called Open Bank. We strongly believe banks have a pivotal role in the economy, and we can accelerate growth and help many more customers. That's what we're doing in the United States. So, as Brian pointed out, we very much welcome your focus on deregulation and reducing bureaucracy. So my question is, what are your priorities in this regard, and how fast is this going to happen? Thank you very much.
I think it's going to, thank you and congratulations. I know very much about your bank, and you've done a fantastic job. Congratulations. We are going to move very quickly. We've moved very quickly. We've done things in the last 3 days that nobody thought were possible to do in years. And it's all taking effect. It's going to have a huge impact on the economy, a huge positive impact. Money was being wasted on crazy things. I mean, the Green New Deal was such a total disgrace. How that was perpetrated, and it was conceived of by people that were average students, less than average students, I might add, and never even took a course in energy or the environment. It was just a game. Remember, the world was going to end in 12 years. Remember that? Well, the 12 years has come and gone. It was going to end. It was going to all foam into earth. But you know, the time has come. These people, and they really scared the Democrats large. I can't say the Republicans. The Republicans maybe could have fought harder to stop it, but it's been a tremendous waste of money. You know, during my 4 years, we had the cleanest air, we had the cleanest water, and yet we had the most productive economy in the history of our country. We had the most productive economy until COVID came. We had the most productive in the history of our country by far, and actually, you could look worldwide. We were beating everybody from China to everybody else. So, and we think we really now, with what we have learned and all of the other things that have taken place, we think we can even far surpass that. Actually, far surpass it. But we do. One thing we're going to be demanding is we're going to be demanding respect from other nations. Canada. We have a tremendous deficit with Canada. We're not going to have that anymore. We can't do it. I don't know if it's good for them. As you probably know, I say you can always become a state. And if you're a state, we won't have a deficit. We won't have to tariff you, et cetera, et cetera. But Canada has been very tough to deal with over the years, and it's not fair that we should have a $200 billion or $250 billion deficit. We don't need them to make our cars, and they make a lot of them. We don't need their lumber because we have our own forests, et cetera, et cetera. We don't need their oil and gas. We have more than anybody. So, you know, just as an example, with Mexico, we're dealing with Mexico, I think, very well. And we're just, you know, we just want to be treated fairly with other nations because there's hardly a nation in the world, and I blame this on us, and I blame it on politicians that, for some reason, I'm probably mostly it's stupidity, but you could also say other reasons, but mostly stupidity. They've allowed other nations to take advantage of the U.S., and we can't allow that to happen anymore. You know, we have debt. It's a very small debt when you compare it to the value of the assets that we have, but we don't want to do that. We want to just have debt be obliterated, and we'll be able to do that fairly rapidly. And a lot of good things are going to happen. And honestly, good things are going to happen for the world, and good things are going to happen for the people that are dealing with us.
Video got an up alert.
Beyond allies. One thing very important, I really would like to be able to meet with President Putin soon to get that war ended. And that's not from the standpoint of economy or anything else. It's from the standpoint of millions of lives.
NVIDIA double top.
People are being shot in the battlefield. You know, the bullet, very flat land, as I said, and the bullet goes, there's no hiding, and a bullet, the only thing going to stop the bullet is a human body. And you have to see, I've seen
tree
pictures
wood.
Of what's taken place.
Concrete wood, a tank.
We really have to stop that war. That war is horrible. And I'm not talking economy, I'm not talking economics, I'm not talking about natural resource. I'm just talking about there's so many young people being killed in this war, and that's not including the people that have been killed as the cities are being, you know, knocked down building by building. So we really should get that stopped. Likewise in the Middle East, I think we've made a lot of progress in the Middle East, and I think that's gonna come along pretty well.
Thank you, Mr. President. We know that the most consequential relationship in the world is between the U.S. and China. U.S. 28% of the global economy, China close to 20%. That's almost half of the global.
I got a call from you.
And we know that you called President Xi Jinping last Friday. We heard that you had a good discussion. How do you see the relationship between the U.S. and China in the next 4 years under your leadership?
he called me. But I see it very good. I think that we're going to have a very good relationship. All we want is fairness. We just want a level playing field. We don't want to take advantage. We've been having massive deficits with China. Biden allowed it to get out of hand. He's $1.1 trillion deficit. It's ridiculous. And it's just an unfair relationship. And we have to make it just fair. We don't have to make it phenomenal. We have to make it a fair relationship. Right now, it's not a fair relationship. The deficit is massive, as it is with other countries, a lot of Asian countries, actually. But we have deficits that are very big, and we can't keep doing that. So we're not going to keep doing that. But I like President Xi very much. I've always liked him. We always had a very good relationship. It was very strained with COVID coming out of Wuhan. Obviously, that strained it. I'm sure it strained it with a lot of people, but that strained our relationship. But we always had a great relationship, I would say, and we look forward to doing very well with China and getting along with China. Hopefully, China can help us stop the war with, in particular, Russia, Ukraine. They have a great deal of power over that situation, and we'll work with them. And I mentioned that with during our phone conversation with President Xi, and hopefully we could work together and get that stopped. We'd like to see denuclearization. In fact, with President Putin, prior to an election result, which was frankly ridiculous, we were talking about denuclearization of our two countries, and China would have come along. China has a much smaller, right now, nuclear armament than us, or field than us, but they're going to be catching it at some point over the next 4 or 5 years. And I will tell you that President Putin really liked the idea of cutting way back on nuclear, and I think the rest of the world, we would have gotten them to follow, and China would have come along too. China also liked it. Tremendous amounts of money are being spent on nuclear, and the destructive capability is something that we don't even want to talk about today, because you don't want to hear it. It's too depressing. So we want to see if we can denuclearize, and I think that's very possible. And I can tell you that President Putin wanted to do it. He and I wanted to do it. We had a good conversation with China. They would have been involved, and that would have been an unbelievable thing for the planet.
Mr. President, when you're back here in Davos next year, will there be then a peace agreement with Ukraine and Russia by then?
Yes.
Well, you're going to have to ask Russia. Ukraine is ready to make a deal. Just so you understand, this is a war that should have never started. If I were president, it would never have started. This is a war that should have never, ever been started. And it wasn't started during there was never even talk about it. I knew that it was the apple of President Putin's eye, but I also knew that there was no way he was going in, and he wasn't going to go in. And then when I was out, bad things happened, bad things were said, a lot of stupidity all around, and you end up with what you have. Now you have all these bombed out cities. They look like demolition sites with many people killed. I think the thing that you'll see about Ukraine is that far more people have died than is being reported. And I've seen that. But far more people have died. When you look at a city that's become a demolition site where big buildings have been collapsed by missiles hitting them and everything else, and they say one person was slightly injured. No, many people were killed. Those are big buildings. I was surprised at how that was my business. These are buildings that go 2 and 3 blocks long. They're 20 stories high. They're big, powerful buildings, and they were knocked down, and there were a lot of people in those buildings. It announced that 2 people were injured. That's not true. So I think you're going to find that there were many more people killed in Ukraine in the Ukraine war than anybody has any idea. But if you look now, so many of the people being killed are soldiers just facing each other with guns, rifles, and drones, the new form of warfare, drones. And it's a very sad thing to see. And when you see pictures of the fields that I see, nobody wants to see it. You'll never be the same.
Thank you very much, Mr. President, on behalf of all the 3,000 participants here in Davos. We really underline that joining us the third day in your presidency, live taking questions here is so appreciated, and we are already ready for receiving you next year in person. So thank you very much, and all the best from Davos.
Thank you. Thank you very much. Thank you.
Well, I think that was pretty good myself. We have been taken advantage of. Plus, I like the fact that he did it at home. I mean, Biden had flown the plane around so much, and along with that plane, it just talked about the environment. For him being an environmental president, he flew the plane more than anybody of all presidents. Just, I mean, he took more vacations flying to Davos and Rome and all these other vacations. And for being an environmental president, that's what I used to get pissed off about Obama about. To go give a 5-minute speech and then fly back. He did it every time. He didn't get on the internet and do it the right way. I mean, that was brilliant. And he can speak. No word salad at all. Russia's a bigger country than Ukraine. It's not fair. Russia's a bigger country and it's north of Ukraine, and it's not fair. Biden says, yeah, go ahead and go into Ukraine. He said it. He said it. I heard him say it. It's going to be a small excursion. You know, it's going to be very short-lived. It's going to be small, and it didn't turn out to be small. Millions of people have died. And then to fuel the fire, and he can't even frickin' speak. And what they've done to the environment is horrifying. The fires, the Maui, I mean, that's my hometown. I mean, it burnt down. I was born in California. It's frickin' burnt down. And then the invasion over the border. I mean, it's just horrifying. I want any immigrant to come to America, but you got to at least speak the language. And know a little bit of history and not be a mooch. I'm not sure. I don't know about all the taxes and stuff. I probably should educate myself better than that, but I know Europe was warned about energy, buying it from Russia. And I do believe that Putin will talk to Trump and get these stupid warmongers out of there. The deep state. I think we could even be friends with Iran if you just talk to them decently. Instead of giving them money. Billions and billions are getting given to the Taliban. So we just have to see him. I like the fact that regulations is a big, big problem. My cost of living for my business is up $1,100 in 4 years. Biggest increase and it took half my profit away from me. I mean, it's not worth it. It's not worth running anymore unless I want to go get 2 more, 3 more jobs and make up for the loss. Instead of opening up the borders, we should have had opened up the process and did it the right way, the legal way, instead of millions and millions of people every single month coming over the 300, 400,000 a month coming over the border. And none of them could speak English. Very little of them. So I don't know. Hopefully we can get back on track. And I remember how good it was, how much money I was giving to my family during the Trump administration. I had to go out and buy my sister a washer, but I can afford it because I trade stocks. None of them do. I mean, they're, you know. But regulations is a huge problem. I mean, I don't want to be forced what to do, what to buy, how to speak. I've been censored for the first time in my life during the last 4 years. I feel like I live in a communist country. My freedom of speech has been whiplashed. And I was right on everything. Not almost, well, at least I think of almost everything. It's weird, you know, being censored. And I have friends that made money on YouTube that were totally cut off because they talked about the laptop. Or Biden being a crackhead. There's probably some stuff that I ain't going to like about Trump. And the tariff talk kind of irritates me a little bit. But we'll just have to go on and see how it works out. Definitely we need to put more money in our disaster relief and help people in need when they need it, instead of giving them a $750 check and telling them, you know, tough shit. I think a lot of this environmental problems is because of Biden's wars. And him flying that stupid plane around everywhere. Get back to trading. I got my rant off. I mean, Randy's got a great point. That I know Mexicans are the hardest working people I know of. They get in there and they get it done and they don't complain. And I mean, I for many years would only go see an Asian doctor. Because I was told by an American doctor, I was told I was going to die when I was 20. And I finally saw an Asian doctor, and he said, "No, you ain't going to die, man. You have epilepsy."
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good afternoon, traders, and welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Tom White has the day off. I'll be joined by Kevin Hinks shortly. We've got a great show lined up for you this Thursday. We're taking a look at Boeing. Here's why. This is after strong earnings from GE Aerospace. So what does it signal for the airplane manufacturer? We're going to watch that one. American Express, so the main course for earnings on Friday. The setup going into its results, expectations for double-digit growth on the bottom line and the top line. The team at Folio has some consumer data on Amex to help get a read-through. Texas Instruments, though, reports later today. The street is looking for adjusted EPS of $1.19 a share on revenue of $3.86 billion. Kevin's got an example trade on that one. But let's widen out and get a check of where markets stand right now, just afternoon Eastern time. Investors processing comments from President Trump. He was speaking virtually to the crowd of executives and leaders in Davos. They said they were excited to hear from him and look forward to having him in person next year. In terms of market reaction, we are still seeing
SPY coming to the VWAP.
just really toying with. I know that the 6,100 is a level we've been watching to see if we'll get some momentum around that and if we'll get back to those record levels that we saw. So you're seeing the S&P 500 really little change at the moment, up just 0.1%. The Dow has the stronger advance right now. You're looking at blue chips better by a little more than 0.5%. Tech remains under some pressure. You'll recall tech was the leader yesterday. And right now it is under some pressure, flagging a little bit though, down just by a little more than 0.25%. Taking a look at small caps, you are seeing them move just a touch higher, and that's been kind of choppy, especially when you consider the small caps action that we saw at the
Boeing has a new high.
2000 up about 0.1%. Let's bring in your Fast Market co-host, Kevin Hinks from Exchange to Exchange. I'm here at the NYSE. He's over at the SIBO. All right, Kevin, this has been a week marked by wins for the Bulls. So what's your take on what we're seeing today?
Good morning, Diane. Yeah, the market got a little bump here after starting the day on the downside, especially the NASDAQ on that news out of, the news that a little softer chip expected in 2025. So I think that the market rallied. It looks like, watching the 1-minute charts on futures, it got a little boost from some of the comments from President Trump. He wants lower crude oil. He wants lower interest rates. So he does, he was talking very bullishly about the U.S.
I'm thinking 606.85 for the SPY.
When he took the podium. So you're right. He's doing it virtually, as he mentioned. It's only my third day in office. So I think the market got a little boost from that. Now, it's still...
Heck yeah. It was a smart move.
This thing. Remember, we're at the end of the Davos Davos retreat. And there's this basic saying about Davos that at some point you fade the news coming out of Davos. And the news a year ago was about climate and DEI and ESG. Well, this year it's about strong United States, weak Europe.
Got a head and shoulders.
Donald Trump was taking questions
and at 1, 2, 3
world leaders, and I thought
at 606.79.
Bullish to the U.S. Now, at some point, it's going to be tradable, right? Because Europe is pretty beat up. The United States is sitting at or near all-time highs. Valuations are not poor by any stretch. So as we get moving toward
Nvidia is coming close to the 200.
Calendar coming up here in the next
Randy,
week or so,
get ready.
Things are going to get a little interesting because valuations, like I said, are not cheap. But jobless claims a little higher, but nothing too scary. No real economic data, but so many headlines coming out of Davos. It's really fascinating to listen and see how the market moves. Obviously, a lot of announcements of deals and things, and just the perception that a more business-friendly, less regulatory environment is what the market seems to be feeding on right now, Diane.
Think so?
That does make sense in terms of what seems to be feeding and fueling the market. But Kevin, I think we should bring Nate Peterson into the conversation. Sure. Nate Peterson is Director of Derivatives Analysis at Charles Schwab. Nate, so when you think about the market action today, what's your takeaway on the price action?
Right. Good morning, Diane. So I think coming into this week, I think we had a little bit of an elevated VIX. We had some uncertainty about just how aggressive President Trump was going to be on day one regarding tariffs. Based on the price action, I think there was some relief. We saw the VIX come in. In addition to that, we've seen a lot of pro-growth type announcements like Stargate that was announced earlier in the week. And I think it's still going to come down to rates. So it's great to see, this kind of optimism, this bullishness. S&P hits a fresh all-time high intraday yesterday. We're hovering just below there right now. But what we have to remember about pro-growth is that generally that leads to inflationary forces. Pro-growth equals more demand, equals more consumption, equals higher prices. We all know that. And so I think it's still going to come down to monitoring these levels on yields. And for the 10-year right now, it's that 4.8% that we saw a decent sized pullback, 20 basis points or a little bit more based on the benign CPI data that we got. But if you look at the trend of the 10-year since mid-September, around that FOMC meeting, we were at 3.6% on the 10-year then. We're 100 basis points higher. We're still in an uptrend. It still comes down to yields. If yields continue to push up on the 10-year towards that 4.8 and eclipse that, I would expect more market volatility, higher VIX. You really can't have your cake and eat it too in that sense with valuations are where they are. It's a little bit of a period in the markets where there's a lot of optimism about the new administration, lower taxes, less regulation, more growth. And so for right now, the market is really feasting on that. And we're seeing a number of areas of the market that are benefiting from that, looking at, look at the nuclear power plays, look at utilities, look at Bitcoin hitting a fresh all-time high earlier in the week.
Boeing.
But we're in a period right now, it feels a little bit like a CapEx binge that is going on, whether it's AI or some of these initiatives that Trump wants to move forward with. And, there's going to be a fuse to this. There is going to be a period where this investment cycle has some exhaustion that shows up. We are not there now, but I've certainly seen this before. And I know that, we can't just continue to grow and expand higher and higher without getting commensurate interest rate and inflationary tailwinds that can accompany that. So I think the market's mindful of that.
We've been doing that for a couple of years, my friend. Inflation was really bad, but the market kept going up. Why are you saying it now?
Novels today was demands about interest rates, and obviously the president doesn't control that. That's for the Fed, but he says he'll demand that they drop. I think he said immediately. Immediately, yeah, that was a quote. And he talked about interest rates around the world. Now, obviously, that makes more sense when you think about you mentioned, Kevin, Europe and the weakness that we've seen in Europe. I mean, in fact, there are some European countries in a recession. But what did you make of those comments about interest rates, Kevin?
Yeah, a couple things. Number one, a real estate investor who also happens to be president is going to really like lower interest rates, as all real estate investors do and all presidents do. So it's the double effect of President Trump
all but Biden
in the real estate business. He wants lower interest rates. And if I was Jerome Powell, I would answer him very simply, get inflation down and I'll lower interest rates, right? The Fed, I think, wants lower interest rates, but they
if the government get the government spending down and we get the lower inflation. And that's what he's already talked about.
The easiest way to get inflation down or get interest rates down is to get inflation down. Can you do that starting with crude oil and energy and get that? Yes, you can, using the supply side of that. Then can you work on food prices, maybe in grains and things like that? Yes, you probably can do that. But there's only so much, as you know, that the Fed can do. But we need to see prices, overall prices of inflation come down. That'll lead to the Fed lowering interest rates. It can't be one before the other. The prices have to come down first, Diane.
Yeah, that's a great point. And you just mentioned crude oil, and we saw some of his comments about oil.
Yes.
Nate, I want to give the floor back to you in terms of some of that commentary that put some pressure on WTI following comments from President Trump saying that he'll call for Saudi Arabia, for OPEC to reduce prices. What's your take on that, Nate?
Well, certainly that's one element, and Trump is right that energy prices are a big, input cost, for everything that gets moved around the globe. Yes, that's true, but that's only one element. And, historically speaking, the Fed has a dual mandate, employment and prices, essentially speaking. And when we grow too fast and prices move up too fast, they raise interest rates to initiate demand destruction.
I don't like this guy at all.
His intention might be that he wants interest rates to go lower. Number one, does his policy reflect
None of them get it.
that? And number two, it's a nice gesture, but it's not even up to him. And I would even go so far to
Don't say it's not up to him, you egghead.
on market, and those interest rates are driven by the free market. Bond vigilantes will come in there and they will make sure that this risk-reward relationship between interest rates and what is going on with the sovereign countries and their debt balances and how much they're growing and how much prices are going up. These are the natural market forces that dictate rates. So it's nice to have that gesture. But meanwhile, the market, the stock market, what is it going to respond to? What those rates are doing, because they're tied into valuation, they're tied into potential future growth, they're tied into potential corporate profits, and therefore valuation. At the end of the day, when you're going out there and buying a stock, a part of the company, valuation is going to what wins in the end.
Yeah, speaking of corporate profits, Kevin, I mean, we had some to chew on today. We had GE Aerospace, Elevance, American Airlines. GE, what stood out to me, I mean, they beat on both the top and bottom line, and then the guidance looked good. And when you think about what GE looked like before, especially before they kind of broke apart, and I don't want to call it a resurrection, but they've done really well in terms of GE Aerospace, and it seems like there's some momentum happening there. Kevin, what was your take?
I think GE Aerospace, the move that it's making is pretty incredible. And what you realize is they make jet engines, and they've got a market share in some cases up to 75% of jet engines they make, commercial and military. But it's also the service contracts on those that causes them to be extremely profitable. So it's not just new, but as Boeing sells less planes over the last couple of years, planes get older and need more maintenance. It's their maintenance contracts that are profitable for them as well. It's not just selling the jet engines, it's also servicing the jet engines. So the breakup of GE and unleashing the growth of these different companies, GE Vernova is also doing extremely well. So it has really seemed to unleash the growth possibilities, especially in GE Aerospace, because they are a dominant player in engines, Diane.
And then, Nate, I want to get your thoughts on both the, some of the, I want to take it back big picture and some of the overall action that we're seeing. What are the technical levels you're watching when it comes to the index level, especially when you think about the S&P 500 is about 6,100, and then some of the weakness that we're seeing in the tech sector, is that just a one-off, Nate?
Yeah, so technically speaking, looking at the S&P 500, well, number one, We're up over 5% in 8 trading days. So near term, we're overbought. We did go down and test support at the 100-day simple moving average, and that held, so that's encouraging. We set a new high around 6,100 yesterday. That's bullish. The uptrends there, they remain intact. The Russell is a little bit more of a quandary, and that's directly tied to what's going on with yields there. Kevin mentioned we got mega cap tech next week. That is going to be very important in terms of corporate earnings. And look, FactSet, I think currently we're tracking 12.5% EPS growth for Q4, and that's the highest growth rate we've had since 2021. And so that's good news, but it's reflected in the valuation that we have. So look, there's a lot to like in terms of the fundamental backdrops that are driving corporate earnings. Atlanta Fed's GDP is around 3%. We saw a lot of strength out of the consumer. Looking at ISM services 2 weeks ago, we get the PMI manufacturing and services tomorrow. So the consumer looks healthy. The consumer is employed. Wages are rising. We've got this investment cycle within AI that is still continuing. This is a big reason, one of the big pillars why we have such high valuations. But yeah, given where we are with valuation and the price action, and in the face of rising yields, then of course there's the potential to get a sell on the news at some point if it's not next week.
That is something certainly to pay attention to. Nate Peterson, he'll be back with us. Coming up, though, we're going to take a closer look at Boeing. Is the worst behind it? Shares are up nearly 30% from the 52-week low, keep in mind, hit mid-November. We'll have an example trade before next week's earnings. More Fast Market coming after this.
Boeing new high.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market. Shares of Boeing slightly higher today following earnings from GE Aerospace. Now, Boeing had a really difficult year last year, but towards the end of 2024, it started a four-pronged plan. This is under new CEO Kelly Ortberg to improve output and production quality. The question, is the road riddled with fewer potholes this year? Let's bring back in Kevin Hanks over at the SIBO and Nate Peterson for some insight. All right, Nate, when you think about the results from GE Aerospace and what that signals for Boeing, especially when you consider that a lot of these Boeing jets, they come with the GE engines. Kevin essentially talked about that earlier. What does the setup look like for Boeing?
Yeah, sure. And I think that because of Boeing's quality issues, as you mentioned there, I think GE is a net beneficiary of that, unfortunately, so to speak. But look, with the stock like this, what is this setup? So, yeah, you're right. We were down over 30% last year. They did get a lot of their union issues resolved, those negotiations, however, at higher cost. They're not on track to be profitable, but they do have 25% revenue growth coming up for the current year. And technically, they have gotten back above their 200-day simple moving average in late December. Looks a little bit like a cup and handle on the chart that you've got there, although that handle needs to be broken by getting above basically 181, 182. That could happen on earnings. And you got to think, with all of the issues that Boeing has been through, the price performance, how the stock has been punished recently, and many would say rightfully so, that perhaps the bulk of that has been priced in and or is behind the company. You got to think that their quality can only get better from here. And then just taking a step back, 30,000 foot view, it's a duopoly with a huge backlog that the company has, and you almost think that this company would fall into the category of too big to fail. But looking at some of the earnings revisions, I like to kind of look at what the analysts are doing. The analysts have been incrementally more bullish over the past 2 months. However, looking at some of the EPS estimates, they have been declining over the last 90, 60, 30 days. But given that, I think this market is in the mindset of being more forward-looking rather than focusing on the problems of the past with Boeing here, the setup does look more bullish than bearish in my view heading into tomorrow or next week's results.
Kevin, do you share similar thoughts? I mean, it is essentially a duopoly, but last year you had the safety issue. I mean, it started basically a year ago in January of 2024, that panel that blew out of the plane, and then just problem after problem, the machinist strike. It was a really, really awful year for the company. Maybe the worst is behind it, because this is years that they've had issues. I mean, you go back to 2019, so we were going on 6 years. Kevin, do you have faith that Kelly Ortberg and Boeing can essentially kind of turn things around? Is this the year that things turn around?
Yeah, there's just a bunch of small, fundamental things that have gone well for Boeing after a year where it seemed like nothing went well for Boeing. Kelly Ortberg, an engineering-focused CEO who moved to Seattle to be at or near the plant. They've got the strike behind them. They were able to raise more cash in the debt markets without any major events. But coming up, they've got earnings coming up the 28th before the bell, early next week. They need to, number one, stay out of the headlines for negative headlines, right? What you mentioned, no events, no problems. And then I'm not even sure the earnings matter as much as the guidance going forward. The picture that Kelly Ortberg paints for the future and the recovery of this company. I think that's where, and we're seeing it in earnings already in this earnings season, where the guidance is so important going forward. That vision he has, and the fact that he can just stay off the negative headlines, start, turning Boeing around.
The video's back at the 200.
Build planes and deliver planes. Free cash flow goes up, the balance sheet gets better, and this is a company that, is a duopoly with a big backlog of planes. They just need to deliver them, Diane.
They do. They really do need to stay out of the headlines, Kevin. I mean, it was really just problem after problem last year. And the one thing that might not be in their favor, because a lot of industries obviously expected to have more of a friendly regulatory environment, but President Trump's pick has said, you know, they're not going to make any changes to the cap on production for the 737, you know, with this new administration because it was a safety issue. But Nate, given all that we talked about with regard to Boeing, and maybe the worst is behind it, we don't know, but how would you structure an example trade?
Yeah, sure. So just looking technically, and you know, look, just it was a couple of weeks ago, I believe it was, that we had that plane crash, which was another negative headline for Boeing and a lot of investigation into, you know, that model of their plane. And yet the stock has held in there. It's held up. So the price action over the past couple of months, essentially since they resolved those union issues, does look encouraging. This is an economic barometer in terms of their business is economically tied to global GDP growth, which does look encouraging, at least here for 2025. So if you had a bullish view, one way that you could play it, I just set up for the following Fridays, the January 31st weekly expiration, buying the 177.50 call strike and selling the 182.50 against that. It's a $5 wide bull call spread. Last I saw, or at least when I sent over this trade example, it's $1.70. Right now, that at the market price, it's about $2.30 because the stock has moved up a couple of bucks since I sent over this example trade. But the reason I selected those strikes is because number one of the implied move between now and next Friday is about $10. And if you thought that the stock was going to move higher, the implied move is non-directional. Let's keep that in mind. But if you thought it was going to be higher, get you around 185. Here with this spread, you have defined risk at $1.70. It was essentially a pay one to potentially make two if you get that max gain. Max gain occurs above 182.50. So this is just one way that you would play a bullish outlook on Boeing, and it's not super aggressive based on the strike prices. And I think that just
Barry, fall asleep.
You know, it's hard to get really aggressive with Boeing given its history over the past couple of years.
Yeah, Nate, you know, this is one of those. I have a story from my trading career where some of the best buys I've ever made in my life was when I thought this one might hurt a little bit and when the risk was high. And that's exactly what I think you're going through here. You don't feel real confident, but if Kelly Ortberg were to deliver on stable earnings and stable revenue and paint a good picture going forward, this is one that is well within the expected move. And like I said, if you get it around $2, you know, it's 150% is what you're going to make, right? $2 can go to $5. So yeah, you're inside the expected move, so you wouldn't even need the full expected move to max out on this spread. But it is going to be an interesting week next week for Boeing because it's not just the numbers, it's the vision going forward, guys.
Yeah, and Kevin, you know, I'll just add to that. I think to your point, you know, as a trader that, you know, we look for some of these types of setups where, you know, sentiment might be skewed either too aggressively to the bullish side or too aggressively to the bearish side. And I feel like Boeing falls into that category, to your point, where investors are likely going to be more forgiving and looking through the report for any bright spots rather than looking for the report for any negative thoughts, because I think expectations are low heading into the report, hence the bullish example.
All right, that was Nate Peterson, Director of Derivatives Analysis at Charles Schwab with an example trade for Boeing ahead of earnings next week. Coming up next, the team from Lightfolio will join us with consumer data on American Express. It's got earnings coming up tomorrow morning. Kevin Haynes will have an example trade when we return.
Boeing moved up on that. Tesla's back at a double bottom, triple bottom low at 411.17.
Oliver Rennick for the biggest earnings coverage, 3 p.m. Eastern. It's market on close.
No place better than the
China's
Schwab
pulled
Network.
back in 3 days.
Trading at Schwab is now powered by
2
Americans,
days.
unlocking the power of Thinkorswim, the award-winning trading platforms.
PDD's
Bring your
only one
trades
at the
into focus
200 above
on Thinkorswim
100.
desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
DWTX.
What's up, Carl Nation? It's your #1 broker with the best full-service
Dogwood
wealth
Therapeutics
management skills
halted.
in the biz.
Actually, I'm seeing something from Schwab.
Wow.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you don't
Definitely a
think we can
miss.
manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
We're experiencing technical difficulties.
Schwab.
Schwab, a modern approach to wealth management.
Well, everybody's back. Where did everybody go? Be honest. Everybody that come back to the room, why'd you leave? Be honest. Johnny? Come on, somebody say something. Say you went to lunch or you didn't want to listen to Trump. Oh. You're making me blush. Lunch lady had to go take a shit. Come on, Angel. You're on YouTube, right? Welcome to the room. Am I a comedian, or is it my good trading or my good looks? Yeah, to all of it. Used to be my looks. I used to be able to pick them up right and left. The prison guy's on now. I gotta get to trading. I ain't done much trading. Okay, Randy, we're getting there. Support on the 1, 2, 3. Depends if we're going to hold that or not. SPX has a double bottom, Randy. The SPX 6100 strike. Come on, break. So that's that's the order I got ready. I'm thinking about starting a position right here, but I'd really like to see it hit this 200. DWTX is really looking nice. Oh. There's the 3 black crows right there. Yeah, definitely the 200. I'm going to keep an eye on this trade right here. IWM's at the 63. QQQ failed the 200. Come on, bounce. Apple's getting close to support. Or a little bit below it. No, not really. It could be right here. 22281. The prison guy's still on.
And it's a lot of it is just whether or not you're betting on the economy to move in the right direction. There's a lot of potential things. We've got a new administration.
Looks like he's sobered up a
Who
little.
knows what's going to happen? I'm bullish, but who knows what's going to happen? So it's definitely a concern overall for all of these companies. But what a great business to be in. I mean, they're just taking a piece out of everything. It's incredible. It's kind of a can't lose situation for them. It's just how much can they make. But yeah, absolutely. It's definitely scary to know that consumers are getting more and more squeezed and getting a little bit tighter. Their savings are down. Their credit card balances are up. So it's always a concern, but it's a bet on the economy or against the economy, really.
All right, bet on the economy or against the economy. All right, that's Landon Swan, co-founder of Likefolio, with some insight and consumer data when it comes to American Express. So, Kevin, how would you structure an example trade for Amex?
So I have a complex example trade for Amex today. It's a paper money trade, but what it does, a complex trade sounds, confusing. But what it is really two fundamental trades added together to make a complex trade. So the first thing I did, I looked at the expected move. The expected move.
There's your bold flag right there with the triple bottom.
I sold the 335, 340 call vertical. Now, if you look, that's $11 above the market. So selling the call vertical above the market, then taking that credit and buying the 310, the 1 week, January 31st, January 24th, put calendar with that.
No, I didn't either.
That whole package, the short call vertical, the long put calendar, is trading about a 26 to 30 cent credit, which means if nothing happens and the stock stays right here on expiration, which is tomorrow, you'll be profitable because you're doing this whole package for a net credit. So selling the call vertical for a credit, buying the put calendar for less debit, doing the whole package for a credit, even slightly higher or down, and this complex trade is profitable, Diane.
Okay, a complex example trade there for American Express. Got earnings tomorrow morning. We've got more Fast Market, though, coming up here on the Schwab Network. Texas Instruments will give us a look at the state of the semiconductor industry when the company reports earnings. It comes after the close. George Sillis joins us to preview this afternoon's report. Of course, Kevin Hinks will have an example trade. That'll be on the other side of this break.
Damn it. Did it again. I could have got them at 185. Now we're at 225.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
I got in the trade.
market here on the Schwab Network. Before we take a look at Texas Instruments, let's widen out, do a sweep of the broader market action. The S&P 500 right now, it is on the plus side by waiting for that chart to populate. It's up a little more than 0.1%. We're looking at blue chips holding on to a gain a little more than 0.5%. Tech sector still under some pressure, down a little more than 0.3%. Small caps advancing a little bit more as we progress through this hour. We're seeing the Russell 2000 up by 0.25%. Let's bring back in Fast Market co-host Kevin Haynes and George Sillis, senior markets correspondent, to dive into the setup for Texas Instrument. All right, George, as we think about Texas Instrument, what are you looking to hear for? What's the street looking to hear when it comes to its earnings?
Well, I think this is going to be an interesting one, and I say that because, I mean, if you look across the semiconductor ecosystem, there's been a lot of weakness in the traditional analog providers in the semiconductor space, companies like Texas Instruments. We know that AMD has also been really just trading really to the downside over the past year. So not all is well across the entire space, and I think if you consider Texas Instruments and the analog chip exposure that this company has is quite large, but I think if you consider also the estimates that TXN has going for them, they're actually quite low. So this may be a situation where we see the company sort of under-promising and potentially over-deliver on a beat and maybe raising some expectations guidance. But the numbers are actually going to be lower than last year from an estimate standpoint. $1.23, down 16% from the same quarter last year, where they published $1.46 per share. Revenues are also expected to be down about 5% to $3.87 billion from $4.08 billion. I think if you consider a few things going on with TXN, when they reported earnings last October, guidance was actually cut for fiscal year 2025. So we're in that fiscal year right now. The guidance was cut from about $6.67 down to $6.06. So that was about a 10% haircut. But even since then, as you see on the chart, the stock may reflect that because there had been sort of a significant pullback with the name only up higher by about 13% over the last year. So this is going to be obviously a pivotal quarter. It seems to be the case with every company out there that's reporting. But one of the things that's been going on with TXN particularly is weakness in the automotive sector. And that is a very large component of their business, as well as other analog chips for the industrial space. One of the unfortunate things about TXN is they don't participate as much as a concentrated semiconductor ecosystem and in artificial intelligence like NVIDIA and, of course, other companies in that space like Broadcom.
George, I don't want to say that this is a legacy or dinosaur semiconductor business, but I traded options on Texas Instruments in 1986. That's how long this semiconductor company has been around and trading. And you're right, they're heavily involved in automotive. They're not heavily involved in AI, which means they're not as sexy as the other names. They have a nice, 2.8 dividend yield, so it's attractive that way. They're a more mature semiconductor company that's had, frankly, a really choppy trade the last 12 months. It's up 13.9%, but it's been kind of all over the board. Is this something that you can find a way to trade in this environment where it seems to have missed out on the big AI boom?
We're at the 1, 2, 3 top.
The other thing is just, the company has a lot of exposure
we break this, we go higher.
To the, smartphone ecosystem like my.
Right now, we're at the 1, 2, 3 top on the SPX. You can either get out here, but I like this extension. We do have an inverted hammer, which is bearish. I could get out at 270. Be up to $65 contract. Let's see if we break it. If I start to head down, I'll get out of it. Boom. Boom. Next resistance, we got a megaphone with a head and shoulders. I'm going to take it, run it up to that one We could do a double top. Randy? We're at 320 right now. Get out with $100 a contract. And that's a double top right there. A head and shoulders if you count the wick. Right there is definitely a resistance level. I'm going to get out. 330, Bungie. Bob's getting too many alerts. And imagine, Bob, none of them come from me. I'm going to do someone in the room wants to know how to do alert. Florence, can you see my screen? Tell me when you're ready. Okay, look at the screen. I've got Boeing up here. I'm going to go to where I want to set my alert at, which is the 200 SMA. I'm going to put my cursor on it. I'm going to right click. I'm going to go down to create alert. So let's do that again. I'm going to go to where I want to set my alert at. And right now I want to set it right above the 200 SMA, a little bit above it, because I want to catch it before it hits it. I'll set it on top of this here candle right here to the left. I'll right click, go to create alerts. That window will pop up, and I got mine set at the mark, and I always set it at below. So I got mark at below, then I'll go down to create, and then the alert will pop up, and then when it comes down and hits that, it'll go to my message center, which is over here, and I'll see it pop up. So let's do that again, and if I want to erase it, I just hit the X. I go right click, go to create alert, mark at below, and that's Boeing. And then I'll hit create. Now down here I've got the sound, goes to my email, notify sound. Create alert, and there it is. Did you see it? So right click, and if you want to go like to a resistance, if you want to set a resistance, say I want to hit it up here at the shoulder line and I want to get out there, I right click, hit alert, go to at or above, then I hit create, and then I got an alert for when it wants to come up and hit my resistance, and I'll know when to get out of the trade. So if I want to set in a resistance, I'll right click, create alert, that window pops up, and I want to set it at mark, at or above. So that means at or above, it'll hit it. When it hits the price. And I hit create, and then it pops up on the screen. So it goes to the message center when I hit it. Then I'll know, and I'll hear my bell go ding. When you hear them dings, I've got different alerts set in here. I've got alerts set on my ready, set, go scan. So when it's ready, it kind of tells me if it's ready. Oh, I didn't want to erase that. Shit. Oh, darn, it broke out more. I don't even want to look at my calls. They're at 390. Damn it. I got out at 3:30. They probably went higher than that. Where'd they go? They went to 4 something, didn't they? Where'd they go, Randy? 420. Ugh. That'd been another $500. Well, I did call the bottom. Do I get some credit? Magnificent. Now I want to say something. Time for a learning lesson. So we have here is a descending triangle. That's a descending triangle. But it bounced off of a 1, 2, 3 bits. So I took the trade. And boom! I took the trade a little late. Now we've double topped with a lower high. Thank you, Trump. Did you take a loss on Apple? No, I sold my Apple. I could have got out with about 70 more bucks. I sold it way too early. I sold it right here on the dip. Right at open. As it started to fall down. Right before it hit that double bottom. Then it jumped up and I could have got out with $70 more contract. Oh, I was talking about the SPY. I didn't finish the SPX. So we have a descending triangle. We also have a bull flag. This is a bull flag. So I called it a bull flag. I didn't call it a descending triangle, is why I jumped in the trade. Bull flag with a 1, 2, 3 inside of that flag. Now we're getting up here to a double top. So if we don't break the double top, I'm going to buy a put. 10-4. No nudity, Bob. I don't want to see your meow. Hot two. Randy, I'm getting ready to make a business decision. We're back at 420. I'll be going over to the 60-90 put. We just now hit the double top and broke it. So I might have to make a different business decision. Damn it, them things are 445. That would have been an extra $500. I think I'm gonna step and go get me some water and start my coffee, or buy the put and then come back. $60.91.95, $60.91.95. No. We're about to the top of the megaphone. 195 and 175. 1.75 and 195. I've got 4. Damn. Hey. Stop it. God. Shit. Well. There goes my profit. I failed on the double top. No. I heard him say it. I watched him say it. Don't rub it in. Randy. We got 3 white soldiers, so I'm kind of a little nervous. Thing got down to 125. Yes, I saw it, Mike. I heard him say it. He says for the economy to grow, we got to have interest rates low. He made a lot of demands today. He got there right in Europe's face and told him, and he told everybody in the world, if you want to do business, do it in our country, and we'll give you the best tax rate you'll possibly get until the Democrats get back in office. The Europe guy said, well, Saudi Arabia will sure like that. I thought that was going a little overboard. We don't have the skill set, I don't think. Damn it, come on. Okay. New high. The 6100s are now at $6. Oh, $1,500 I left on the table. $330. They hit $620 or $640. I might buy some more here. This is gonna stop. Jeez. 650, 660. $1,650. $1,700. $1,780. $1.15. $1.50 average. I don't want to go higher yet. I want to get out of this thing even. Jim is making the art of the deal. It's finished. Damn it. I can't believe the 6100s went up to 680. It's almost $2,000. Drop. We're not done yet. I could rebound right here, so I'm gonna look at calls. This was the old resistance on top of the megaphone. I didn't think we were going to break the megaphone, but we did. Just a little bit more. 145. There's 3 black crows right here. So look at the calls. There's 150. Got it. Yes, drop more. I got out. Out even. Saved my ass. I'll be right back. I'm going to get my water and a little coffee and go at this again. I left a little bit over $1,700 on the table here on them calls. Should have held them. But I thought we'd hit that megaphone, but that's a pretty good engulfing candle, so I should have probably stuck in it. And I got out a little bit before that candle formed. I hear your horn outside. The only 2 vegetables I've been eating, besides what's in my stew, is sweet potato and broccoli. We definitely reversed back up. Now we're going to retest it. We got a Head and Shoulders. Oh. Where's my other one I have it over here? I know I had Spy over here. I've ate more sweet potatoes this year I have my whole entire life. I don't know what happened, but I just love them. I think since I've been on this carnivore diet, it kind of hits my sweet tooth. It's like eating candy. What do you think, Randy Puts? Are we going to go higher? Question is asked. Mike? You're in calls? How dare you? I question. You know, I'm always that kind of guy. Time to pull out an envelope. Confucius says, puts. Oh. $531.67. I say puts. Crowd's going wild in anticipation. $0.95. We're going to find out. After it hits, I already did it. I jumped in early. Not that I wasn't listening to you. The crowd's going wild at the sports arena. I know I'm supposed to relieve runners. That pisses me off. I left $1,500 on the table. Give me 120, please. Well, this is Donald Trump. Would you please open the door and may I speak to Mr. James Howard? The Donald. Right now I'm kind of busy. I can't talk to you. I'm in a put. I'm going against the crowd like you do, sir. That's what I like about you. I'm up $150. This is it. This is support. If we break it, we go lower. You know where we go? Double top breakout. We go right here. Cancel lift extension. Oh shit, I'm in the wrong trade. No, I'm out. 6099.60. $6099.60. I'm at 115. Now watch me make the big mistake again and sell them too soon. 125. There's my 120. Right there. Boom. $130. I'll take it. I'll take it. 130 out. What do you think about that, Randy? I know you're going to call it luck. There's 135. Now watch it go to $2. I'll take $450 any day. Magnificent, may I have a grade for doing a Donald Trump? Look at that, right to my support. Now you buy calls. If you're bullish, stay in the trade and buy the calls. the 6105s. Oh shit. No. 6090s. If you're bullish, clap your hands. If you're bullish, clap your hands. So we pulled back to the double top. Now you could almost call this a triple top if you count that wick. So that could have been a triple top breakout. I didn't see that wick earlier, so yeah, we're going to call that a triple top pullback. There's $2 to $2.25. What a magnificent play. I got back in at $2. Take tomorrow. How dare you? Mike says there's a flag on the SPY. Jim, when you get a chance, can you please look at Rivian? Yes. Now, I want to be in the now. We got to know that Trump's all about gasoline and energy right now. So he's not going to be pumping the EV car sector like idiot Biden did. So that tells you that you're excuse me. Had a sweet potato down in my throat. So that tells you that you're going to be bearish in an EV sector, and you got to play more cautiously. So Rivian was the only thing this reason this stock was up is because Biden bailed them out before they went bankrupt with $6.5 billion, which he did not have to spend, but he spent it anyway. I mean, these people are idiots. So, I've got a support at 1182. And it can go lower. We could see 1125. 1118. So I got 1182 and then 1118, and then it could even drop more back down to $10. The resistance to break is going to be right there back at 1289. But for right now, 1182, 1118, and then if neither one of them hold, definitely $10. And if it starts to bounce up, your 1289 is going to be resistance to break. But you got to be bearish in this trade right now. I'll go ahead and send it to your private message. That includes everything but Tesla. Tesla's not a car company. It's a tech company. Where's my SPX? Ooh, gotta watch this. I was up a couple $100 right there. Ooh, not no more. I might have to just get out of this trade. Because we could come back down to here to 60.94. If we don't hold this here support, I got to get out of it. Because we could have a pretty nice knife, and I don't want to look at the puts that I was in. I'm okay. So this is a fallen wedge. We got a 1, 2, 3, a 1, 2, 3 up here. So if it breaks the third one, that's a fallen wedge. 3 black crows, 3 black crows. No, this ain't working right. We got bearish divergence. $180. I get out at 180 maybe. Okay, I got to find out here if we're going to break or not. If we're not going to break, I'm going to get out. Mike didn't leave after I saw him. Did he? He's still here. It's a miracle. Thank you, Mike. You're my favorite fan. I'm back to even. Did Magnificent give me a grade? I'm taking SPX. Oh, he did? I don't see it. Oh, there it is. I think tentative, I don't know if that's a good word to use. I gotta look it up. As a tentative. Wonder what that means. Reluctant? Not certain or agreed. I don't like the way that started out. Careful but uncertain way because you did not know if you were right. How dare you? I'm definitely uncertain about this trade. I made a tentative choice. Man, it's strange being with a bunch of smart people. You're getting up there to the class of Mike. Every time he says something to me, I have to look it up. Do 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 do. Oh, I'm at 6105. What the hell? I got the wrong number on here. Or do I? Yeah. I put the wrong number. I thought I had 6100. So I was in 6105. Mistake. Yeah, it's going to be one of them days where I make nothing. About ate up all my profit on this trade. It can go all the way down here. I mean, shit. Got $1,000 in this at $2. And we'll buy 10 down here if I think it's going to rebound. There it goes. Okay, get ready. I'm going to do some serious business here. Right about now. Right about now. 90 cents. Give it to me. There it is. I'm at the 200. Come on, bitch. Donald, give another speech. Fellow Americans, my name is Richard Nixon. China. China can be one of our favorite adversaries. So I'm going to go meet up with whatever his name was. Oh gosh. The 60 puts are now at 570. Oh my. No, the 6090s. I had the 6090s. No. Oh, I thought I had the 6100s. No, they're not at 570. They're at 170. So, Sue, I've got to ask you a question. What do you think of that, Jimmy? I want my money back. We're under the 200, so I have a little bit of reservation. I'm using big words too today. What was that word you used earlier? That big word? Tentative? Yeah. I'm tentative about it breaking the 200 SMA. Properly used in a sentence. Very good. So do I get an A plus? Break it. I'm going to change my profile picture. I had a woman ask me to do it. So I do what a woman says. If I can figure out how. I forgot how to do it. God, come on, break. Could be a bad mistake. I'm long to go to the upside, but it ain't working. You might come all the way back down here. I need 125. I'm down. Down, down, down. I thought I put that in here. So the SPY could get to 609141 for a quad bottom if we don't break this flag. I don't think it's not going my way, that's for sure. And now I'm red for the day. Sue says I'm a handsome man. I'm trying to figure out how to change my picture. can't remember how to do it. Work on that tonight. We got an inside, we got a harmony. We got a harmony. Let me look. I can't see it. Oh, there it is. I didn't know harmony. On the hour? Why am I not seeing right? Go down. We don't want that to happen. I'm at 80 cents. Don't have much of a resistance, though. Can't wait to watch the media news tonight. Right about there. Damn it. So we're going to break 609868. $609868. If we break that, which we are doing right now. Oh! Should sell it just because I'm up so high here, and I'm not green, but I'll be green if I sell it now for the day. Come on. Yes, go. Did I ever tell you how beautiful 609960 is? It's the most beautifulest number in the whole world. How dare you? I used to be able to snap my fingers by clicking them like this, but I don't think I can do that not with this fancy watch on. Oh. Can't you see I'm busy right now? Yeah, this is James. May you give me a call back, please? Could be the results of my test. Jim, you have a blockage. Your calcium content is a 100. We need you in the operating room right now. Come on, break. This will be a great day if I can break. There'll be beers on the house. I'm tentatively waiting. Oh God, I did it. This will be 2 trades I'd sell at even today, and they both went up after I sold it even. Oh boy, here we go. Tell me when to sell. I'm freaking out on LSH. I'm out. I can't take it. Come on. That was a fake sell. Oh boy. What happened to my thing? Oh, I erased it? 165. I've got to go. I'm getting out. I can't take it. 165. 1.26 out at 165. Thank you, Mike. You're my best friend. That was a lot of contracts. A lot. And I was down a lot. That was very good. With a profit, if I add them up together here right, it's 185, 585. I know I didn't. I don't think I erased that. There they are. 127. What'd you think about that, Randy? No, I had $585. 15 contracts. If I had 585, I'd be going, whoa! What, 585 contracts times what? 40 bucks. Oh, that's a low blow. I can read all them words and I don't have to look up any of them. I can't tell you how happy I am. God. Woo! Oh, man. I don't think I have to lose any more weight. Somebody told me I have a beautiful face. Didn't you, Jesus? I will be sad if I don't keep the runners. No, I won't. Not this time. Not this time. When you're down almost $1,000. What'd you think about that, Livid Goose? That was a tough one. I never get out. I did now, though. Nancy, could I have one of my heart pills, please? Yeah, and throw a couple of that magnesium in there too, baby. A shot of vodka and a Valium. I think I need to go into the bathroom and fart. That one I probably would have, yeah. I don't know. I don't think I'd have found the support on that one. I didn't add on. I should have added on more. When I hit the 200, I added on. And it still didn't work. A little below the 200. So I don't think I'd have found the support on that one. Nah, there's no way. I don't think I'd have come back here and done that. I would have probably right here maybe. I would have done that. Definitely would have done that. That was my bottom line. And then by that time, it had been down at 20 cents, 25 cents, and I'd have really freaked out. I think it got down to 65. Again, thank you, Mike. You encouraged me to stay in it. Now I gotta figure out how to change my profile picture. Forgot how to do it. Profile. User profile. Nothing comes up. Profile. Oh, maybe here. Add status. I have to get a what? I got a real ID. Edit profile. Yeah, don't come up. Go directly to your picture and see if you can change it that way. I tried that. Just edit profile and it comes up like that. Right click it. Been a long time since I've done that. How to change Discord on your phone. Okay. I think I got it. DMV. What the hell's that mean? Ooh. I don't know, this thing's acting kind of boring today. Like it wants to come back and hit the 200. One more candle down. That or it bounces here. That or a double bottom. I really don't want to get stuck in this thing again. Rob 6005 at 85 cents. 6105. We got another bull flag. Nope. I'll wait for a bigger knife. Kind of acts like it wants to. There it is, 150 bucks, about 100 or 200 right there. Damn, missed it. 135 from 85 cents. I called it. 1, 2, 3. Boom. That'd have been another $500. How embarrassing. Just for that, I'm going to go get me a hot tea or some coffee. I want coffee. I'll be right back. That would have done it. Oh. These are bull flags, and again, it's that simple 1, 2, 3 setup. One, that's the wick. I usually don't count the wicks. So we got a body, come up, and it couldn't break that second 3. So it came back down and touched it with a wick, and that's called a high or low. Respecting that, those candles right there, see each one of them are higher. Boom. Then you had 3 white soldiers and you get out of the trade. And here we go again. We're back down here. This is the 3rd time. This was the 3rd break. So we're at the 200. You know, if I was to get in this, I'd get in it right now at 75 cents. And I did. It's a 0.75. And I got to look at the time of the day. We're into power hours, so this is kind of risky right now until at least 2:30, 3:30. So I don't know. If I don't get if it doesn't hold this, I'm gonna get right back out because we could have a nice drop. At 0.75. Because we could, this is the time of the day where you got to be real careful. See, I'm at 65 right now. If this doesn't break, I got to get out of it. It's depreciating. Oh, water. Randy, I'm in this trade. I don't know if I'm doing the right decision right here, Randy. Could we have a breakout, please? Because the market's not really giving me what I want today. Ah, did you see what I see? I see a megaphone. Ladies and gentlemen, what we have here is a megaphone. We're bearish until I break that resistance, and then I'm going to take it all the way up to there. I'm going to count to 4, make a little bit more. What we have here is a megaphone pattern, James. Break it. What? Oh, next week. Whew. Panic attack. I'm now at 80 cents. I'm smelling the coffee here. Shit, come on, baby. 85. Break it. Did I tell you about the time when I fed an old lady for almost 2 months before she got her food stamps? I brought over a meal every day. She at least had one good meal in the morning, in the afternoon, and I gave her a bowl of cereal, some oatmeal, and some milk for the morning. Break it. Perfect. I'm going to make a business decision. Give me 95 cents, please. could take this. I don't. Oh, there we go. 95. I'm out. Out at 95 cents. $200. That's some damn good trading right there. Jim, you should have stayed in. Tentatively, I believe you could probably have made it to the top of the megaphone like you said you would. Oh, that's at 110. 115. Oh, shit. 120. Gosh, I've left $2,500 at least on the table today. At least 2,000. At the least. That hit 120. I could have probably got it out at 115. But that's at the bid, so maybe I could have got out at 120. And that'd have been $500. Almost. $450. So I left 250 on the table. My trades have been about intentively all day today. Almost every trade I've took today was intentionally, but intentively. Oh, good job, John. And Bobby's going to be a conservative yet. Dang, look at that. $1.20. That would have been a good trade if I'd held that one. Now watch it break the megaphone. Jimmy called it. I sat here and I called this megaphone. And I did. There's no intently about that. I said it was going to happen. And it did. Good call, James. I bet it's at 140 now. And I'm not going to tell you how much I left on the table, because I don't think it'd be very proper. $450. 500. I left 500 on the table. Oh boy. No, I didn't. I looked at Upstart today, but I didn't see it. So she's back to a woman. Golly, it pisses me off. Or Magnificent. It hit 145. So I will change this here to 145. That means I left $500 on the table. That would have been definitely a $2,500 more instead of the $2,000 that I made. So I could have had a $4,500 day. There it is, 145. Bam! At the bid. So I'm going to go into the kitchen and get my coffee. And I haven't had caffeinated coffee in about 2 months. I haven't had anything caffeinated for 2 months. And I do feel better by doing it, and I'm sleeping better. I'm actually, oh gosh, 185. Oh my, I just left 900 on the table. So I'd have had a $3,000 day. I mean more, $5,000. I'm sleeping a lot better at night now. I'm getting at least 3 hours sleep before I have to go up and piss. Used to be about every hour. And I'm finishing my dreams. So that's what I like about it. Last night I dreamt that I was a virgin. I'm going to show my new profile picture, if I can ever get it on here, to the ladies on StockTwits. Man, that was a nice trade. I regret not staying in that trade real bad, because that was a hard one. I didn't want to take it for one, but we were at the 200. We were at the bottom of the megaphone. We had a bull flag, so I had 3 reasons to take that trade. Maybe 4. Let me see where this trend line comes from. No, there's nothing there. Maybe, yeah, double bottom. So there's 4 reasons out of 5 why I should have took that trade. So I should have took it and been confident with it. And then you have a 1, 2, 3 right here for the exit. And again, like I said, I used the bodies, so I extend that out. Yeah, I could have got a little bit more out of that trade. I'd have sold it right there. And that's a megaphone. Kinda. But that is definitely one. I'm going to tell a story, especially to some of you on here that don't know me in the past. I knew a guy that I'd followed, and I always laughed at him. Under my breath, I never laughed at him. But under my breath, I laughed at him because I'd see all these lines going everywhere. I said, what the heck is he doing? And I just kept laughing at him and laughing at him and laughing at him. So I just finally said, what the heck? I'm going to see. So I figured out what he was doing. Or at least I was figuring out what he was doing. And I think he's doing the same thing I'm doing, just drawing trend lines. And then I started learning that megaphone pattern here a couple years ago. And that megaphone pattern is one of my, besides the inverse head and shoulders and the triple and double bottoms, that megaphone pattern, which is called an expansion pattern, and you can Google it. Expansion pattern megaphone. And then I did that one day, and I just started figuring it out. See, there was the bull flag right there. And the more I studied it, then I started counting to 3. I finally said, well, there's something about this 3 and 4. Usually that's the meat of the trade. And sometimes it'll come down here at 3, and if it didn't touch on that bounce up and come back down and hit the 3 down here and then come up and hit that 3, boom. It's like right here. Came up, hit it, came up, didn't break it, but sometimes it fails to hit it, the body. And then it would come back down. And by this time, you've hit it 3 times, and you've hit it 4. So it has a little hesitation, still stay in the trade. But if it come back down here one more time, I'd start to get a little bit antsy. Want to know if I should stay in the trade or not. So that's a bad example right there. And 1, 2, 3, and it didn't break out, and I've already hit so many times down here. So I got a little nervous on this trade. And they go in different directions. Straight down, straight up. See, that's kind of a bear flag. And it comes back down.
traditional semiconductor, and now all of a sudden you're able to transport those qubits without worrying about spending a ton of money to make it really, really cold, and you get the added benefit of a 40-year industry.
FCCN? Is that a quantum stock?
Go to the moon even further once it starts getting deployed.
So when you say transport the qubits, is that a way of saying activate? So they're moving, they're activating, they're contributing to the processing power?
You're actually able to carry them. So think of like, if you think of, the movie Bubble Boy, and, something really it can't be, to mess with the outside world because it's weak. Well, the same thing, you actually put these qubits inside a plasmon and you can still facilitate movement without worrying about damaging the qubits inside for processing the most important part of the data.
Got it. Because the main issue right now with applications of quantum science is that it has to operate in very, very extreme conditions, or else effectively spoiling the goods.
100%. And look, we're here because
FCCN.
I was on the side of Jens Lang over there at NVIDIA, because what he's been saying is, look, it's so far out because we're not engineering this. And so what he's worried about is you build these systems that are standalone. They won't talk to this massive global marketplace called classical computing. And he's saying, you know what? We really need to engineer it. And so I think that's what's really excited, why I'm really, really bullish on the semiconductor industry, is because you can take that 40 years of excellence, you can kind of...
Our focus includes developing a quantum system.
Protect these qubits, move at near speed of light, and it's...
We aim to redefine the future of computing. Our focus is developing a quantum system that operates at room temperature without a need for cryogenic cooling harness to speed the light and data transmission. Ensure our innovations with a robust wall of patents, ensuring a defensible position in decentralized cloud computing. They're in Seattle, Washington. Well, that's something to watch. Let's see if it's on my watch list. I think I have a quantum computer watch list. Q for quantum. NLPQRST. I know I have one. I better have one. Okay, where's it at? I know I have one. Don't tell me I don't have one. What the? What was that again? I gotta make one. FCCN. I don't believe I don't got a quantum. Create a watch list. QU. Quantum, I got QSI. I got RGTI. I got IONQ. I got QUBT. I know I have one. FCCN. I got to put Google on here. There's my watch list. RGTI, IONQ, Google, FCCN, QUBT, and QSI.
What's the nature of the IP? That's the bridge. Do you is that a term? Is that a concept that you guys have protected that you own?
So there's a number of them. We have a plasmonics capability, which is the whole process around the chip. We have a series of quantum algorithms using things like analytic tomography, but really good quantum algorithms. We have a distributed quantum ledger database, which actually is a new era of database that will support quantum computing. And then on top of that, we're going to market with some intellectual property around building decentralized 2.5 megawatt data centers that can operate at the edge, because we're anticipating that you can put, let's say, a data center with about 1,500 servers in it. In the next 3 to 5 years, when you add
news
these
today.
chips into your own cloud mechanism, you've got the compute power of 50,000 servers. So you're really getting into some really interesting sustainable models, putting data closest to the edge, use quantum ledger for more security, use quantum algorithms that kind of redefine what we know as search, and these new chips that are going to go ahead and redefine compute.
As you're building the IP base, have you put any shovels in ground? Have you guys built anything fabrication, property-wise? Any capex outside of the expenses for the intellectual property?
Outside, yes, we just started. I mean, we actually have these technologies working, and now what we're doing is coalescing the staff that we're pulling from the creators. If you look, there's been some acquisitions, so we're in the process of moving that staff in and starting to, put the wheels on put the tires on the truck, and let's get going.
And then to that last point, what is your next step? Because you're a publicly traded stock now. You're up 100%. You went from 2 cents in March to $10 now. If you're early in the going of this and you haven't broke ground on a physical product, are you going to need to tap the stock at all to finance that? Or what's that next step look like?
Yeah, we're in some really great conversations. My past has done a lot on the private equity side, so it's kind of a learning lesson for me. But we're going to really be able to garner some significant players that are supporting us in some really interesting ways. And I think you're going to see that manifested officially pretty soon.
All right, well, keep watching. Thanks a lot. Appreciate the intro, Sean.
Thanks for having me. I appreciate it.
Fun little science chat for us in the afternoon. Sean Bramchen at Spectral Capital. Thanks again, Sean, FCCN. And we're going to go straight into some options, talk about the market, which is trying to firm back up a little bit. Had a few momentary slips, but keeps finding its footing. Kevin Green with the options corner and the flows. Of course, KG, S&Ps look like they're coming for 61 again here.
Are we going back to the 200?
61. If not, maybe we push a little bit higher. If you look
Rundy.
at the traded contracts today, it's the 6100 and the 6110s. They actually
ready?
Over 100,000 contracts traded on the day. So if we do kind of get, let's say, a smaller rally, I mean, we have to.
Ladies and gentlemen, I'm about ready to call out the SPX again. As we approach the landing spot of the 200 SMA. There we go. Now. Jimmy's taking the 6105s. Randy? At 60 cents. Or 65. $0.65. It didn't give me 60. What time is it? Oh, shit. Not doing the smart thing here. I'm up $100. You're magnificent. $0.85. Go ahead and ditch it. Jimmy got out at 80. I'll take it. $200 SMA to the penny. And to the 9. There's 90. Oh, 95. Oh, there's been $300. Again, I leave another 100% on the table. It's just nothing new. I'm used to it. I guess you go eat Mexican food tonight. Although I'm not very hungry. I'll save it for tomorrow night. It's 28 degrees outside. Tonight's Thursday night. I'm just livid. There are 20 more minutes left. Now, you traders, you see, I leave a lot of money on the table. And as you get used to it, I don't want you to say, hey, he's got out early, I'm going to stay in and make more than he can. Because it don't always work out that way. If you know what I'm saying. Especially, you got to look at the time of the day. You know, we got 19 more minutes left. And I don't want to take that big of a risk. I don't want to get stuck in it and then have to go, shit, I've got to take a loss or It still can bounce up. Who knows? But I think they need to digest. The market's probably going to digest what Trump said today, because they don't understand how to do business that well. And I like what Trump does. I do it with my business. When I go into an interview and somebody wants me to go in and clean their joint out, I'll tell them, I'll get it done and I'll get it done right. I go straight forward with them. The last job that I took, I told the girl to look me right straight in the eyes. And I said, "Don't worry, honey." I said, I didn't say honey. I wanted to. I said, you won't have to worry about me doing my job. It'll get done, and if there's any kind of complaints, you just come right to me and I'll get it fixed. And I told her to look in my eyes. To look in my eyes. Because usually when someone calls you in to do a cleaning job, it's usually because they're disappointed with the last person that was in there 9 out of 10 times. They just finally got fed up. And that's true with any job that I've had. And you don't go into a job saying that you know it all and start being in command. You got to say, I'll do it like the way you want it done. I'm here to learn. Although I might have 20 years experience in picture framing, I still know you have a different way of doing it. And I'll do it the way you want it to be done, not the way that I want it. But whatever you ask me to do, I'm going to do it right. You only have to tell me once. And you can get about any kind of job you want if you go in with that kind of attitude. One time I took a job and I signed the application and I accidentally checked off that I was a convicted felon. And I kept calling the guy up. I said, what do you think about my interview last week? He said, well, I got to ask you a question. I said, what? He says, you checked off that you're a convicted felon. What did you do? I said, I did what? No, I'm not a convicted felon. I must have checked the wrong box or something. And, oh, okay, come on in. Because I had like 15 years experience, or 10 years, at the time I had 10 years experience in the job that I did. And he wanted to hire me, but he seen that I was a convicted felon. I got in trouble one time and I stole hubcaps. I got put on 2 years probation and I was the getaway car. And I had one of the meanest probation officers that you could probably get put up with, and I learned a valuable lesson in life after that. Who not to hang around with and who to hang with. So I want to give everybody credit in the room that I wouldn't be hanging out with you guys if I didn't like you. I'm a convincing fella too. Well, we got 14 minutes left. My nose been itching all day. Tomorrow we got the PMI at 10 o'clock, 10 a.m. Thank you there, Parge. After you edit profile, then click your picture. I tried that. Try one more time. There's no picture. And I hit, see, that don't change. I hit status. It comes up there. Left click, right click. I hit edit profile. So I don't know. I'll look it up, I guess, somehow. This is the room, by the way. Right now I got 13 listening in here. And I show my screen live, so there's no delay. So if you want to be in here when there's no delay, there's a link down in the content. Damn, look at that thing go. 190. God. Oh, I left another grand on the table. That'd have been 6,000 today. Holy moly. Randy, I intentionally missed that. You nailed it. Spank. What do you mean you started? Why didn't you? Oh, I was going down memory lane. I was giving you all a lesson. Uh. 250. Oh man. You know how much that hurts? $270. That would have been, oh, that'd have been $2,000. $295. Just keep rubbing it in. I gotta stay in these things. I don't have no more sweet potatoes. Now I'm hungry. Oh boy. $360? You gotta be kidding me. $3,000 I left on the table out of a $650 trade. I was happy to get 150. Mike. Oh my. That's horrible. Damn. Oh my God. $6 and I left 4, 5, 6,000 on the table on just 650 bucks. There's no call for this. 7,000 on the table. Make it 8. What the hell? Just keep going. You got 5 minutes left. Run it up another buck. Make it 9. It's not a good way to end the day. I'll act like I didn't read that, Magnificent. I taught both of them kids how to get to here. I should take all the credit. Rob was just a little baby in diapers when I started teaching him how to trade. Ain't that right, Rob? Oh my gosh. I only had 650 in that. There's no way I'd have held it that long. No way. I would have never done it. If I'd have got 1,000 out of it, I'd have shit my pants. Lucky for me, I wear clean underwear. Oh well. Tonight's videos better be good. Cheer me up. I think Trump's speech cheered me up. Could go to my Mexican joint. I got 2 Mexican joints I eat at. I haven't been into the other one in a long time. I kind of started liking this other one. I think I should do it. But I really don't want to get fat. $11.50? You gotta be kidding me. That was a $10,000 trade. And Mike had it at 50. I don't know if he had the same calls. What'd you have, Mike? $61.05s. You got him at 60? Oh. Good job. You had a lot more contracts than I did. I hate that. 10,000 bucks in what, 11 minutes? 3, 6, 9, 12, 15. Oh, the bell rung. Ding, ding, ding. Well, I don't know what to say about that. I just got to talking. I gave up. I was happy with 150 and it runs up 1,500 bucks. 1370 is what they went to. So that would have been a $12,000 trade, $13,000 trade in 15 minutes for only 650 bucks. Sorry to embarrass myself, livid goose. Okay, well, I'm going to get out of here. See what I can. I'm kind of hungry, but then I'm not. I really don't have much in the fridge. Could make me a little cheese thingamajigger. I really don't want to get out. Tonight's a long night, so I'm going to probably go to bed early. I hope I was educational today and helped some of you out. I know some of you guys helped me out. Thank you, Mike, for keeping me in that one trade that I was down on. Turned out to be a good trade. Sometimes I can be a storyteller and it takes me away from what I'm doing because I sit here all day long. Got to kind of occupy my mind in other ways, or but I don't know, at that end of the day trade, that was what I've been waiting for. I could have had me a good $15,000 day. But I'm okay with what I did. I mean, 2,000 at 2,100, not bad. Just got to keep at it. I love this SPX. I mean, I sit here and I trade it every day. I hope I haven't addicted you all into it. At first, I didn't trade it that much. I didn't trade it hardly at all, but it's one of the most prosperous trades I've ever took besides Tesla and Nvidia. But I think I could sit here and just trade the SPX all day long and have fun. And 19 out of 20 times, if I'm down on it and I hold it, I end up green in a way. Just got to hold it. You know, if you're down, I mean, I was down today almost $1,000 on it, and I held it, and it bounced up, and I was able to get out of it with $400. So I'm going to say goodbye to everybody. Have a great, I'll see you tomorrow morning. I've been doing this every day for 20 years, every day, 5 days a week. And I learned something new today, every day. I learned intensive today. I had to question that grade I got. Then I read it and I said, what the heck? How dare you? I'm not the sharpest tool in the shed, I admit. I've had probably 10,000 blows to my face. Nose broke 3 times. Probably more than that. So I'll catch y'all later.